some other, news, agency. So you're not just having one. So let me open up the day chart down here. So this has this is a custom scripted one to help you find the right stocks for scalping. This is pretty important. You can actually get this for free over at the $1 Million Margin Club. So you should go over there and get it for free while it's still for free. But it's basically you're looking for a stock when we trade the scalp and recoil, the strike and recoil strategy, which I am trading for live for everybody. We really want in 1 minute the volume to move over 100,000. And that's a 10-day average of it. And that's 1 day, the day that it moved. Now, right now, the market's closed, but I'm just showing you. Then you want to have the ATR in here. This is not a custom indicator. And then, of course, this is your previous day ATR. This is the half ATR, and then that's the whole ATR. Now, this is why would a half be there? This is for the RV strategy, that Day Trading Volume 1 strategy book that everybody trades large and mega caps with that makes so much money. This is no joke. The half level, you're going to want to mark that, because why would you have these levels? Well, you want to see your range, but you also, and it's, if you zoom in right here, you can just see here, it's showing you them right here. Okay, the red's kind of blocked there, but on the RV, this is the RV strategy, which is the half from Day Trading Volume 1. And that's the actual true, the entire ATR. So a lot of people only go by that. And that's the entire amount from the close. Okay, so it might be a reason why the RV strategy is based on it only moving half in one direction to traverse the entire thing, not all in one direction. So really they're both on here, and they're on the 1 minute chart as well. So if you go down here, you can see them down here. And then there should be so that's the full ATR. That's the half ATR low, or the RV strategy low. I recommend getting Day Trading Volume 1 if you don't have any idea what I'm talking about. I'll have a link to that book. I have a link to a whole bunch of books and that I believe in from Mark Douglas and Tom Hogarth and the $1 Million Margin Club. You might want to check them out. We're not going to go. This isn't a book video, though. So, so that's basically, that's the day chart. I was making sure you saw what was on the day chart. And then over here is your active trader. Now, often when I'm doing like the RV strategy, I'm just doing market and then reverse. But for the strike and recoil, I mostly do buy the bid, sell the ask when I'm going long, and then the opposite when I'm going short. I have added the reverse button into this still. Because I found that we were trading it, that I was doing that sometime, even with ask and bid, so even trading this way. So you won't see me trade market too much on the strike and recoil strategy. All right, you will see me look at the level 2 a lot on the mega mega cap and large cap, mostly to check how much this price moves. Is it moving? I'll count 15 in my head. As it moved 10 to 15 cents in 15 seconds? Because if it isn't, it's really going too slow for that scalp and recoil. This is a really good, obviously people use it to see the amount of orders coming up the pike, but the problem is that we're only seeing about 40% of the actual orders. And to move a large cap or a mega cap stock, this would have to be like, 5 digits here, to make it really spoof it or try to control it. So unfortunately, you don't see the mega drops, the big algorithm drops. They're all hidden, and then all of a sudden the price action will boom, but you won't see it. And they don't. I'm not even going to go into the whole thing about how they're supposed to report and all that stuff, because it's just not really true. Supposed to and doing are two different things. Down here is a 15-minute chart. Now this has the market pulse on it. What is that? This basically tells you what direction on a 15-minute chart the QQQ, the SPY, the TLT, the UVXY are going, which kind of gives you the breadth of the market all in one. So I have that on a 15-minute chart, and I also have it on a 5-minute chart so you can see it faster range. This is just darked out because the market's closed, but normally all 4 would be there. And then over here, I didn't go into, this is the multi-chart alignment, all these, you see 5-minute, the M stands for minute, 15-minute, 30-minute, and then somewhere on here you'll see like an hour, or there's 15-minute again. Did I pass the hour? Yeah, there's the 1 hour. and then there's a 4 hour somewhere, but it'll be hard to find it because this is a 1 minute chart. But anyway, why would these be up here? I'm sorry, I'm a math teacher, so I always talk like there's a classroom in front of me. Hey, why would these be up here? Can you please answer? It's very quiet in the audience today. Basically, you want to know when this price action is getting to that 1 hour candle, right? You want to know how many people are deciding on the 1 hour candle, 4 hour, 30 minute, 15 minute, and 5 minute. More people take their trades on the larger time increments. So you're going to want to know when that is. So you can sit here when you can lose perspective on a 1 minute chart. You can get really caught up in the micro. And this kind of makes you step back and look like, particularly on a 5 minute, like what's happening on a 5 minute chart, because that's all they're seeing. They're not seeing this little action in between. They're just seeing what's happening on their 5 minute chart over here. So, that's why it's so important to really know when it's about to come, because you want to trade with the crowd. You want to trade when the multi-chart alignment, as the candlesticks are coming over, you want to know when they're all about to see something, because a lot of trades might happen right at that moment and more happen at the larger time increments. So again, this is why this information is what a lot of traders don't know anything about, and why they're just really rolling the dice. The more information you have like this, the more you can absolutely predict future price action, because that's all you don't get anything that shows you what's going to happen in the future. You have to predict it. So you need the tools to predict it, right? Like this risk range oscillator up here. It's taking the last 9 candles. It's showing you how much they moved in that direction, smoothed out, whether they close green or red, and then it gives you an average target to go for. So in this case, in 1 minute, you don't have a very big. Well, right now we're on closed market. That's why it's so low like that. But normally Tesla would be way higher. But yeah, it'll show you the range to go for, so that once you get into it, you're just get out, hop out when you get near that range. Just don't get greedy, and then go for the next trade. That's scalping. That's not day trading. Day trading, you stick in for a bigger move. Scalping, you're in for like in 1 minute, 2 minute, 30 seconds, 15 seconds. So this is really helpful for scalpers, and that's what the prop firm people are. So that's what this is designed for. Then down here is the Scalp Pro meter. This is giving you overall volume for the day. This is the last candle. This is the current. If the current candle, again, we're in a closed market. That's why it's so low for Tesla. If the current candle turns blue, you hear a little ding. That means it's gone past the last candle, which means there is a move in that direction, whatever direction the candle's moving. If it was like, if you saw that thing ding and it was going up, then you'd know, like, hey, a lot of people are starting to go long. So you jump on. I antiquate it to like you're on a swell waiting for the wave to crest on your surfboard. And then you see that, you hear that ding, you see that more people are there, you see the wave coming, and then you jump on it and you ride it for a short period of time, perhaps the length of the risk oscillator, or you look at other indicators. You get better and better at seeing what's about to happen, and then you get off and you take your trade. And then this is telling you inside, like, what is the percentage? Like right now at the pre-market, everything was 100% selling, and this is a little meter showing you the strength of that selling. And that weren't enough, inside the candlestick, the red represents the sellers, the green represents the buyers. You see this moving in real time on the 1 minute when it's an open market. So watch some of the other videos, you can see. And you can literally predict. And you see when, like, the buyers are losing strength over here. And it's like, hey, sellers are going to win. And that means that stock's going straight down at this, well, like right in this area here. These are aligning up with it, So this is giving you a direction, showing you a direction to go. This is showing you the strength of that direction with this meter. This is showing you if it's stronger or weaker than the candle before. All this stuff is designed to help traders not just roll the dice, but literally know what direction the price is going to go. After you get used to reading it, it gets easier and easier to say, I know I can go this way 10 cents. I know I can go that way 20 cents. Drop in 100 shares, drop in 1,000 shares, whatever it might be. And you make that quick money and you get out, and then you do 30, 40, 100 trades, and you're making, a lot of money, small amounts from $50 to $100 to $500 to $5,000 a day or in a half hour. You'll see me do it in a half hour, but not with the strike and recoil strategy. You're usually going to see me trade 50 to 100 shares and try to get $100, $200, $300 a day, make a living day trading simply and easily, and get in and out and be done in a half hour to 45 minutes, and then go on about your life or your job or whatever else you might have. Get your car payment paid for, your mortgage payment paid for, and quit that second job or whatever you need to do until you get confident enough to trade in a larger share size anyway. So then down here you have the trend, which is really an important indicator as well, ADX trend. So that one would be one that you'd want to see if you're actually in a trend. Now, if you want to know all about these, we'll talk about this too. If you want to know all about these indicators more, there's a series about these that's put out by the $1 Million Margin Club called the Toolbox series. God, I couldn't remember it for a minute. So over there, the $1 Million Margin Club YouTube channel, there's a Toolbox series that gives you details. It gives you even the mathematical formula about how they're all designed in codes and everything. So it's worth watching those if you want to get better at trading and get these indicators on your in your trading toolbox yourself. So this is interesting because this is a level 2, really the only level 2 indicator I've ever seen. And it's important to note when you start to use this that you're not actually seeing anything but level 1 up here. But because it can't Thinkorswim, there's not a way for it to transfer this to a chart to give you the readings. So the best way is to read what's coming up. But what it does do is, when the shares get large here and they're trying to sell off real quick, because it's not just one trade, then they adequate it to it's winding up. It's like, say there's 5,000 shares, then there's 4,000, then there's 3,000, then there's 2,000, and you see the volume going up, and then suddenly you know that they're about to all sell or buy, be bought up, and then suddenly the stock's price is going to pop, right? And that's really the secret of reading level 2. Usually you do it just by watching them, what's about to happen, making note of price, where you might slow down a little bit. 483.31. This is a little small for a large cap. It'll still just flip instantly, right? But I mean, you'll see many that are much larger than that. So this will tell you when that 5,000, 4,000, 3,000, this little light will light up and say it's absorbing, because your price action isn't moving. You're seeing all this volume, but this price isn't moving. When you're looking at the price on the chart or anywhere else, on your market maker, it's just not moving. It's just stalling, but volume's way up. Why is that? Because they're all being bought up or sold off, so you're waiting for it to pop. So this is going to signal you something big's about to happen, because volume's high, but the price isn't moving. And it's going to actually show you which way it's likely to go by coloring it green or red. So again, when you get used to, particularly for new traders, this can be really, really handy, knowing that. Now with large cap and mega cap, it's not as useful as, say, a small cap, a mid cap, small cap. That's going to come into play more often, because those are really thickly traded, and this will happen a lot. On a large cap, it'll help you from time to time, but you're not going to see me have this up. I just wanted to show it to you on the Strike and Recoil. You're not going to have me. You won't see this up. You'll see me do this when I do more momentum trading on Thinkorswim. Sort of an oxymoron, because if I were to do momentum trading, it probably wouldn't be on this platform, meaning buy high, sell higher, keep buying high, buy when you have a catalyst and a stock's taken off. A lot of platforms aren't as fast as others for that type of price action. I mean, you can do it. A lot of people will use the ladder here to do it, real quick, and they get really good at it, and they keep it up on their whole screen. I don't trade that way, but I will show you this when I build it, how you can do this in a few minutes. If you want to stick around for the next clip here, I'll build a whole layout for you. And then down here, what you can expect to get on what I built. You've got a 5-minute, this is a 5-minute 2-day right here, okay? And that's to help set my Fibonacci levels. Now I have the levels locked up here on every chart. You can see when I opened this, it wasn't locked. Yeah, so these aren't locked, but you can see that there's our Fibonacci retracement. So if you wanted to, market Fibonacci level, it's always left to right. You left click and then drag, and you're usually looking for the high to low, then you left click again. And then these are creating channels or support and resistance levels. Why is it giving me that weird message? Hang on a second. Clear drawing set. Okay, yeah, I guess that's what I want to do. I didn't think I had any other drawings on there, so it was scaring me. And then this is that was a 30-minute. That's a 5-minute 2-day. Was that the 30-minute? Sorry, guys. That was a 30-minute. And I do a lot of the pre-market layout. I have that chart there because on the Day Trading Volume 4, which is a book that shows beginners how to trade the open, it lists the 4 breakouts that are most commonly used. And one of them is a 30-minute breakout on the pre-market. And I find that to be my favorite, most respected level. So if I'm going to trade the open, often I will mark that level. And if you go on and get the companion book to that, it has the Holy Grail where it takes all of the open strategies, and then throughout the day it creates the channels or the levels to really trade those breakout levels throughout the day. A lot of thought went in these. I mean, the writers of these books and all the different traders and everything over many, many, many years of trading, decades of trading. What is most commonly respected? What is most commonly used? So it's a good idea to speed up your education and get a few books that might bring you right up there. I mean, they're not always going to work, guys, the levels, but it's just knowing them. Once somebody tells you this is what you need to do, this will always work. This is how I make all my money. I always look for just this one thing and it always works. You need to run away from that person because there is no always. There is no always works. It's just bull, but if you can, the good news is that it will work a lot of the time if you see a pattern. So just remember, hey, it may work, not always work. It may work. And I don't know. I'm not talking about a specific person. I just worry about when somebody says, buy this course, because this will always work. Sorry, I had to get that out there. Here's where you would mark a fib too. This is the hour. This is really good for historical data. You mark where the stock abruptly stopped and turned around. You would do that with, God, none of these are locked because I built this thing. Just built this thing. But you would take a level like that, you might look across and smooth and see how many other places it can tap. So I might raise that up closer to that high right there so that I caught that too. And then I would look, so that's 496. And then what I would do is I would smooth that out to exactly the even dollar. And that would be the level that I would watch closely if the price action were to come back up there. So that's historical data. It can be, on a 5-minute chart, 1 hour chart. It can be on a 5-year daily chart. It depends on how you trade. But if you're scalping, you need pretty recent historical data. Here's another one. You see, it stopped here a bunch of times. It stopped right here. Then I looked across and I see, hey, it's already respecting it right there. Excuse me. So probably, yeah. See, there it is. It's 181. What it is that it came back down to the even dollar. Whenever I can get close to a whole dollar, not an even dollar, a whole dollar like that, where these levels were close enough to it that it respected it a bunch of times. You see that? I'll smooth it to the whole dollar because people naturally, the human species naturally takes trades at whole dollars and half dollars, and they put them on their market order, whatever. They put alerts on it, and it's easier for them to remember. So again, this is just basic, simple stuff. Most people don't tell you how you can become a profitable trader just with simple information like this. Okay, here's another one, another good level I would mark here. And I don't know if it is. It's close right to the 90. If I smooth that out to the even dollar, It is. It's on the even dollar. Look how many look how many times it tapped. Tapped in here, tapped again here, almost tapped there, just tapped and kind of broke through. So, I mean, not everyone's respected, but boy, is that a good level to watch? Absolutely. And the fact that it's a whole dollar as well. So there is an indicator that these little white lines, that's the whole and half dollar indicator, which is usually at the bottom. That's it right there. And that's going to mark every whole and half dollar so you don't have to draw them. And it's a good idea, and they're supposed to be made so they're not in your way as much. They're kind of light. What you see right here, you won't normally see because the market's closed. This is the market magnet. Again, watch the Toolbox series, but I have a lot about that. I have them on here because I'm going to be using them. I believe them, and this is what the 2026 Thinkorswim prop firms called for, is what you want to have, other than this, unless you're doing momentum trading, which I'm not going to be doing. So I'll literally take that off right now so you guys don't get confused by that. So that's the level 2 breakout. And then that'll happen because I messed up the chart. So you just spread that out again and we're right back to where we were. Now it's easier to read. And of course, when I'm in the middle of action, you won't have all this stuff at once. This is showing you past history. So there's the MACD literally telling you which way to go based on EMA crossover. See that arrow? That's another indicator that's on here that's amazingly, it helps you. It's right almost all the time. So you'd want to get that one. And again, not to overstate it, the reason these are here, the reason people want them, the reason they're commissioned to be built and paid for by coders is because they work and they help traders get better fast and make lots of money. So I'll have a link on how you can get those. You can get them in a lot of places. If you get them on my channel, obviously it helps me if you use my link. So I'd appreciate that. I appreciate subscribing. And because I don't sell courses, basically everything I'm giving away for free. Trading live is for free. I'm not having you join a group or anything. It's just all free. And then the last chart I have down here is the 4-hour. Again, a lot of people will do their historical data based on that. You can see there's another good level right around right there, right here. And you can see day after day it comes back and taps those. So if you mark it for, like, say we mark that, okay? Say we had marked this level. Oh, none of these are locked. We had marked this level right here, right? Absolutely respected it right here. Kind of respected there, turned around, you know. So here it stopped. Okay, then went around. So stopped right here, then continued to go down. So this level, the same thing here. This level got respected time and time again. Time and time again. I probably would have made it the 50-cent level, you know, 477.50. Again, guys, I'm just trying to point out simple stuff that it just happens day after day, time after time. Like if at the 50-cent level right around there, you have it hitting, you know, to like take a scalp in there, go the opposite direction, ride it back the other way, go the opposite direction. It's flat topping here on a this is pre-market, but this is what they call a tweezer move. Remember learning the patterns within the patterns, right? So you have here, you made a bull flag here and it took off. That's when you would go in that trade on that candle, and you would have wrote it up. If you took that off the bull flag, which is right here, there's the pull, here's the flag, the second candle going up right here, say 485, you got it. You got off the trade all the way up at $4 higher. This is just an example of knowing a pattern and how to trade it. Okay, here's another one. This is another bull flag right here. Here's a pull. These, if you get the candlestick pattern playbook, it tells you there's an 82% probability that this pull slash flag, if it doesn't go halfway down the pole, that this will work. So there's a little bit of a hiccup there, and then it took off. And then you look at the pole from the bottom of the flag. So that was 467.50, right? And when did the pole start? Let's just say it started here and not down there because there was a break there. So $10. So theoretically, according to the strategy of the bull flag pattern, when you go in, which would have probably been here, and you would have got scared at once on the second because that got green for a second, right? This should be going $10 from this price before the move's over. 469. Yeah, I went 20. So anywhere in here you could have got out, or just ride it till it starts to reverse and get out. That went over $20 up. That's an amazing bull flag over a period of the next day. You held it into the next week, took it pre-market. You could have taken it open market right here on a bull flag move, and then boom, you know. There's a lot of other things that would have probably backed up that move that I'm not going to get into, but that's just a simple way to look at it. That's the candlestick pattern playbook. I have a link to that too. That's the only book that rates them. So I'm giving you gold here, guys. You know, you can take it or leave it, but this is very, very helpful stuff. So that's the entire layout. You can see how I have the market and the bid and the ask and the flat and the, you know, and if you go into here, you're going to see it's auto send, you know. Now you can trade all kinds of different ways with brackets and things. When I'm scalping, I'm not going to do that. So I'm going to go ahead and show you guys how to build this next. So stick around and we'll be doing that next. Hey everybody, this is the professor. What we're going to do today on Day Trading for Success is we're going to build the new 2026 layout that's being used by all the professional traders here in the studio, as well as the prop firms. Now, there's a lot of custom indicators used in this. What I'm going to do here is just build you basically the grid and the layout. It's up to you what kind of indicators you want to bring into it. You don't need to have any of them. I think they're helpful, but that's up to you. So it's on the default right now. This is what it looks like. And then the first thing you're going to want to do here is you're going to want to go to the setup wheel. And let's just pretend I already clicked that. I'm going to drag this over because it would show my account. So you go down to look and feel, okay? And now you're going to want to change, it depends on what you like, but everybody here does dark, a darker thing. And we go to old school layouts, particularly specifically because of level 2 is easier to read right there. Okay, so I'm just going to apply that. And now that's in. Now I've opened up this little side window here. And this is how it would come on your default, but let's get rid of these. And we're going to build this back with scanners in a minute. So we'll probably just start with that actually. So if I wanted to do watch lists here, I'd open it up and I have pre-saved watch lists, and really we're going to want to get the ones that I would use for trading the strike and recoil, the live trading. But these are used by many professional traders right here. Like this is the one that they sell you over on Warrior Trading for a fortune. This is another one like that. So these, if they're not exactly the same, they're very, very close. So you can get those for far cheaper or free in most cases. So let's load the first one. Okay, and we're going to go ahead and make it, I'm going to make everything green so that they all link together. So then I'm going to open a couple of others that I'm going to be specifically using for trading the strike and recoil strategy. Okay, so there's the next one, and let's do, actually I think I only need those two, but let me just take another look here. No, I'll use that one too, the 50K. So those three will go in. You can see the market's closed right now. Now this is what I'm going to be using when I live stream. So if you want to, you can trade with me live stream for free. Make sure you subscribe, which helps me anyway. Please subscribe if you think you're getting useful information, and then set your alert, and then you'll be alerted when I'm trading, streaming live for you, and it's free to come in. And obviously I recommend you seek the advice of a licensed financial advisor. I am not licensed, so that's my disclaimer. You need to take responsibility for your own trades and do your own due diligence. I am not licensed to give you any advice, okay? So, and really, unless they're a licensed financial advisor, you should not trust anybody. That's just the way it goes. Probably not some of them too. We won't go down that road. So anyway, this is all I pretty much do. I might open the message center in here too, basically so any of the trade messages won't come on the screen. So that's the first thing we do before we're going to flip into charts. Okay, guys? So the next thing is charts. So mine's going to open up on the flexible grid. This is how yours might open up, but we're going to go right over to flexible grid, and I have a 6 screens around me, and I have the layout set up right above me so I can refer to it, the prop firm layout, and the one I'll be using to trade stream live in 2026. So I'm going to just look at that real quick, and what I know I need to do is I need 3 basic grids across here, and then I'm going to build everything down from that. So on my first one, I know I need to make 3 spaces here. So I'm just going to kind of get the grid open here for a minute. And then over here, I also need 3. And you make sure you click the last one down. And then this one, I need 1, 2, 3, 4, 5. So 1, 2, 3. So I just need one more 4. So that gives me 5. Make sure I've got that right. Yeah. Okay, so now I'm going to build this. That was the quick way to get the grid to build everything I want. Now, obviously, guys, you can do this in a different way by having more screens around you. I'm going to try to make it for all those people that only have one screen, and there's a lot of us. You can put the general information you need on one screen, but if you want it really, really big, then maybe you want to slide charts over, and move things around. And if you're slowing down your computer too much, remember, every chart you open is going to slow things down. Okay, so the more and more data that you put on it. Okay, so let's go ahead and link all these green. It's going to automatically do the default, which is a chart. Give me a second, we'll get this all switched. You have to sit through. I'm not going to stop recording and recording again. Sorry, guys. You'll have to sit through some of this. You should think and reflect. All right, so this is going to be my primary chart over here, and it's going to be a 1 minute, so I don't need the sidebar. This is going to be news, so I do need the sidebar here, so let me mark news. Sometimes you have to kind of spread these out so that this fills in, so I'm just going to mark that news right now, and then get rid of chart. Remember, get rid of chart. Now I can get rid of the sidebar. And then this one is going to stay a chart, so I can get rid of the sidebar. So that's the beginning. Before I start building the charts the way I want them, I'm just kind of getting the grid in order. Now over here, I'm starting with the active trader at the top. So that's AT, active trader, this, and then get rid of the chart. So that's the sidebar has. Once you've done that, unless you're planning on really changing your layout on a regular basis, you can just get rid of the sidebar. It just takes up space from left to right, and you'll find that if you're doing this, you need as much left to right space as you can get, right? And then down here, we're going to do level 2. So we'll mark that level 2. Get rid of the chart. Let's just make sure we don't lose track of what's what here. All right, then at the bottom, this is going to stay a chart. And I'm going to make this, I'll just change it right now. I'm going to make this a 15-minute chart. Actually, time frame. No, that's not how I do this. I'm sorry, guys. I am now confused. I'm not going to change the chart yet because I'm going out of order. Okay, so these are all going to be charts. So the first thing I'm going to do is get rid of all these sidebars. Okay? So now that I've done that, I can literally take off these little square. Oops. Take off that sidebar. All the sidebars are gone, right? So I'm going to take off the grid, which is right over here, and unclick it. And now it's nice and clean. Now let's start building these charts. Okay, so let's start with this one. I'm going to expand this, and I'm going to get into this gear wheel right here and take off things like I'm reading all these things to make sure, which is what you're going to want to do, to make sure that you we can start with the appearance of, let's start with the appearance. So I like to fill in my candles. So let's make it, yeah, that's fine. We'll make it the bright green. So is that right there? No. Why is that not? Look how bright that is. And then the red, we can, if you want, you can make it a brighter red or darker red, something like that. Okay, And then you can, you want to show the wicks, but you want to make sure that the everything's filled up like that. So doji can be white, yes, and then that'll change automatically. Then down here, the cursor's fine at that color. We want to make sure that these are going to be the colors down here, the ticks of the chart. And then you want the background, this is me, I'm saying you want this to be like midnight black, see how good that looks, and you want to get rid of the grid. Now that's going to make every chart look nice and clean, so let's get a look at that, see how clean that chart got. Now we want to change this to a 1 minute. I'm going to do it here first, but so since we're intraday, that's how you do it. So 1 day, 1 minute, say okay. Now I'm 1 day, 1 minute, okay? Now some of the other things you're going to want to do on this, especially if you're using, I'm using custom indicators, is I get rid of the volume subgraph, so that's gone. Now there's no volume down here. There will be no volume. Now since we don't have custom indicators here, I'm going to put that right back on for you. I changed my mind. All right, so it's down here. These you can just click and slide these, okay? And now I'm not going to be showing you how to use a chart. I mean, you might get some of it out here, but I have a lot of videos on how to do that. Now I need to get the tools, and these tools will be on every chart. So let's open this. See my tools down here. It says off. I want them on each chart. Apply. Now they're going to come up with a default tools. Let's click that, and we can change these by putting what we want. So I want to change the first one to a panning tool. The reason I do that sometimes is the charts get so small. I want to make sure that's always up there to pan. And then the next one I'm going to change to the price drawing tool, which is right here. Okay, and then the next one, which I most commonly use, is a Fibonacci retracement. Oops, sorry, drawing tool, right? Stop doing that. Drawing tool. There we go. Fibonacci retracements. And now I have to add a button, and I'm going to do a trend line, and that should be down here. And then I'm going to add a button, and I'm going to do a rectangle. Now these aren't probably used. You know, it depends on how you trade. But a lot of times I will mark an area like that. Now I've saved these across. Now I lock them with that right there. Now these will end up on every chart. They won't be locked until I lock it, but now they'll be on every chart. Why that's so important is right off the bat, if I want to show you stuff, I click the pan and I do that, right? So now the other thing we're going to do here is we're going to put in some moving averages. Now, when I opened up that, right, which is the chart studies, because I am a coder, you are going to see things that you do not have on your normal Thinkorswim. So don't start calling them and going, hey, how come he has? It's because I code for Charles Schwab Thinkorswim. So I have stuff that's not even out yet, and then I have other stuff that's been approved and it's out. So yeah, so that's why you won't see it. A lot of stuff that never makes it out, and so on and so forth. But it's one of the reasons why you know, learning how to use a prop firm layout might really help you. But when you're brand new, it's probably not the best way to start. Thinkorswim has a lot of really good tools. Get used to it. See which ones you might want to use by watching other videos of people trading, or just slowly but surely work your way into them, because most of them, it's hard to get for free. If you type in free indicator on this channel, there's a whole bunch that are free. Most of the real good ones have kind of moved on since the free. But if you follow along with me, when I design one, before I sell it or release it to Thinkorswim, if I've been contracted to, I usually give it away free for 48 hours or so. So if you keep track of stuff, keep track of this channel. But if you go over to the $1 Million Margin Club right now, I know that they have one totally free indicator, so you might want to look for that. But anyway, let's go into the let's start off right off the bat with moving averages. EMA. Give me a second here, guys. Okay, stop recording. I haven't done this so long because what I do is I save them and I never have to go back and click this. So we're looking for this moving average right here, right? So I'm going to click on that and I'm going to add in 2 of those. Okay, we're going to change those. That's a default on there. And then the other thing we're going to put in is in the VWAP. Some people call it the VWAP. And those people are wrong. No, I don't know. I'm kidding. So VWAP right down here. Okay, so we'll add that. Now those are really the main 3 that I use here. Okay, and they're right here on here now. So now let's change these around a bit. So I'm going to show you some stuff that's going to take a little while, but it's important to do this. So let's start with the VWAP. So the upper band and lower band I do not need. There's all kinds of ways to get rid of them. There's how I just got rid of them. Okay, so we're just going to do the VWAP and we're going to make it a bright red and then we're going to make it triple thick. It's really one of the most important free indicators right there. Boom. And I'm going to apply just so you can see there's our VWAP, which is at any time is considered to be the value of the stock. Okay. Scalpers don't really think about that stuff, but if you're doing a long-term swing, it's probably something to think about if you're doing your really studying your stock for fundamental analysis rather than just patterns and going in and out, right? Oops, I shouldn't have closed the whole thing. And then in here, let's go back. So this default is the 9, which is easy. There's a reason that's a default, guys. That is one of the most common levels used. I see other videos where people do weird stuff, 22s, 19s, 17s. It's like, I don't know where they're getting this from. Are they trying to jump the gun on the levels? I don't know. But you know, we have a friendly friend now, and you can ask ChatGPT, what is the most common? I would ask it like 3 times just to make sure. Let's do a gray for the, it shows you the color right down here. So my 9 moving average is going to be a gray, okay? And I'm going to make it double thick, okay? So that one's done. Now this is already saying 9, but we're going to make this the 20, okay? I'm just joking around with the levels, guys. Don't, you know. He doesn't know what he's talking about. This is the, you know, whatever. Whatever works for you guys. We have a constant good time here in the studio joking about it. If it works, man, then do it, you know. I'm just messing with you. Okay, so these are the 3 things that, you know, we most commonly use right here. I'll throw that out there again to be on the chart. Now, really, unless you start to get into custom indicators, you don't really need anything else on this chart. Now, if you want to zoom in, you can left click that and just kind of left click down and drag, and now I have a way zoomed in. I'll just show you a few things. If you want to go back, you can just auto zoom and it starts the chart back as far as you want. If you want to pan left and right, you know, like that, it won't go any further right now, but if you want to make this so time exit. This is at 820 because I messed around with it. So you put that at like 10, say, is pretty much the average people use, 5 or 10. Now it gives me a little bit of room to drag this way or that way. But again, we're on a 1 minute, 1 day, so this isn't going to drag over here much. But anyway, that's what you can use that for. Fibonacci levels, you click on it there, you left click, drag down, left click, and then there's your levels. Usually you go always left to right. Low to high or high to low, it doesn't matter, but always left to right. I'm just showing you some quick stuff. Clear drawing set, okay, that's gone. Trend lines, you can left click, okay, and then you drag up. Now normally when you set a trend line, you're looking for multiple touches. You know, in this case, that's just screaming to be, you know, where you would mark. So that would probably be it. On a 1 minute chart, you're not setting trend lines. I mean, obviously, it's just not a good call, you know. People do it. I've done it, but it's just very, very short term. Anyway, that's how you would do a trend line as far as how the mechanics of it, you know. And then a rectangle box, you left click and drag over and then release. And then now you've shaded an area. Keep in mind, if you do that, you can't move inside this box. See, I had the pan. You have to be outside that box to move, but you can clear the drawing set there again, and that's gone. So those are the tools that I would use and that I need, and that's your 1 minute chart for now, guys. Okay, so we'll close that up, and then we're going to show you how to save it. So here's how you're saving a chart. You left click that little burger there, you open this up and you go down to style, and then you go down to save style, and then you can mark it in, and you could say, like, I would say something like clean 1 minute. And then it's clean because it has the minimum amount of indicators. And then I make sure that you click that, and now you've saved it. Okay. And then if you want to go back in to find it and put it on another chart, you'd go down to load style, and you can see I have a whole bunch of styles in here for different things. So, but then you don't have to keep redoing it. So with that in mind, we're going to go speed this up a bit when I load up the other ones. Okay, so down here is a day chart, so I'm going to click that, and I'm going to go ahead and open that up, and then we're going to go into, now I don't have to build this, so we're going to go into load style, then we'll go over what is on it, right? So the day chart is hang on, now I have to find each one of these, and you guys are going to see it and you're going, it's right there. There it is, a day. Okay, day. All right, so now the day came with an ATR. Now you'd want to load that in. So that's what I loaded in, just a regular ATR. And that is just an absolute must to have on your day chart, in my opinion. Okay, and that, if you go over any candlestick, right, and then you look down at the ATR right down here, that's going to show you the price that range moved in that day, $10.50. So having that range and marking that range before you start to trade, there's all kinds of ways to do it with custom indicators and things. Yeah, I don't know if they really have it on Thinkorswim. I'm trying to remember. I know I designed a bunch for Thinkorswim. I would get one of those because they have the RV range as well as the full range. RV range is the half range based on that Day Trading Volume 1 book that everybody buys to trade large caps. So, but that's how I would, just the bare minimum of setting up the 1 day before you start to get into getting cooler custom indicators. That is very useful. Now I drag that down real tight because you can just open up a chart to use it like that whenever you want to, and then reduce it by, I don't know if you saw what I did there. I left clicked here, double clicked. You don't have to go in here and say minimize cell, so maximize. So the other way would be to go in here and then you would say restore cell. But if you just double click up there, it works. And I'm going to drag the news down because I only really need to read the most current few lines right there when I'm trading. And now I have the basic 1 minute chart. Now that's your volume is down here. So if we were to zoom in, I'm left clicking and drag, oh, it didn't. What did I do? Now is it like messed up? Every once in a while mine just stops working, which is very annoying. So let's get that problem solved. Okay, so I had to restart and we are back. So what I was trying to show you was if you clicked on the price, whatever, you get it. You can do it with the pan, but not the pan, but the arrow too, but I don't use the arrow. You just left click drag and you can, I think I was showing you that before, and you can make that zoom up. But I wanted to show you down here the volume. It was the main reason I was doing that, and that's why I realized I couldn't do it. So yeah, so this is the regular volume you will have, and obviously you're watching spikes as these are happening live. They align with the candlesticks up here. These candlesticks align with how the price is changing, if you didn't know that stuff. And that's basically the price moving up and down makes these patterns. And this is on a 1 minute, so it'll open and close within 1 minute. A green candle opens at the bottom, closes at the top, and then the red candle closes down here at the top, opens at the top and closes at the bottom. And so that means it's going down, and these means it's going up when you had price action. And these colors will coincide with that. So that's basically, and you can move your chart by left clicking down on your mouse and moving that up and down like that too, if you wanted to do that. Okay, so that 1 minute is done. We finished the day because I went ahead and basically just, now probably you would want this much smaller, so you just left click and drag that down. Okay, and then you can set your different, let me lock that. You can set your different time frames here, you can do more than a year. You could go back like 20 years here. So you could do just, wouldn't it have been great to buy that stock back here? Look at that, huh? It's for $25 and now it's $400. Yeah. That was back in 2020. Of course, if you bought anything in 2020, since the SPY seems to almost always go up, then you'd be doing much better. That's the Warren Buffett style of trading, right? All right, so let's go into this area right here. This is your active trader. Now, if you go into this, you can see this is what basically the default is. I'm going to show you how I would set it up. Now, you can click these and then remove them, right? Or you can just left click and drag those out of the way and they'll disappear like that. So I'm actually going to use all these here. I'm going to drag the buttons up on this level. There are 2 levels, which I'll show you in a minute. And then I want to have buy bid. I'm going to kind of drag it over there and kind of move it around. And then sell ask. We'll put that below the bid. Okay, and then we're going to want to have, so we did flatten above, flatten should be here. And then we want to have buy bid, so we're going to move this up here. And then we want cancel all. Not that cancel, cancel all. So I do cancel all right below the sell the ask. And I'm looking at the one I've already built up here. And now I have buy the ask. Right below cancel all and sell the bid. So just the opposite of the other 2. In case I have to get out of a position, then I ended up with the reverse. Okay, so on the second line, we don't need that. So we want those 2, but we want to have, this is the time of day in force down here, so we want to have that there. Something like that. Okay, so I did that pretty quick. You can go back and look at it again, and then it's going to change the way it looks here. Let's just kind of drag everything over here like this. So there's sort of what it looks like now. When I close this tighter, it gives me the look that I usually trade with, but it also has to do with what's down here. So what I usually do and what we do here is we get rid of that. We don't care about that, and we drag the price up there like that. And we say, okay, and now you have less boxes here to watch. Now, this is your ladder down here, right? So a lot of things are on here, too. So you open up this little gear wheel here. I don't need the, oops, that's not what I wanted to open up. I wanted to open up, where do I get into? Oh, go like that. Oh. Customize. No, that's not what I wanted to do. All right, hang on a second. Okay, I had it right. I was go to customize. So I get rid of the volume, and then I keep the other stuff, and it makes it cleaner. Then you can just click, left click, and drag these the way you want. Sell orders, buy orders. So then just get the price more in the middle. A little bit in the middle here like that. Now, if you use the wheel, you can go up and down really quick here, and sometimes you have to be pretty fast when you're setting your trades. And there's all kinds of other functions to this that you can do, learn to use, but this is basically what you need. So I'm showing you how to build a layout, not necessarily how to operate every single tool on your layout. So this right here you can change to be different numbers. If you go into the setup, this is pretty good. You can go up and down in 50s, or if you just if you left click on something, then it will immediately go. Then it'll go down in increments of 50. I have it set at increments of 50 because we'll be doing pretty low share size for this. So there's your ladder. Now, since I don't really use the ladder, I keep that kind of closed like that, and I'm on to the level 2. And often, because my account number on YouTube will be shown, some things a lot of traders don't know about is Charles Schwab basically goes through their own broker to make the trade, sort of like their own dark pool, even though they're a broker. And if you do that, I do that, it will show my account. So since I'm on YouTube, I just drag these over. Not everybody does, but you don't really need to see those because you're not getting filled by those most of the time anyway. So that's going to be the price of the bid, the price of the ask. This is the spread is in between the two. And then this is what the market, it's closed market, so it's not coinciding, but This is the price you would get if you're selling market. That's the price if you get, or buying market, and this is the price you get if you buy the bid and or buy the ask. This is the price you would get here. Okay, so now let's go down to the 15-minute chart. Now I keep this so I have perspective. Another one not locked. I keep this so I have perspective as to when you get lost in the micro of the 1 minute. You know, I like to see what the bigger moves are. So let's maximize this for a minute, and then we'll go in and we'll change the style. I have a 15-minute already loaded, which is basically, it doesn't have any moving averages. So basically, all it is just a clean chart like that. So there's nothing for you to know. There's nothing in here, any studies. It's just nice and clean. And then that's done. And then I can see the price action. Again, all the tools will stay here and you can lock them. And then I can see the price action as I'm trading that day and look at the bigger patterns and look at if it's swaling and I'm missing sort of a trend. And I can keep that pretty tight down here and still see it, see all the level 2 and see all that. Now let's go over to these charts over here. And this is going to be a 5-minute chart here. It's going to be a specific time frame chart. So, I mean, how many days? A 5 minutes. So I'm going to load a style, and it's going to be a 5-minute, 10-day clean. Nothing else is on. I mean, I lose all this stuff and everything that's on here already, and I don't have to get rid of it. So you'd want to build them and save them, you know, and I'm not going to really show you because it's nothing. It's very simple to do it. So now I have a 15-minute, and as you can see, I'm sorry, why did I do 15-minute again? I meant to do 5-minute. Let me do that again. So load style, that's why it's so great to have them loaded. So I want a 5-minute, 10-day clean. And I don't know why this is down here still. So let's get rid of that volume. Oh, well, you might want the volume. I don't need the volume on the 5-minute. You might want it. I'm going to take it off. Just click it off right there. Okay, apply, off. And it also has some other stuff on it that doesn't look too clean. So if you want, I think I do leave the earnings on here on purpose, but I don't usually have that there. So let's get the day, the weekend day. So if we go to, there it is. There's corporate actions, and there's, and that's not on there for some reason. I got rid of the corporate action. I'm sorry, I'm looking for the, we don't really want the options. Give me a second, guys. There we go. Show expiration. I don't need that. That should be it. Yeah, so that red line went away that was going up and down, and that little circle went away too. So there's my 5-minute, 10-day. Remember, I can auto zoom, or I can just click this over like this, drag this, left click and drag that up and down. And you have this over here. If you left click, you can move the stock. Left click on it, you can move it back and forth that way too. There's all kinds of ways to move this around. Everybody has the way they learned is their favorite way. So there's a 5-minute, 10-day. Now I'm going to open up a 5-minute, 2-day. I'm going to build. We'll lock that. Excuse me. So that's done. Now this is going to be a 30-minute. So I've already done all these. And all it really is you're going in here and you're setting the time frame for the right thing you want, right? So I want a 30-minute here, so I'm making it a 30-minute, but it's going to have other stuff that I don't want. But there's like I'm going to do that for 10 days, right? But it doesn't have the look and has all that other stuff with the candle. So you have to do the whole thing with every candlestick, all the other stuff, the dark background. So on the 1 minute, you could start with your 1 minute and then do the other stuff that if you loaded your style there, that's a good way to do it. We did a, did we just say 1 minute clean? I think we did. You could do it like that, and then you've got it all saved nice and pretty, and then go in and change your time frame. Change it for 10 days and make it a 30-minute. That's another way to do it, and say okay. And that still has the corporate things on it, which I didn't take off. Right there, yeah. Apply. Okay, guys, so then there's our 30-minute. Now I have these saved, so I'm going to go ahead and do the 1 hour now. So hang on. Style. So style is load style. And then I do my 1 hour now. There it is, up at the top. And then down here, my final one I'm going to do is the, drag this over a little bit, get the style here. And then I'm going to do my final one, which is a 4 hour right there. Now I had those all saved already. So now this is pretty much the layout, and how I trade it is these are shrunk down. I start at the bottom. So I can open them up by just clicking the little burger thing, right? Put this down again. If I need to mark a 30-minute, a 1 hour, a 4 hour, look at a bigger picture. And then this is the 5-minute 2-day, which is mostly set for 2 days to do my Fibonacci level on a 2 days real quick. And there's my 5-minute 10-day, which is more like looking at the price action. You know, these two things are going to tell me what's happening on a much larger than the 1 minute, so I can just kind of see what's happening. Obviously, since it's the end of the close of the market, I'm kind of making it look better with the dark. This light is post-market or pre-market, you know, and you can see that it just goes across, you know, to the previous day, and I like it when it's nice and dark and pretty. So that basically is the layout without all the custom indicators. Okay, you can trade it this way, and that's how you build a layout. That's how you, now once you build it, then you want to save it. All right, so let's do, so you open your setup wheel, and then you say save workspace as, and then we can just call it a new layout. I'll call it clean. Sorry, I'm talking over my microphone. I didn't cap anything, but so new layout, clean, save. Now, if you go back in here, you'll find the new layout clean somewhere in here. Yeah, there it is right there. So, so that's the trick, guys. That's it to how to build a layout. Now you can do all kinds of things. There's all kinds of things, and my recommendation is you go to the education or the help on Thinkorswim up here, and there's a whole learning center here. Let's open that up a little bit. So education, it turned all white. Oops, no page found, sorry. Request not found. Help. Oh, this is a whole nother thing that you should every once in a while collect your garbage. Get that clean. That helps speed you up. I have a video that shows how to tweak your Thinkorswim. I don't know why that's not going. There we go. So they have so many things and so many videos, and so depending on what you like. And I love working with these guys and Charles Schwab and Thinkorswim. So you can just, you know, don't go by what I'm saying all the time. Go get other professional helps that work on the platform and work for Charles Schwab. And I do coding for Charles Schwab Thinkorswim. So, okay, guys. So listen, I hope that was helpful. Make sure you watch some of the other content on this rolling video, and hopefully I will see you when I'm trading and I'm live streaming. Okay, guys, go green out there. Hey, hello everyone. This is the professor from Day Trading for Success. I am the head trader here. Today we're going to be going over the strategy that we traded today, and that we've been trading every day this month to try to make a minimum of $100 and then more, obviously, in 30 minutes to 45 minutes every single day. I stream live at Day Trading for Success 8143 if you're looking for the exact channel, but I think if you just type in Day Trading for Success, it should come up, or just obviously subscribe right now. You can get alerts, and then every morning when the market opens, actually before that, I go over the stocks, figure out what the picks are, talk about stocks for different strategies, and then I trade every day. So we're going to go over exactly how I'm able to accomplish green 92% of the time, and get hopefully people go along with me as a quarterback. How do I do that? What do I use to trade? How do I decide to go in and go out? So we're going to go over that a bit today by showing today's trades that just happened, but going over the strategies that I use too. So stick around. This should be interesting.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey, so welcome back, everybody. What you're looking at here is a 1-minute chart. I know it looks busy. What it has on here are custom indicators that are used by prop firms that we use here on this channel to help people decide when to go in and go out. So these are indicators that are very, very highly rated. These are the indicators that the pros use. We're going to go over what these are very briefly, and then we're going to go over how we're doing for this month every day with this one goal in mind of making at least $100 a day. And then we're going to talk about the strategy itself and why it's so successful. It's a large cap retracement strategy. But let's talk about the indicators first. The most important indicators that we look at are all on this 1-minute chart. I do have some on a day chart that we use, and I do have some on a 5-minute chart that we use as well, and we'll take a quick look at those too. But right now the most important ones are right here. So how do you decide to go in a trade? Well, there's about 5 different indicators you can. Now we're going to talk about the strategy and how it says to go in, support or resistance levels obviously, but we're going to talk about the indicators that make it so simple to decide, if that's such a word I can use, in day trading. But they really help you get that edge. So you're looking to get more things lined up that say, take this trade, whether it be long or short, more things that are lined up on how you do it. And in this strategy, retracement strategy, we do basically large cap retracement. So we're looking for the stock to go one way, and then we would trade it on the retracement. And then, like if it was going up long, then we would take a short, and then as it hits a support level, then we go long. So it can go either way. You don't have to trade short. You can just do the long trades, and we'll talk about that too. Well, let's get a deeper dive into these actual indicators right now. So if any of you have watched any trading or know a little bit about it, you know that Thinkorswim, which is this platform right here, it has a lot of indicators that are free. Hundreds and hundreds and hundreds, and they're totally adequate. But when you get to be a professional, custom coders are the key to you to getting really that next level up indicators. So one of the things that I do is I do coding for prop firms and other companies, and I try to find ways that these codes can also be available to you, to an average trader. And that's what this layout has, and I have links to go get each and every one of these indicators if you so desire. Let's talk about some of the most important ones. So the first thing you need to know is, when should you go into a trade, right? Now this one's called the Scalp Meter Pro, and inside these blue columns, it tells you where the buyers are and where the sellers are any given moment. So you can see inside a 1-minute candlestick. This is on a 1-minute chart. See these candlesticks here? You can see the strength. See how strong the sellers are on that? Right there, they're right at the top. So the blue column represents the volume, and the red represents the sellers, and the green represents the buyers. And then this meter is going to show you another way. How strong is it right now? So it's moving right now. Okay, so you can see it moving right now with this candlestick action. It's also going to tell you a couple other things. It's going to tell you the volume of the last candlestick, and then it's going to tell you if the current volume passes it, while the action is going a certain way, you know it's a lot stronger. Get ready to jump on in that direction. Also gives you the overall volume for the day, 51 million so far for NVIDIA. And then it has another, and then the percentage, besides the meter, it's showing the percentage. Right now it's buyer strong. You can see it's going up. I'll tell you what that arrow is in a minute that's telling you caution, caution. But I mean, these are the indicators that help you. And they're going to give different messages so that the more you use them in a simulator or maybe just trading with one share and practice, the more you use them, the more you're going to be able to instantly respond to what they do. You see, this is actually the MACD, which is basically telling you that to go the other way. This is a really, really handy. So you had a short move up on this one, and then it said, watch out, get out, and then it called it perfectly, right? And then you saw this jump up with it. Now it's saying down really strong. So you have a downward move and nothing's stopping that right now. So it's just a matter of reading these. Now they're not right all the time. Nothing's right all the time. And it's basically telling you something that has just happened. It's not telling you the future. But trading with the crowd, trading momentum, I often antiquate this particular indicator to you're sitting on a surfboard and you're waiting for the wave. And then as you see it come, you jump on. So the wave's already happening. You're just trying to catch it. All these noises you hear are different alarms of when these indicators are triggering. Now, I actually have the alarms for the different indicators sort of silenced. There's a few of them that go off, but most of them are silenced because when I'm live streaming every morning, the streamers, the people trading with me, don't want to hear all my alarms. They have their own alarms, and it just confuses them. So I have a few that I really need myself to trade, so I don't turn those off. But most of them I can just see by looking at the arrows and determine the action. But back to this. So this is the engine that drives your entry. So you're looking at that, and that's the first thing you're going to want to look at until we get into strategy, which I'm going to tell you a little bit about what we trade here for strategy. But this is the first thing you're going to want to look at. And then you're going to want to make sure nothing's conflicting with it. And then the other thing you're going to want to do, like just say this is going short. You're going to want to see if did it hit a resistance level as it was going up, and that's why it turned around. So you're looking for support and resistance levels too. But as an indicator goes, this is basically the best indicator I believe is out there. If you're a scalper, if you're a short-term scalper, this will work on a 1 and 5 minute chart or a 2 minute chart. Anything below a 5 minute chart, I highly recommend using it on a 1 minute chart. That's what it was designed for, right? Now this is a fairly recent one, and it's sort of like a training wheels indicator, but it's used by professionals, particularly to train people when to get out of a trade. Say you got in on this trade, you would look at this target up here. How far should I ride that trade in this direction? As you can see, this is very thickly traded right now, this time of day. It's not really moving very much. It's just moving a few cents. And how does it determine what that is? Well, it takes the movement of the last 9 candles, in which way they were stronger and how many pennies it went for stronger, right? And then it'll give you the target in pennies, and when you enter the trade, this just darkened out, but this will light up and it tells you how many pennies you've already moved. So right there will tell you like how close are you to 3 cents. Typically when you're trading, you want this to be 10 cents, 12 cents, 20 cents, 40 cents, higher numbers here. Right now, you wouldn't really probably want to trade this stock because it's going very slow. But I brought this stock up to show you the strategy itself, which we'll get into. So, and then it's going to keep an eye at your total P&L. So these two together work so well. And over at the $1 Million Margin Club, I think they have a package where they have the two of them together. I have a link to it if you're only going to get two. But really, if you were to purchase these, you would probably get your money back in a couple of days. They're not expensive. They're $24.95 over there. It helps support the channel. I am their brand ambassador and the only ones that really sponsor me. And I only really push stuff I believe in, and these I truly believe in. Let's get another look at a little deeper into here. So I open up, this shows all the studies that are on the chart. So these are things you would typically put on a normal Thinkorswim studies chart. You're going to want your EMAs on here, the moving average that's been smoothed. And this has the 9, the 14, and the 20. And then the SMAs, meaning this is how they move on a day chart. They'll be on a 1 minute chart, but it's going to show you where they are if you come across them. they're pretty important. That's the 50 average, the 100 average, and the 200 daily average. And then the other thing you have on this chart is the VWAP, the volume weighted price action. You want that. That's typically considered to be the value of the stock at any given moment. Although when it comes to scalping, that's not that big a deal. You don't really want to pay too much attention to that. And then we have the ATR multiple range. I'll go into that a little bit deeper in a minute. You have the multi-time alignment. I'll talk about that. The risk oscillator we just talked about. The MACD I briefly pointed to you. And how does the MACD work, right? That's an EMA crossover, convergence, divergence, and that's the 9, the 20, and the 6 that it takes to decide whether you should go up or down. I find this to be, I really respect this when it kicks off, and it has an alarm that says, hey, go this way. And that's really important for traders. And then you have the market magnet, which we'll talk about in more depth. And then we have the buy-sell oscillator, which is based on overbought and oversold, RSI, relative strength. And then the whole and half dollar, which basically marks every whole and half dollar, these gray lines, for any chart. Now, you can draw them yourself, but this just makes it really easy, and it's wicked cheap, and they're just ready and set up for you. And you might ask, why would you do that? Because that's where the crowd trades. They trade a lot on whole dollars and half dollars, so knowing those levels is so important. Then we go to the lower bar down here. We have the Scalp Pro meter. So that's what's on this chart right now. Now, let's look at this ATR for just a minute. It's going to get crowded here because I'm going to jump off this chart, and I'm going to open up this day chart down here. Now, this day chart has the ATR levels. What does that mean? Well, what that means briefly is that, and I'm not giving you an entire tutorial here, but I'm going to go over pretty quickly here. You're looking at the average true range down here of what would be the average price this stock would move every day over a 14-day period. Like, what's the average it moves in a day when you smooth out 14 days? So if I go over this candlestick, say right here, it says the average is $3.99. See when I go over? So just call it $4. Now, there's two ways you can mark the ATR. You can mark half of that, high and low, or you could mark the entire $4 up or down from where it last closed. Some people do it from where it opens. I do it from when it closed. That's when most of the people do the previous day, is showing you what was that average smoothed completely in. If you're going to the day that you're trading, it's not done yet. So it just confuses the algorithm that's figured out. So this is a really good indicator. You can put it up here to see the prices, right? And then you can draw them and mark them if you want. But it gives you the overall, what you're looking for here. But then this is the one with the labels, and they're just these little red and green lines, right? And then this is one, that, by the way, that's free over at the $1 Million Margin Club. You should pick that up. That's pretty cool. This shows you what the volume is per 1 minute candle over a 10-day average or a 1-day average. And when you're trading this particular strategy, which is a large cap retracement based on the RV strategy, and that you should look that up. That's Day Trading Volume 1, the RV strategy. I have a link to that book. That's the book that started all this stuff. And if you haven't read it yet, you need to have it on your desk, because that's where pro traders are born. So read that book. But anyway, I have a link to that. But this is one of the ones that I made sure they kept for free for you. So if you go over there, you should get that. But so this is something that is on this 1 minute chart over here. And it's just marked by lines because I didn't want the labels to be up here. So the solid thick line is the half level. That's the half level high. And then as you go down here, there's the half level low. And then the full ATR is that dotted line there. That's the low, and that's the high right there, right? So that's the full ATR. These partial ones that don't come out all the way, those are part of the market magnet. And since you see that right here now, that's this purple line, these little blue, light blue stripes above and below it, and these green and red arrows. And now there are videos over at the $1 Million Margin Club that shows every one of these in detailed action and how they're supposed to work and the mathematical formula that is being used. You don't need to know all that stuff, though. You just need to know how to read it if it's on your chart. Like, what does that arrow mean? Go the other way, Or it's telling you maybe go the other way if you get enough cumulative data that says it's time to get out of the stock. It's telling me that it's done, the move's done. So you use the risk oscillator first, and then you can look at other indicators to help you. And the market magnet is ideal for entering and exiting. This is obviously everything's prior data that just happened. This always needs to be set under my picture, set for today, not one day. Your chart should be set for today. So if you go under your settings here, they have the time frame here, and it's on today. A lot of people put it on one day thinking it's the same. It is not the same. So one day, make sure I've got the right camera on me here. Yeah. So this is set for one day, and it's going to tell you what 50% of the volume has been moving. That's the high of it, and this is the low of it. 50% of since the market opened, that's where it makes its own little channel. And channel trading is so important, right? So we'll get into a recap in just a minute, but of what happened today. But I wanted to go over the basics so you can get an idea of how you might be able to trade along with me every morning. So then this is the center, and it's called the magnet for a reason. This is where the most volume has happened to this date and time right here. So it always tends to gravitate back to that, and that's why it's called the magnet. And then these blue stripes will signal as they shoot across a volume that's just happened. That might signal that it's about to pop up toward the blue stripe that's coming in. So you always want to watch that. I announce it all the time when I'm trading, like, hey, this thing's about to pop. Look at it shoot in. That means it's like a springboard, like the price goes up with it. So you can kind of see. And you tell me if you think something like that would be useful to you. So it's just like, they're just a no-brainer that $24.95, you might want to get this indicator. Obviously nothing works all the time, right? But this is a very accurate one. And then some of the others, I talked about the MACD, which basically is a crossover of your EMAs. So on the gray line, it's a 9 EMA. The purplish pink line is a 14-minute, and this is a 20-minute EMA. And then here's your VWAP down here. A lot of people only take trades long above the VWAP, low above the VWAP. That's a strategy. Doesn't work all the time. I think it's like putting darts, and just throwing darts at a board. But it's good to see where that is to put it with the rest of the data, right? It might be a support level as this comes down. So you look at the other data, right? But, look at how accurate the MACD is. It says it's going to go down. It went down. This is a buy-sell oscillator. The MACD is only the white arrows, okay? So MACD says it's going up or continuing. It's going up. Let's see if we can find a wrong MACD. MACD says it's going up. MACD says it's going down. MACD says it's going down. MACD says it's going up. This one's wrong. Well, it's not really because it went up. Yeah, it's just a red candle, but MACD. So MACD arrows, that indicator, highly respected. In the moment, it's going to feel different than me just going back and cherry picking an arrow, obviously. So it'll flash in and flash out. So again, you're looking at, is that saying it's going to turn around? So you got to take a beat and look at your data and use a little bit of your cumulative brain power about what you've been learning and watching. Once you kind of get that edge, the MACD is extremely helpful. The buy-sell oscillator is based on whether a stock is overbought or oversold. I found that when I read that, I think about it maybe taking another minute or two to actually activate. I typically do not use that to take a trade going the direction I want to take. I typically use it to get out of a direction. So if I get out a little soon, at least, if I'm green, I'd rather get out a little soon and be safe. So you will see like this arrow might pop up here, and then the price action is so strong, it just pushes it. But it's warning you like, look, it's overbought. Not many people are up. The oxygen's thin up here. So you want to look at that buy-sell oscillator as a message to like, this move could end at any minute. Get ready. And indeed it did. It pushed it up, but it turned it down, and it went down. And then even here, you see it turned it down. It went down. And then, now if you get both of these saying MACD and the buy-sell oscillator, but see here too, it's like it turned around, and at first you see it and it's like, hey, it's not really turning around, but then look what happened. So my advice on that indicator is wait 30 seconds, wait a minute, maybe even 2 minutes if you're getting in a trade with it. But if you're getting out with a trade, just take your profit right then. Don't get greedy. But again, another magnificent indicator that really helps. Now let's talk about these vertical lines you see that look so busy coming up here, 5 minute, 15 minute, 5. Okay, so this is the multi-time alignment. These are set at 5-minute increments. It's important to look at this on two different charts. This normally has labels up here. I took them off because it gets too busy. So what did I do with those labels? I put them over here. What do these labels do? A lot of people don't trade on a 1-minute chart, right? They trade on a 5-minute chart or a 15-minute, 30-minute, 1 hour, 4 hour. In fact, data shows that more people trade on longer time increments. What are they looking for before they get in and out of the trade? They're going to look at the candlestick price action where it has abruptly stopped or turned around, or where it's continuing. It's continuing the way they want to go. So if they want to go short on a 1 hour, meaning bet that the stock's going to go down, they're going to most likely go in down, right? They're going to go in down. So knowing what's about to be added, what's about to affect the price on the level 2, everything you see on the candlestick, what might make that price go a direction, other people trading at different time increments might, pretty good idea that they're going to make the stock go that way. They have a strong bias that it's going to go. See how it's going down with these? It's a strong bias that that's going to happen. Now, it's sort of a reset. Like every 5 minutes, you want to recalc. Like, how strong is how many? There's 3 5-minute traders here on the 15 plus the 15-minute. Then you go over here and you got 4 1 hours and 6 30-minute people and so on. That's a big one. That's probably going to go up if it got to here and it was still green. This will change color depending on if it is still green. So it's telling you right here the color. But if you're used to looking at it over here, this is a quick read. But this also tells you what color they are. This is just going to tell you really quick. So I split it up. When you get the indicator, they give you all the versions, and you can bring them into different charts. Again, every 5 minutes, which is how this all started when I traded, I said, hey, look at the 5-minute on your grid. No special indicator, just your grid on your chart. When it gets to 5-minute, if the 5-minute is showing it green going up, probably people are going to keep going up with it. Showing red, probably they're going to go down. So get out if you're trading long. So that's how it all started. And then you realize that the longer time frames became just as helpful. So that's an incredible indicator. As we're over here, I'll just briefly talk about a couple of. This is the ADX, which is going to tell you whether there's a trend up or down. This is the market pulse that tells you what the whole market's doing. Well, the main indicators like the QQQ, the SPY, the TLT, and the UVXY, the fear indicator, bonds, and then the SPY and the QQQ. So those are both ETFs that people will watch. And that's telling you, hey, look, the market's going down right now. Now you combine that with that. Then you look at your price action. And then you look at a catalyst to see, hey, has there been recent news that's saying this should be going up or down the stock that I'm trading? What's going on? And I have a 15-minute chart here too to let me see a little bit bigger action so I don't get caught up in the moment. So you may find this to be very busy. It's something you get used to. You don't have to have all these things open. This is where I take the trades, the active trader, where you can set your share size really quick, or you can just bump a share size here, and then you can change. I have videos that tell you how to set this all up. I have videos that give you free layouts, and then I have videos that give you scanners. I mean, the scanners right now, you would get them at the $1 Million Margin Club, but this is where you're going to find your stocks under scanners, right? Now, these are all specially coded scanners, all right, that you can get for $4.99 that I put in. Like this one has 5 codes in it, right? This one is ATR equals 10 or greater 4. Yeah, this is the one for the RV strategy right here. So let's look at a couple of others here. So these are some of the ones that I do, the professor. So this is a momentum scanner. This is a gap scanner. That's over there. This is the one that's used on a popular trading platform that only trades momentum. I won't mention his name again, but it's an exact duplicate. He charges money for it, and a lot more than $4.99. You can get that here. The one thing it would be missing, it doesn't have an alarm and have him saying, hey, I'm going to go over and trade this right now. You'd have to, see it and see that they're kicking off. These are a couple of the others. This is the one I just did, the mid cap one. And then this one that I use on this strategy we trade. And this teaching, I think, is the one that is, This is the one right here. And this has all the custom coding in it. I scan here. It's only set for 10 stocks. And it's going to pick out larger mega cap stocks that are moving over 100,000 volume every 1 minute and a lot more, as you can see. And that's going to give us the price movement we need to trade this particular strategy. It comes in handy for just about any strategy, though, I will tell you. And if you don't want to just trade the large caps, I did one for just 50,000 above too that isn't set for a large cap, market cap. That 25 million actually means 25 billion minimum market cap. So watch some of the videos. I go into depth about these. There's all these different really wicked cheap scanners that I've created over at the $1 Million Margin Club, and there's a link for that stuff. So that's pretty much the indicators that I use. Now let's talk about the strategy that we trade every morning, which is so important. Actually, I'll start it with a 5-minute. So every morning I'll start, and after I scan, I'll pick the stocks that I'm going to mark up. And how do I mark them up? Well, I mark them up by historical data. So what we're doing here is just common sense. So many YouTube videos you see will just pull up a picture and say, when it gets down here, you should trade. That's a dip, and go in and go. I mean, that's very cherry picking. You should be able to mark your chart out before the day begins and have your levels all set. If you want to add to those levels, which I recommend, and I'll show you how as the day goes on, then you can do that. And there's ways to do that based on historical data. But when you start off in the morning, like this high wasn't here in the morning. So the first thing I do is I set a Fibonacci level. So the Fibonacci level, maybe was that pre-market? Yeah, I think we had a pre-market high like right here, or maybe right here, and I set the Fibonacci level high. It just isn't drawn over there. So basically, it's up here, and you can bring it on your chart. You always go left to right. You open it up, you click, like if you open a fib right here, you would click it, right? And then it drags to where the high is, and then you'd mark the high, right where the high is. Let's remove that drawing so we don't get confused. And what that does is it creates channels based on the oldest historical data that there has been, the 12th century or whatever it is. And this is still used. It's like nature's mathematical formula. Trust me when I tell you, you should respect, for the most part, these levels. It's all probability and outcome. But if you look at something like this that wasn't marked on this level, look at how it stayed in this channel. Look at how it stayed here and pop. Look at how it hit it, respected it, came back, hit it, came down. See what I mean? Fibonacci levels, just common sense. Mark them out. They're not hard to mark out. You just always go from the low to the high or the high to the low, always left to right, and mark it. I do a 5-minute, 10-day chart. That is the most commonly used for day trading Fibonacci levels, not swing trading. They'll go to like a day chart, right? Day trading, you need the levels to be somewhere you're going to trade. Now remember, this is marked a ways ago. Look at how that's in that channel. What you're trying to do is you're trying to create channels, and then you're trying to go off the floor up or the ceiling down, or if you're just going long, you go off the floor up. That's what the large cap retracement is, and mega cap retracement. You're finding a channel, and then you're trading in that channel. And that all started with Day Trading Volume 1. It's called the RV Strategy, and I highly recommend you reading that book. So right here, I didn't end up trading NVIDIA much today, but I did mark some historical data, and this is an historical data level. And what you do is you just open up a price level, and you find a spot where the price action is stopped and turned around, and you double click, boom, boom, and you've made historical data. And look how it respected it again, and look how it respected it again, right? Now, there was no point if the price action wasn't going to go down this far, and I felt today that price action was only going to go up, and so far I've been correct. Hasn't gone a huge amount up, but it is going up. I think it will close higher than it's open because of the news that the the tariff deal at 15%. So I think the overall market is going to go up today, and NVIDIA is a stock that travels. So these are the travels with the market, or maybe even moves the market. But these are the conversations I have every morning before I start trading. I go over my thought process. Charlie, who works, so she helps with the chat, and she puts together news stories that will affect all the large and mega caps that we might be channel trading with the RV strategies. So I touch on those stories, and then I talk about my logic where I'm marking historical data. So historical data can be 1 minute back, It can be 5 years back, right? If you're trading intraday, day trading, you pretty much don't want to go more than maybe 10 days back. You've already got your SMA dailies on the charts, right? On my 1 minute chart, I have the SMA daily. So that's daily moving average of 50, 100, and 200. So I've kind of got those levels. If they come into play, there's going to be marked. But there's no sense in marking historical data back 6 months. If the price action's so far away from it, you'll never see it in the brief amount of time that you're trading, right? So you're looking for something that's in your channel, right? So this is in the stratosphere. The oxygen's thin up here, I like to call it. There's nothing up here. It's not way, way long ago, right? So there's nothing to mark historically. So we're only going to mark below the opening area, right? And then you're thinking, well, if it's long bias, why do I want to waste the time marking stuff down here? Pretty much the Fibonacci levels picked these up anyway, so there was no point. I mean, maybe this one. The black areas are the open sessions. I mean, maybe this one would have been, but look, it picked it up. Yeah, that's just a continuation. So it respected it and respected it and respected it. That is a great historical data level. So you're looking to mark a level that may hit again while you're trading. It's just that simple. You're looking to mark that level. It may not work. As the book says, as many books say, you just respect them until you don't. The second it breaks that continually, just like breaks it, trends right by it, like that level meant nothing. Take it off your screen. It means nothing. It's not a guarantee, right? But a lot of times, I don't want to say most times, a lot of times it is respected. And that extra edge, guys, with the indicators and the skill you develop to see the movement on the level too, that's the edge you're looking for that's going to get you green every single day for the most part. So historical data marked out. Let's take a look at another one. I'm about to break into how we did today. You can see on this stock was $104. I'll go over those trades. And then if we get to say, I came back, guys, for those of you that watch, and I traded with Charlie. So let's go to AMD. I think AMD, we did $49. So let's look at how stored. Now, today was a little more difficult to trade because it was trending up. So I marked a level and it just blew right out. There's nothing to mark up here. So when you see these levels here now, these were intraday. As I was trading, I was trying to find anything not as highly respected. I wasn't going to respect these much, but I put them there for a little bit of guidance while we were trading in the moment. And then the other things you're looking for here, like the candlestick pattern playbook, is the only book still, and I have a link to it, is the best pattern book there is. No matter what you see, it is the best pattern book. Not only does it have depictions of every pattern, drawings of every pattern, it has a rating system. It's the only book that rates the accuracy. It would have told you that this is a tweezer move. And this, I believe it's an 80%, maybe a 72%. Bull flag's an 82%. But this tells you that this is a very accurate pattern when it comes up and it tweezes like that. And it says that when it tweezes like that, you typically want to expect the movement of the inside of the tweezer to go down. So if you take a look at that, 174, like 40, all the way down to 173.66. So a little less than $1 from the time this closed. So this closed the end of the tweezer. Now you should expect this to go down a little bit less than $1, 73.39 down to 72.32. So there it is. It did its exact move before it turned around. And it's doing it again here, right? There's another tweezer move, right? So it told you again, look at this candle, look where it closed. It actually went further. That's just one pattern. That's an inverted hammer. That's a reversal sign. This is a rickshaw man or a doji that's also telling you at the end of that move, it's going to go the other way. So you don't want just support and resistance lines. You don't want just indicators. You want to learn your patterns too. This is the edge, guys. Why the 5% make money, make millions. There are many traders making 20 million a year. That's not just a number I'm throwing out there. That's verified numbers from other trading prop firms. So, but don't expect to make $20 million. But I'm saying, how do they do it? Well, they're reading price action, level 2, which I haven't talked about yet. They're reading historical data. They're reading candlestick patterns. All these things. Now, a lot of them, they'll trade off channels and some of them don't. Just everybody has their own little shtick that they do. Here's another tweezer move telling you it's going to go up, and it did. Here's a doji or rickshaw man saying, hey, it's going to go back down. It's just like clockwork. You can literally, more times than not, I'll give it that. I won't say always, but I'll say more times than not, you can respect the patterns once you learn them. There's another book that came out after the Candlestick Pattern Playbook, and it's called Day Trading Volume 3, and it's the 66 Candles Mastery or something. It shows an old Japanese guy on the cover. And that one is just puzzles and games that help you learn these patterns. So I don't mention this enough, so I wanted to make sure I brought it up, that the patterns are so important. But when we marked out AMD this morning, it wasn't up here. So I did the same thing. I marked the Fibonacci levels, left to right, high to low, made some channels. I didn't really have much. You can see I marked this level because it hit here, then it hit here, then it hit here, and I thought, hey, at the open, if it just happens to go down, we might want to buy off that dip, right? But it didn't. It just took off. So that one we made money on, but it didn't really give us what we wanted in the channel. They were just taking off. So let's go to Tesla. Now this one I came back in, guys, that were watching. I traded this with Charlie so she could get to her goal. Now this is not one I normally recommend trading, but it actually had a catalyst. So you don't want to trade, if you're trading a large cap retracement, you don't really want to trade on news or a catalyst or earnings or something that might make it go a certain direction. It's great to travel in a certain direction if you know the stock's going to go that way. If you know the stock's going to go that way, then go with it, right? But how do you really know, right? You're always chasing it. If you get green in the beginning, then you can hold it and just say, look, if it goes back, if it retraces this bar, I'm keeping my profit. If it starts to go back, I'm going to get out here. I'm good, right? There's a good book out there by Tom Hogarth called Best Loser Win that talks about, and I have a link to that, it talks about how you just let the winners run, man, until you see data that says stop running with them. And when you use my links, by the way, it really helps me out, so I appreciate it. If you're going to get it anyway, please use my links. But these are books that I truly believe in. Trading in the Zone, Mark Douglas is going to help you deal with the probability and outcome. And he says, there's a whole chapter in there I love where he says, count on 20 trades going against you. If you can live with that, with your share size, you're going to probably make it. He doesn't say those exact words, but he bases the probability and outcome like, it could go that bad for you. You could think you have it all, and in 20 trades go bad for you. Are you still alive? Is your account over? So you got to make sure your share size. I did a great video called Trading with Nerves of Steel. You might want to look that one up. And it talks about share size is what it's all about, man. If you're sweating, if you're shaking, lower your share size down to 1 share until you just don't care and you're just getting the hang of stuff. Then just judge your accuracy. Don't look for money. Trade with 1 share, 5 shares. Just judge your accuracy. When your accuracy gets 60, 70 and up percent, mine's 92% right now. I'm running, I'll show you in just a minute. As it gets better, there's less and less chance you're going to lose money as long as you stick to your max loss. I'm not going to do a whole tutorial, but I'm going deeper than I thought. But here is the fibs on Tesla. They also, they did do some help here. Look at that. Look at that. I didn't even see this happened after I stopped trading. So that was marked high to low in this case, left to right. Bam, like a hard ceiling. It turned around. How would you know that without marking that level? How would you know, like, I should take my profit now? This is all over, right? Now, you could mark some of this historical data if it kept going. Tesla's not the best case study. Look at how that historical data was respected. Look at that. That's marked from prior. I'm just trying to point out there's a lot of people, I always fight back on people that say, oh, historical data is senseless. You don't know what you're doing. Well, they pretty much told me they don't know what they're doing. It's like somebody not using the average true range. You're going to mark that. That's historical data. That's a range of a stock. You're going to want to know how high it typically goes and how low it typically goes. That's historical data. Those are support and resistance levels. It's the same thing here. It's just that you're getting inside like a microscope and you're seeing like, those are the spots, man. So let's look. And if they don't respect it, then get rid of them. And that's what the whole RV strategy is basically based on. It's not the exact strategy I trade every morning, but I use it as a guideline to trade in the morning. So let's see what else I traded today. Did we do? I can't remember if I traded Apple. Okay, one trade on Apple. Again, I think the reason why is because it started to go in a direction. Like I was looking over here at the beginning of the market, and it was just going straight up. So I got out. I guess it did a dip and went up, and I was like, I can't. This is an older data. This is when I was trading it. I think I marked there. And look, you can't respect that level. That was marked on a 1 minute. And that's just useless right now. But at the time, I was looking for something that was moving here, and it was like, it's just going up. I could just ride it long and hope that's what it's going to keep doing, but I don't know when that's going to happen. I guess this historical data told you when it was going to happen, though, didn't it? And look at it here. Again, I have the same argument with nobody. Nobody can argue back with me. It's just because of the comments I get. It's just like, dudes, come on, man. The evidence is so clear every single day. But so that's the strategy. You're looking for channels, right? This is a big channel. Try to get your channels tight down to maybe 25 cents up and down, and then see if you can get into the channels as they move across. See if it works. Now, this is a 5-minute chart. You would be trading those channels on a 1-minute chart, right? So the half and whole dollars are way down here. That's what those are. They're set for a different stock because as Tesla changed, I had to. Actually, I think I changed them back to NVIDIA. But this is what you would see, right? So if you're zooming in on a 1 minute, like if I was going to continue to trade this, right? I don't have historical data here, so I would put something where this tweezer move was. Look at how often it got respected after that, like turn around, turn around, turn around. That's a good spot to look for a dip, to take a long trade here. And then let's look over here, because I'm looking at this going, hey, we're right at the top to go down. It respected it. How many times did that happen back here? Kind of the same area, like right here. So that area is a channel, right? So you got 214.23 to 214.43. That's a 20-cent channel. Not a lot of risk, right? And then when you're trading this strategy, I always say go in only 25% of your position. And then let's just say this is a different level. I mean, this is like a flat top breakout here. Look how many times it hit and then it broke out. So that level might get respected up here. And this could be if you're going short and it was going against you, right? This might be where you add in half, or you say the rest of your position to half, or you just say, look, if it broke that level too, it's time to get out. So you have backup levels that help you decide. But look at how that respected that. And it's just coming down. So you could have taken that move already. Say you got in here, 214.42, and it went all the way down to 214.34. So if you had 200 shares, you had a quick $20 trade right here, and most likely your indicators were calling it out as well. You can see here, the Scalp Pro said, you're going down. Now we're on the next candle, going up. So, you just use all of the things. Your target's only 3 or 4 cents, so this market's moving so slow. But let me break in a little deeper and show you how we did today. I'll show you when I took these actual trades, and that should help you determine, although we weren't channel trading too much today, but I hope this was somewhat informative. All these things have links on my channels, guys. So let's go into what happened today. Great, guys. So this is a still picture of me just about to open at the market here, and I'm opening on NVIDIA, and I'm going to turn off the sound on this, and I'm just going to talk over live now. So the picture you're seeing is me live. Under me is the picture of when I actually traded. Ta-da! Doppelganger. I actually do this a lot. Sometime I cannot tell a lie. I will come in later and call trades I didn't even do for somebody else, but because the point is a teaching tool, right? It's a teaching tool. So, and I don't do many like that, but sometimes they're action that somebody else actually traded. I cannot tell a lie. It happens from time to time. But anyway, so let me just start this right here, and we're going to see what we just did this morning. So I'll press play here. I've got the sound off, and I'll talk to you about my logic was I believe the market's going to go up. Right? So it's just about to open. I'm looking for a dip and then to ride it up. And I may take a swing trade, or I may just get out. I'm on the fly. So it's starting to go down, but it didn't go down much. And I remember thinking, it's not going to go down. I should just get in. So I got in. You saw me get in real quick at 174.36 is my price. You can see this is what the market maker is going to give me, and it starts to go up, and I'm looking to take a profit. I didn't at first, and I thought, oh, I should have taken it, because then it went red again as it went back down. It's below my position, but the first candle, it's really hard to call any price action because there's preset market orders and they're just washing out, we call it. They're just washing out. So now, because of the way it's moving, I'm going to sell the ask, and I clicked it right there and it picked up immediately. And what does that mean when I sell the ask? That means that over here I was being picked up on the highest price I could get when I sold the ask, and it picked me up for $60, right? Now I take another immediate trade here and I almost get into trouble. But remember, I'm long biased here. I'm thinking this is going to keep going up, right? So I'm thinking, do I wait for a dip, or do I get just keep going up? And that's what I'm struggling with right now. I'm certainly going to wait for the next candle. This is still the first 1 minute candle. I don't usually like to just get right back in on the same candle. But let's see what happens here. I can't actually remember. I'm talking to everybody saying what I'm thinking right now, like, is this thing even going to go up? Just ever come back down, or is it just going to go straight up? And there's the next candle. So now I'm watching closely, because it's kind of just slowing down to nothing, which I didn't expect. I expected price way down or way up. And the fact that it slowed down like that, concerned me. So I'm speeding in. Is it my screen I'm thinking? But then it goes up and it hits that ATR. And I'm like, if it breaks that ATR, I should just get in this. It's just going to go. And it may never come back. So I've got a little FOMO hitting me here, thinking I'm going to miss the trade. Get in. So I got in market just to make sure I got in. And then it started to fall off immediately from my position. I mean, not all the way. But I want bigger money here. So even if it went up, I would probably be waiting a little bit for maybe a little bit, another $50 trade. But look what happened here. It got rid of all my profits and went down. So I think at the time I'm telling everybody, I'm totally prepared for this. I'm only a quarter of my position in 200 shares, and I'm looking to add. I'd like it to get down to 174 even, near the way it opened in the market, so I can go up to a full 400 shares. But I'm not going to rush that. I'd like to see it get down, show signs of it to turn around before I go into my full half position, not full position, full half position, which I rarely go beyond until I see good signs that it's worth the money to do it. Of course, I can be wrong. We'll take a look at the accuracy and the trades I took, the breakdown, when I get done with this recap real quick. So I'm not going to show the full length of every trade, obviously. But I mean, most trades are much quicker than what you're seeing here. So this video won't be that long. But, I'm hoping it's going to just shoot through here with power. But as the minutes tick by here, I'm talking about letting this stay and going to another stock, because I'm not concerned it's going to go down much. Like down to like 165 or something, and I'm suddenly down a couple thousand. No, I think it could go down maybe 200 or 300, but I think it's going to swing up for the day. So I'm just not concerned to let it run, which is one of the things I mentioned before I even took the trade. This could become a swing trade very quickly, meaning throughout the day or several days. Swinging it is not just a 10-second trade or a 1 minute trade. It's meaning let's wait for it to make its move, for it to realize what it wants to do, right? So I think about, hey, I get ready to get out here because it's about to pop. But it toys with me. So I think what happens here, actually, guys, is I think that I don't get out here. So let me fast forward here and see. So here I am a few minutes later, stuck in the same situation. At one point, this was down $157 red. I think that's the highest it got. I was not concerned. And there was a little of me going like, is this thing going to fade today and all this good news? There was a part of me was a little slightly concerned, but not the money-wise, no. And I think eventually it would come back. I'm not worried now about the August 1st announcement like I was before, so I'm not as worried holding a swing into these stocks. I don't think there's going to be the crash like there was another time. So I'm about to switch. I've been prepping the traders this morning, like, look, I'm just going to ride this as a swing. I'll keep an eye on it as we switch. So I go over to AMD here in just a split second while I'm waiting for this to play out. And then we talk about AMD for a minute. So I'm over to AMD, and this is technically not the strategy. This is going straight up. This is not consolidating, right? This is not channel trading. These are the whole and half dollar levels. That's historical data there. Right above here, I had my eyes on a fib, and I'm thinking, I can chase this, and the fib is where I need to watch out. So I just put my share size. I think I maybe go back up to 200. Let's see. No, 100. So I lowered it to 100 because I'm worried about I even went to 50. I'm worried about channel trading on Tesla here. So I did look at AMD earlier. I thought I was on AMD still. I looked at AMD earlier and I ended up not trading it. I think maybe I skipped too far ahead. I'll go back in a minute just to make sure. But so I go into Tesla, low share size, worried about anybody following me, making all kinds of warnings that, be careful here. I really don't know how to read Tesla. I know how to read it. It says it's going up. But you can't trust Tesla. Let me zoom up. So I'm back to take another trade on Tesla. And I tell you, I still have some apprehension, which I'm saying. It does seem like it has news. Tesla has news down here. Okay. So I'm thinking when Tesla has news, even when it's not good news, people just go crazy. So you can see over here on the 5-minute. So you are chasing something here, which could become a falling star at any second. And it could drop $10 in like 3 or 5 minutes. So that's a lot. That's $1,000. So, you need to be prepared to get out for a max loss. This is not one I would swing. And right now, it's not one I would short. Typically, I am short bias on this stock, but not when it has news right now. So let's see what happens. I'm buying the bid to get the best bid price because the spread keeps getting wider here. And I'm looking for level 2 to swale here. I'm watching, particularly on this, you can see as the price is going up or down, up, as you see these swaling. Are there higher highs or lower lows? Which way is it swaling? When it goes up, does it have, more pennies going up than down? Clearly, the target says yes. This indicator really helps with that. So going long is the right direction here. But you can see what happened on this trade. So you have to be with 100 shares. You just have to go like, no big deal. This could do you $300. I shouldn't be concerned. That's the way you have to look at this when you trade Tesla. Like you have to have very low share size or very thick skin for losses. So again, there's no reason for me to think that this should reverse. If it's a normal stock, it should keep going up the way it's going up. But every time it does this, with a gravestone or a doji or a dragonfly, every time it shows a sign of not being as strong, you've got to watch out. So there's a dragonfly that's red. This is a sign of a reversal. You broke back through the even dollar amount there. Are you gonna break through this historical data too? I think I checked this data right here because I'm worried. How strong is that data? Is it that it's about to break through? Maybe I already did check it. So no, it looks like I'm about to check it. No, maybe not. Let's see. I can't remember every trade, guys. So let's talk it through here and see what happens. I'm trying to tell you my thought process. So I'm getting ready to get out. It's moving with speed, so it could give me a double-digit number to get out very quickly here. So I'm just looking to get out quick on the ask. Every time that it consolidates, I get more worried that it's going to drop off. Instead of being a breakout, it's going to be a breakdown, as you can see. Taking away the profit from my other NVIDIA, and it's looking to hurt me. So a little risky here with Tesla. I have the 9 moving average to hold it up. I'm talking about that. The even dollar right here. I think if it just blew right through these down all the way down to this level, I was talking about, I wasn't quite sure what that level was right there. But if it moved, because I looked, it's not an SMA. But anyway, so as it goes down, I'm trying to figure out where should I be worried that it's not going to recover, right? So I am starting to have those thoughts, but it doesn't really gain purchase with me because it doesn't. So I'm looking at that level right now, that 321.70. Like, where was that marked? Okay, so it's marked right there, and it does hit it a whole bunch of times as it goes across. It gets respected right there too, see? So I'm showing that got respected right there. So that makes me start to like this level. There it is again. So you don't want that to break that level going down because it doesn't have anything else to that fib. So had it kept going down off that level, I would have been more concerned. So we're waiting out the trade, starting to go back up. I'm feeling better now, like that was my entire plan, no problem. I knew this would happen exactly this way. Not. So nobody ever knows for real, right? But the more cumulative data that you get, the more you're hedging. So you can get a good trade, right? You're going to get more good trades than bad trades. You're going to make money. But you got to put in the work, the time, get the right tools. And then it becomes very, very easy. Well, that's a stupid statement. It becomes easier for you is what I should say. Easier for you. The more you learn. And I still have losses that I can't believe I had because I don't listen to myself and just say, get out, because I'm so convinced it's going to reverse. I just convinced myself. In some ways, being so accurate can really work against you for big losses because you just always feel they're going to recover. I have kind of an advantage. I kind of cheat because I can keep adding to my share size a lot. So I get my price closer and closer to where the actual price is by adding shares. My price point keeps getting closer to it by adding shares. I have a large enough account where I can do that. I can margin, well into the millions of dollars. So I can do crazy stuff, have, 3,000 shares of Tesla and just try to get the price down there and then have a little bump up and get out, right? So you can see where the synthetic icebergs are. So I know I'm going to get picked up. Little advantages like that for people that trade in mega. So if 99 times out of 100, I would never implement that type of strategy. But if I called it wrong and I dig a hole deeper and deeper and deeper to what's like, oh my God, I'm going to lose 10K on this trade. I cannot let that happen. You're crazy. You get hijacked, right? So then I'll add to my position like bam, 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 triple. I might hit this 3, 4, 5 times until I see this price get right near this price, and then I look for, you see which way it's swelling. Then as it swells up, then you get out. You use market because if they're going to give you an alternate trading route, which they will do for me, large traders that trade large share size, they're going to guarantee I get filled with very little slippage. So I get out, and it's cheating almost, right? By having the more money is cheating. But I will cheat to win. I'll say it. And that's why I say to you guys, max loss, no matter what else. Get out at your max loss. Don't play the reindeer games I play, I often I get so angry because I want to go short, but I'll push buy. I'm just like, what was I thinking? And I start my trade out wrong. And then I just double down rather than just get out immediately. I can make this trade work for me. I knew the right direction, but I stupidly pushed the wrong button because I trade with hotkeys a lot. And, when you switch back and forth, it can get a little confusing. And I was just like, I'll make it work, and it's just stupid. You can't, just get out for a $50, $100, whatever it is, just get out right then, So I always say, do your own due diligence. Don't follow me, speak to a licensed financial advisor. You can look at me as one more trading tool and then make your strategy and your goals around one more guy, one more concept. You don't want to just stop with me. You want to learn from everything you can learn out there. Now Tesla's showing a sign of recovery. We've waited through the whole long trade as I've talked, but I had a lesson to teach upon you. So I think this is about to be a done trade, so we'll keep it rolling for now. MACD said it was going down. This buy-sell oscillator said it's going down. Remember, I always wait a couple of minutes. So after all that, all that horrible pain, I got out for 25 bucks. This is where I say, don't get greedy. Just take the money. Now I went back to check on NVIDIA, which I had kept, and I'm just like, you know what? I'm just going to take my money here. I'm just going to take it now. So now that became 104. Now I didn't even look here because I saw it going down in price. So I just didn't want to lose. Now I look, I'm glad I got out because it hit the ATR and started to turn around. So, you know, you look at the sellers here, look at the multi-chart alignment. I'm taking it all and going, hey, that was a good time to get out. Take your profit. It might break the ATR, and then you can get back in again, right? So now I'm checking other stocks. So let's see where I end up. So I headed back to AMD. I saw this consolidation after we left, and I was getting excited that it might be coming back down toward this channel. I'm not sure. Or this could be a new channel. It looks like I'm about to buy, which is surprising, but probably because I'm thinking this is going to hit down here and I'm getting ready to buy. Let's see what happens. Now I'm also looking at the level 2, and I can see right now that's not a bad place to buy. So it looked like it was going to keep going to me right there. Like I said, you're looking higher highs, lower lows. You're looking at this swale, I call it. But, you know, I would have been better off to wait to get in where the support and resistance levels are calling me to get in. So I'm totally ready to add to half share size right down here off this flat top that it broke out. So we call it a flat bottom. But it's banging off the 9 moving average and turning around. So it doesn't look like it's going to give me an advantage of adding to my share size, which would make me more money as it came back up, right? So I am saying to myself, well, I worked so hard for that measly amount of money, and I'm already down over here on this stupid little stock. That's not a little stock, but look at just straight up over here. So nothing telling you this is going to stop. Look at the multi-chart alignment, right? It's trending, right? So your small microcosm of 1 minute reds, you see how the volume dropped with the sellers? It's above the VWAP, the 14. This says it's going up. I have no worries here that this isn't going to recover, you know, or very little, you know, worries. I totally believe with the data that's on the screen, the target high is larger, almost double the target down. I mean, there's nothing that says this trade shouldn't be successful. For a while I was green there. I saw $13 hit here. It's the P&L. That's how many pennies that I've moved on this share size. So no fear here. Just a waiting game. You got to wait it out, you know, and there it goes. So, yeah, when it got 18 toward $20, I'm looking for anything with a 2 in front of it, I think I said. Like, we're looking for $20 plus. Not get over greedy. Just a $20 plus trade if we can get it. The longer it takes to get there, the more worried I am about just maybe I should take any profit, you know. I'm waiting it out. Resting on that even dollar, 174. Keeps breaking back through it, slightly concerning. It's got a tweezer move right before it, 2 tweezer moves. So it's just a... we had a little glitch there. So now we have, now it's making money again as it goes up here. There you go. So that was enough. That was a decent trade there. Let's see what I do next. So I'm about to go back in AMD here based on that support down here. So now we're out of that channel I was talking about, but it seemed like this was making a channel here. So there's a new channel. So I'm channel trading on support and resistance, and I have a fail-safe down here if I need to add to 400 shares. Now you see the magnet working here. As that pulls above the magnet, that could pull it up. I think it already might have done that. I'm not sure. I wasn't watching. And that signifies that the price could go up. So although I got worried right here, the magnet action tells me. So it broke the 9, the 14, and the 20. It's like, hey, dude, why are you going long right here? You're up 77 cents. You're 40 cents off your position, 200 shares. Should you add? Your green is gone over here. You had $30. It's gone now. And this one trade is down far. So it's a little... every trade is worrisome, you know. As I see the volume increase and it's passing the last candle, that's what that blue means. That's not a good sign for me to stay short. So I have to decide now, am I going to add to my position for the recovery? I start to look everywhere. Well, that's a big red candle. Is this going to retrace all the way to the open? It could, except I know that the market's really strong overall. Look down here. I know it's still trending up overall. I know that we're looking at a 1 minute chart and starting to get panicked. Now look what happens in a split second. Like we're right on the verge of everybody getting in to go long. So I tried to get out. You see me right there? 173.86. I see it swaling up, so I hold it. So that ended up being like an $18 trade. It was a decent trade. Let's see what I do next. So it looks like I'm about to get into Apple. It's hitting a flat top here. So I'm trying to decide, do I play it long, or is it going to be a breakdown? Do I watch it break that flat top and get in long because it's so strong up? Or again, two reversal signs at a $0.50 level, is that enough to stop it? I'm starting to look at everything going, no, it looks like it's going to break up, not down. Maybe I'll catch a dip on a break up. So I'm looking for a dip, I think, to ride a break up. So I got it 3 cents below the $0.50, just like right here, right? Thinking that, it's gonna toy with me, but everything says we're going up over here. Going up right here. Target's higher, going up. Everything says up except right here, real tight. So it has to break that, and it'll often bump an area, $0.50, whole dollar, 2, 3, 5, 10 times before it breaks. And then you watch for the volume to increase, to watch the breakout happen as it starts to go up. If you see this volume go higher than the last candle, it's a sure sign it's going to go up. So MACD sending it down, not something I want to see because that's fairly accurate. So we want this candle to close now, so we can go on to the next candle with it going the right direction. Still, overall, everything points to up. You got to just be patient. Don't panic. Wait for the move. I put another channel there just in case on a tweezer. I'm preparing just in case. Just like Mark Douglas says, Trading in the Zone, I have a link to it. You cannot ever trust all the information you have can go against you. You have to be prepared for it to go against you at any moment and have a maximum loss per trade and a maximum loss per day. But you will see that if you get good at reading the indicators and marking out the data, you're going to succeed in a trade as far as the trade going your direction more often than not. The other battle is to succeed in the share size and getting out when you hit your max loss and not making one lose trade equal 10 winning trades, which is what everybody's guilty of, myself included. When you can control that and not get greedy, then you don't have to get greedy on the winning trades. Just get out. 10 cents, 15 cents. Don't get even 5 cents. If it moves that much, I don't mean 5 cents, that's what you make. Like if the price of the stock moved 5 cents and you have 500 shares, you have $25, just a quick pop, 5 cents, bam, So now I'm feeling good about this. It's coming back. Will it break the level or should I just get out at the 50 cents? So I'm trying to decide that. And I'd rather wait for it to break the level. And I'm holding it a little longer for that to happen because I don't want to just make $3. But I'm also concerned that it's going to tap and break right back down. So I went out. I got $14. So not ideal. I'd rather have had 20, but it wasn't too bad. So I'm about to kind of recap, and I know I missed a stock here when I did that. Well, let's see. So we have $14 on Apple, $104 on NVIDIA. So I'm adding those up. And then $49 on AMD. And then I don't know if I go to Tesla. I think I don't go to Tesla. And I didn't show that I had like almost $200. Instead, I think I showed that I only had $150. But I will show you on the actual money being made and the accuracy of the trades. So let's go ahead and switch over to that. So I'm just about to bring in where I keep track of everything on TraderView so we can go over this month and how we're doing. I just wanted to point out, this is where we started today. We were right there at the ATR. Remember when I took that first trade and got out at the ATR? So we're right back where I was getting out, right? And then it came back and tested it again. This is what large caps do. They retrace. So if you can just hold your breath and not panic, most of the time they will come back to your position. Now, figuring out which way the market goes biased based on the different indicators and news and things like that is helpful. That I thought this might go to 176, maybe even 178 before the close of day. That's still entirely possible. So a lot of people are very late to jump on the bandwagon, and or late to take their profit, and then new traders come in. But let's go ahead and get over to see how we are doing here. So this is the count just for day trading for success. I'm using just this specific count on this month. Our goal is $100 average per day. So right now we have 3, 8, 13, 18, 19 trading days. So really anything over $1,900 is successful. Okay, now this day I was off, but then I came back and I traded after you guys. So you didn't get to see me make that small amount with Charlie, but that was on Friday. And then I came back today and made another 130 bucks or 40 bucks with Charlie after I did the RV strategy. She was not over her goal, so we did a little bit more to do that. So you guys, I know a lot of you just keep trading throughout the day and have incredible numbers, the email that I'm getting, even to the thousands of dollars. But remember, our goal is just $100. So when you add that to the end of the month, and when you get to we might make 4K, right, for the month. So that's a really nice house and car payment. Or, maybe it's not enough to have you quit your job, or maybe it is. That's bring home, like $800 a week, after taxes, depending on your tax, what kind of taxes you have. But I mean, I don't know. I'm not even going to get down there. But yeah, it's a hedge to make the beginning of making a really good living if you're doing this well. And remember your max loss, just always keeping track of that, guys. So I hope this was informative. Don't forget to check out all the links under the show, more information. Thanks for watching. Don't forget to set up your alerts so you can trade with me every morning. I can't wait to see you there. So always stay inquisitive, guys. Be careful out there and go green. Hey everybody, this is the professor with Day Trading for Success. So today we have an exciting video. We're going to go over what happened with our live stream today. Don't forget to catch the live streams under the live on this channel. And then we're going to go over how we did for the month, because it's the end of the month, with the style of strategy that I traded throughout the month. Some with the staff here, and a lot of you guys trading along live on YouTube. So we're going to go over those totals. I'm going to go over where I'm going to be trading some next month, and which will be a different channel, and styles of trading that might change. So you're going to want to stick around for that. It should be an exciting video. So I'll be right back.
Welcome to Day Trading for Success. Every morning, join the professor, a former math teacher turned pro trader, and watch him trade live for free, sharing proven strategies, breakthrough indicators, and lessons from essential trading books. The professor is not a licensed financial advisor. Consult a licensed financial advisor before following any demonstrations you see here. Subscribe now and click the notification bell so you never miss a live session.
Hey, welcome back, everybody. So let's start off with saying how we did today. So today we got $489 on CoreWeave, and then, oops, not this. And then we lost, did I get anything on Hood? No, I didn't get anything on Hood. I think it was NVIDIA. And I lost $222. So we ended up with $260 for the day. Our goal was 150, so we'll keep it on the green pretty day, and that's how we did. Now this is a layout that you'll see me trade a lot when I trade live. When I switch over to the other channel where I'm going to be a guest trader, this is going to change. This will not be the same layout. That's some of the stuff we've been discussing that I didn't want to really change it, but we're going to change it, and we're going to go over that a little bit right now, what you should expect to see as I trade on the other channel and help to promote that channel. So I just want to make sure I point out, hopefully most of you are watching this, that I probably will wait until the beginning of next week, the next Monday, before I go over there. So there'll probably be a few more days of live trading on this channel. even during October. And then I'm going to switch over to the other channel where you can see me trade live, and hopefully you'll come along and join me and help that channel and watch some of the videos on that channel. They're supporting me, and I'm a big supporter of them. And then hopefully we'll do really good trading over there, and you can make money over there, right? So remember, I'm not a licensed financial advisor, so you should always seek the advice of someone licensed before you try to follow me or emulate any of the demonstration videos that I give. Trading is risky. Be careful, guys. Okay, so today we ended up pretty darn good. I'm just going to go over with you briefly if you're not used to trading here. It's going to be a short video. We had a catalyst this morning on that, so I typically use Benzinga News Agency. Let me open that up for you. I do have a link to this, and obviously helping me using my links is helping my channel. But you know, I'll have all these different ones that I use, and I get also the news. And this one was right at the top of the way that I have this set up. And it was very, very helpful for me. So if I click right here, it gives all the news on this. So this is a fantastic tool to have. So I have a link on how to become a member. And if you want to become one, which I advise, make sure that you use my link, please. You also have a lounge and pro chat and everything. Pretty much it'll pay for itself the very first day you're trading just by having this information. So I recommend that. Let me go over the month before I go over the strategy. So here's how we did. The traders that traded along with, this is how I did, and I think most of them did pretty well that traded along with me from the feedback I'm getting. I have a person here, Charlie. She handles the chat for the large share size traders. This was a small share size challenge through the month, more or less. So we didn't really do very big share size to get these totals. And she traded along with me, and then she brought in, so we funded an account for her last month, and then she traded along and did really good. And one day she traded momentum. I'm in a studio with a lot of other traders, and she did over 2,500 on that day. So she's doing great. Hopefully she won't quit. And but this is, again, that's somebody else who I know did well anyway. But this is, our goal was 150 a day. So there's a few days we didn't make it here. I can see that looking at this. And it was tight a couple of days. I struggled. I mean, this was a big red day that I struggled and came back from. But I managed to stay green every day and get $4,660. No idea is if you are retired and you're looking for a conservative way to trade where you're fairly safe. This style that I traded is very conservative for people that scalp. I mean, scalping in itself might not be considered conservative. Trading on a 1 minute chart might not be considered conservative. But once you get the right tools and the right layout and you trade in a simulator first, 1 minute seems very, very slow taking the trades. You don't necessarily have to take a trade every minute, but I mean, reading the data, having it in front of your face is just so much better, faster than waiting for the bigger moves, in my opinion, as I say. But if you are retired, this is a great added income. If you're just trying to pay your mortgage or pay a car payment, this is going to do it for you. It might not be a living for everybody, obviously, but certainly even this lower share size can augment you. And then I felt fairly safe. And there was a few days in here that I was off. But I came back, and it ended up being a great month. So, you know, hopefully you'll come along and trade live with me, and you can pick up and learn. The whole idea for this channel, Day Trading for Success, is to help you make a living trading. So let me just show you the essence of now this might change slightly when I'm trading live on the new channel. I will trade the rest of the week this way if you're just picking up on this. But what I do is I mark out Fibonacci levels first on a 5-minute 10-day chart. Sorry, I was just thinking like I can't mark this day because this is what happened today. So we'd have to go for this is the high. So we look for the high and the low on a Fibonacci level. So since the day didn't happen yet, I would have marked it out like this. So 114.57. I left click and then take my finger off the mouse and then get up over this high and then left click again. And now I've got your first Fibonacci level, which is going to create channels and areas where I can trade. As you can see, it broke that level here. So the other thing I do is I do that one more time on a 5-minute. So what I'm trying to do is create historical data support and resistance levels. And Fibonacci is a very well respected historical data. So I think what I did here is I marked it off the pre-market high. So I'll do that again here. So we'll go to the low, which is right here, open up the Fibonacci's and get that low at 1950. And then we'll scan over here. I have to use the wheel after I take my finger off the left. We'll go ahead and mark the high, like right there. And that will be only a 2-day 5-minute. So I'm going to make it a different color so I know that. Now that would have been data that I could have easily marked before the market opened. And now it's giving me additional channels. So now we have, let's open up the 10-day, and we can see were any of those levels respected as the day started to trade on the fib levels. As you can see, they were clearly respected. It came back and hit that level, came back and hit it again. It's right there right now. It banked off this one a few times, hit it here. Those are just the Fibonacci levels. Typically, and this is why support and resistance are so important, to at least make a note of them. You have to use them as guidelines only. They're guidelines because you can't trust them 100%. Now, right now, if you watch the video that I put out yesterday, you can get a free scanner and you can get this indicator for totally free. I'm giving them away for 48 hours. This has got the range of the last 5 candles, which when I trade is very important to look at, the average range of those candles. And then this gives you a target, like if you were to go in long, that's when you should jump out. If you're going to go in short, that's what you jump out. That's how many pennies. This is your average spread, information that I look at all the time. This is an indicator that's very, very handy. I have a whole bunch of other custom indicators that are very handy. You don't need these to trade with me or to trade on your own. I find them very helpful. I code for Thinkorswim on the Charles Schwab brokerage. And I get hired by prop firms to do custom coding for indicators. And a lot of those are available, and I'll show you where you can get those in just a minute. And I have a link to them right on my, it would be great if you go through my, excuse me, my channel, use my link, because then I get some help. You can help me out of it, but help me out a bit. But here is the Scalp Pro meter, which is very, very handy. It shows what's going on inside the candles. When you zoom into a 1-minute chart, which I trade on, you can really see the data more clearly. Every gray line is a half and whole dollar. That's trading with the crowd, and that white arrow is the MACD indicator, which is very, very accurate. If you just, when you see it, just go the direction of the arrow for a short period of time. It really works out for you. But anyway, at the end of this video, there'll be a link to go to the next video that explains every single one of these indicators. The other thing you would mark on this to help trade this every single day is historical data, besides the Fibonacci levels. And what that is just creating support and resistance lines, like just drawing a line. The problem is that we are out of everything. We're way out of everything, right? I mean, there's a little area here. Oh, actually, there is some area right here. So we could look at this, and no, we're not, right? Because we're way up here. I'm just trying to see where we are here. Yeah, I'm sorry, we're way up here. So there is no historical data. We're in the stratosphere. We're in the nosebleed area. So, but normally I would go back and where the stock stopped and abruptly turned around, I would make a note of those areas and mark them, because there's a high probability it will stop there again, at least for a brief period of time, maybe consolidate before it moves on. So having those historical data levels marked out is sort of the essence of the entire strategy that I trade here for this last month. So you would you can see from reading these, how that would work. Right here in the middle is what we call the market magnet. That's what those red arrows are. There's the actual magnet where price action is drawn to, and the green arrows are half the likelihood up and down, like the middle range. So right now it's below it, so it keeps drawing it back up, drawing it back up. It hit the fib and turned around down here. This would have been fairly easy to call these trades, particularly right in this area to go long. It's still going long. Now, if you think about it, you're always watching the news. So I've got a 1 minute, I've got the news. Down here I have a day. that shows these fib on a day. Each one of these equals a day. You've got your ATR levels, another fantastic indicator. This is a free indicator over at the $1 Million Margin Club you could pick up. And then the active trader, the level 2, a 15-minute chart, 5-minute, another 5-minute. This is the 30-minute, a 1 hour, and a 4-hour chart, all minimized in case I need to open them to do some further strategies and support and resistance levels. As you can see, it banked off this market magnet low level again, which is also the 50-cent level, and turned around. So it's created a channel here. You go short, you go long. You go short, you go long. Becomes very, very easy to call these trades. This is when other candles are about to change, these vertical lines, like we just passed a 15-minute. This tells you what directions they were. So a lot of people only trade those time frames. Just all these tricks, guys, that just make it so much easier to profit. So you can expect to see that kind of stuff. So now we did good this month. Now this is where I'm going to be trading. And some of you probably figured that out already. This is another YouTube channel called the $1 Million Margin Club. Okay, and they do a lot of the strategy books that I support, and then they sell a lot of the indicators that I make, and they have a lot of cool videos here, and they have a whole toolbox series I would recommend watching about all these different indicators. Day Trading Volume 1 started over there years and years ago. This is Trading the Open with all the breakouts. And then you have the John Bull Bear videos, which are fun. You can predict. And then they hired professional actors and have commercials. This is a real company, not like me. So I know they just came out with a new color version of their books too. So what's going to be happening over here, if you're still with me, there's going to be like a giveaway every day I'm over there trading. There's going to be some kind of a giveaway of their products, which is one of the things that I absolutely, I don't want to call it demand, but I insisted on in order to go over there, that I want you guys to benefit if you come over and benefit their channel by watching it. So please, if you come over, prove to me that giving away free stuff to you every day is a really cool thing to do. And watch their, all you got to do is watch their videos. You don't even have to buy the products. It would be good if you bought some of their products, but watching their videos is what we're trying to do, is to build up the subscribers and get them monetized and just make it a more profitable channel. So anything you can do to help them get there. They sell books, they sell custom indicators. That's what they do, and I'm going to help them do that. And you guys supporting me can help them, and I'm going to make sure they give you free stuff. Now we'll go over some of their products, so expect that a little bit like a commercial, sorry, a little bit while I'm over there, but hopefully it'll be beneficial for you guys. So anyway, that's where you can find me, okay? So the $1 Million Margin Club, that is their channel, right? Now there's a direct link on my channel to go over there because I'm their brand ambassador, they call me. So the only other people, I'm also a partner with the Benzinga, which I just showed you. And I'm probably going to be doing some other big companies that I believe in. There's all these negotiations. I kid you not, I get 25 emails a week wanting me to co-sponsor people, and I just turn everybody down. I don't even have the time to research if it's nothing personal these people, but unless I'm using the product or believe in the product, I'm not going to do it. So, but anyway, we haven't decided exactly the strategy I'm going to be trading with them. They want me to do right out of the books, and I don't really want to do right out of the books, but certainly some of that's going to be going on. So we'll see how that goes. I know that's been very profitable, and that's what's been delaying me go over there. Is two things: exactly what I'm trading when I go there, because I want to keep it kind of freelance. I don't want people to get in trouble and trade 1,000 and 2,000 shares, even though I'm on another channel. And I'm still going to have the same, I'm not a licensed financial advisor, but I want to make sure that you get free stuff. So I want to be able to be free how I want to trade, and I want to make sure you guys get free stuff. So you should definitely come over to get free stuff, which is no longer called swag. I guess it's called merch. That's the date. That's the title now, merch. So come over and get merch, and that won't be until Monday of next week. Now, it might be some days I'm sick or something happened, but for the most part, it's planned on Monday, the beginning of Monday next week. That date is, what is that date? That date next week on Monday is that's Labor Day. That's last month. Monday is the 6th. No, that wouldn't be right. It would be the 13th. Is that right? What is today? No, it's the 6th. I'm sorry. It's the 6th. So Monday the 6th. Aren't we glad I made that easy? Monday the 6th is when you can expect me to be over there unless something weird happens, and I would announce it on my channel. Okay, guys. I hope this was helpful to you. Make sure you check out all my links. And be careful out there. I'll see most of you tomorrow morning. There is no charge to come trade with me. So check it out. You might like the style. And go green out there, guys. See you soon. Hey everybody, this is the professor with Day Trading for Success. Haven't been doing any of the recaps lately. I'm going to show you on the Trader View how we've been doing. And I am trading live most mornings. If you set your alerts on, you should see me come on and you can trade along live with me for free. So as a lot of people say, follow me. But just be careful. Don't do that too. don't. You're responsible for your own trades. I am not a licensed financial advisor. And here's a disclaimer about that. And there's also one on every video. I do try to follow a basic day trading plan. You can see it right here. And I recommend that you make a plan for yourself. Some of the things that I do differently, besides just the basic stuff like have a max loss per trade, a max loss per day, I only enter in 25% to 50% of my position. And then if the price action goes against me, sometimes I will add as it starts going back in the right direction, not just randomly add, or there's real support or resistance levels depending on whether I'm going short or long. So that's the way I trade, and you need to find the way that you trade. You need to log. If you're nervous and your hands are shaking, that means your share size is too high. And what I mean by log, that means write down your trades. Think about why you took them, why you won, why you lost, what were you thinking, what was the strategy. Have a plan for every trade. When you're going to get in, when you're going to get out, and then wait. Trading is very boring. Even when you're scalping on a 1-minute chart, you're waiting a lot of the time. You'll see on my videos that I'm waiting for the setup, and then I get in. 80 to 90% of the time, it works in my favor. But then if it doesn't, you've got to remember those max losses. You've got to get out and follow your rules. That's the difference between the 5% and the 95% loser. 5% winners, 95% losers. So keep that in mind. So coming up on this video, you can expect to see some live trading after the stream. If you want to see the stream, go to live on this channel. You see all the streaming videos. So you'll see this morning's stream. And then I traded more after that stream ended, and I got Tesla up to 245, and I ended up making with our staff here a little over 150 for the day. So stick around for that coming up in just a minute, and I'll start with an update of how we're doing this month, because we're doing pretty good this month following the simple scalping style. So stick around, guys. I'll be right back. Hey, welcome back, everybody. So, yeah, like I was saying, the scalping style that we have has done this so far. So that's pretty darn good. So one of the days you didn't see me, some of these days you didn't see me live stream a lot. I jumped on later in the afternoon with this had very risky. I went right in with the max share size of Tesla that you could follow on the PDT rule, which was 250 shares of that stock. And I just did a few trades and did some big money on that day. The rest of these days we struggled along, and we're up to $4,000 for the month. So, most of this you can see on the live stream, some on a recap, some not at all. But most of these you see me trading live. And of course, this is how it gets reported through Charles Schwab on Thinkorswim over to TraderView. So you can see the actual real numbers at the end of the day. And my accuracy is still way up there, well over 80%. I like to trade 90% with this newer strategy with a lower share size. Believe it or not, my accuracy is worse with a lower share size. I think I'm still not trading the way I normally trade, that made me, famous as the quarterback, as calling trades for other traders. I'm still worried about people that are watching me stream, and I'm trading a little different, more conservatively, and I think that makes me become less accurate. But overall, it's been a great month. What's going to come up next that you'll see, I'm going to start the clip right after this that shows how I ended the day trading to get to this amount. So you can see the style of trading. You hear the live talk that I'm talking with other traders. I was trading along with traders that were trading. One was trading as much as 3,000 shares on the same calls that I was making. Sometimes that affects the price action when there's so many traders trading with me, ranging from 500 to 3,000 shares, that you might actually front run what I'm calling. And Zoom has no delay. So I have taken into account over time, if I call a price level, I usually wait a beat to see how the front runners, and they know I do this, how they're going to affect that price. I still think it's the right move, but they may make my entry slightly different. And that's a hard thing to explain or quantify with the viewers, but it is possible, even with a mega cap stock, when the volume is low enough. See, now we're down to 95,000. When you suddenly have 50,000 shares drop in at a certain price, it can manipulate the price action. So trading with people that are registered as large share size traders, and they have alternative routing for the way that their orders are filled. There's Charles Schwab's own dark pools with their own market maker. It's definitely different than how I stream. So just if you're confused by that, that's why. People that trade on Zoom with me are all registered large share size traders. And you can do that too if you prove that you can trade that large a share size. So it's a different tax status you have. It's all kinds of different things. And it does affect the way I trade. So, but overall, green is green. The style of scalping works. And that's basically what I teach. And let me just show you basically what that is before I go into the clip. So this is the typical layout that I have, and I'll show you how I set it up. Every morning I have custom scanners that are available for you guys, and I show how I scan for the stocks. And we're in the middle of changing stuff because of the new rule that's changed. It's about to change because FINRA went ahead and passed that they're going to lower the PDT down from 25K down to 2K. So sometime in the next 30, 60, 90 days, probably before the end of the year, that'll come into effect and it's going to change everything. But with that in mind, we are looking for sort of different stocks that can be more accessible for people, which is kind of weird because we were trading large cap. But if you had made the 25,000 PDT, that means you could margin up to 100K and you could afford 100, 200, even 500 shares of some of the biggest stocks out there. And that's what we were trading based on Day Trading Volume 1, which I have a link to, which is the one that changed lives back in 2022. And it's still one of the most widely traded strategies to this day. Everybody has their own strategy, obviously, guys. But let's go into what just before we play the clip of the live trading before the end of the day, before the end of the trading session, let me just show you how every morning, besides finding the stocks, how I would set them up based on this style of scalping. 5-minute, 10-day chart. Auto zoom out. So I have you can see the high there and the low is over here. Okay, so we're going to mark Fibonacci retracements. So I'll click the 60-cent level there. I'm going to drag this up here and just click it because I'm going to get to the high over here. Now, there's all kinds of ways to set up Fibonacci levels where you're trading off the percentages and when they're more likely to turn around. That is not the case with large mega cap trading from Day Trading Volume 1. You're creating channels. So I'm looking for 449.90. I'm going to just change this price right here to 449.90. This will go pretty quick. I'll just show you a quick setup here. All right, now I've created our first channel that we would look at, ceiling, floor. Just that simple. Historical data. Fibs are about as old as historical data as you can get. Ceiling, floor, creating a channel. If it moves down, it's channel hopped. You have a new ceiling and a new floor. Okay, but we want to make it even easier. That's a wide gap. That's almost over $4 right there, right? You want to make sure you can zero in on when to take a trade less than $4 apart. So now let's open a 2-day 5-minute chart, and we're going to do Fibonacci levels again. So there's the high low on a 2-day. So we mark it down here, 421.57. I'm looking off to the right, trying to get the price right. But there we go. But it's very sensitive. So now 449.90. And there we go. I'm going to make this a different color so I know it's a 2-day channel, a 2-day ceiling and floors, and mark those right there. Okay. So now we have shortened our channels up a bit. And where you see those is on a 1-minute chart. That's where you're trading, right, is on a 1-minute chart. So these are all whole and half dollar levels. That's a script you can get. I have a link to it. You can mark these yourself. This just does it on every stock instantly, and that is where the crowd trades. So that's part of the strategy because you're trying to trade with the crowd. I also have a lot of custom indicators. I'm not going to go on a big deep thing about the custom indicators, but I will say at the end of this video you should watch one that's all about the difference the way pro traders trade compared to just the average traders. And they use not only strategies and scalping strategies, but they use indicators. So be careful listening to just any old person on the internet said that indicators are useless. They're usually selling a course or something. But yeah, all indicators is it's helping you see historical data, patterns. That's all. They're helping you recognize patterns. That's it. That's the whole entire mystery of an indicator. So which indicator you think gives you the best historical data? I mean, that's completely up to you, as you start to trade and back test and log your trades and all that. But that's it. That's the mystery. So can you see all that data without an indicator? Some traders can. Some traders see the data that they only want to see without any indicator. But prop firms that have me do coding for their new traders, they want all the chance taken out of it. So when you see a white arrow that's telling you the MACD is saying it's going to go down, you just go short. See how accurate it is? You just go long. You don't have to figure anything else out, right? So it's a good training wheels sort of for them. But let's go back to this 5-minute, 10-day chart very briefly. And we'll look to see now, here we have tighter channels. You can see how it was respected here. Boom, 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 boom. Now it's into this channel. A channel hopped down here, and then it came back up. It hit here, boom, boom, boom. Didn't quite make it to the top. How could we make that even easier to decide to help us say, when is that going to turn around? Well, you could mark it right there in the middle of the day. That's intraday levels, and a lot of those are respected. But it's better to go back and see. Now, we don't know this is going to happen yet. So let's just pretend we don't see that, right? Let's just get that off the screen, right? That's all we have, right? So now we're looking at historical data. We know that the price range is about here. So let's look to see where the stock stopped and abruptly turned around in the last previous 10 days. Well, right there, that was a turnaround. It might do that again, right? Look at this, completely turned around right there. It might do that again. Then we look right here, look at that. Before it dropped off, it was like, that's a serious resistance. That's right at the fib level, but let's mark it. This one's also almost made the fib, but didn't. So we would sort of smooth it out near the bodies and mark that, right? Now we're marking more. You might not want this many levels, but look at that. Look how many times that level was respected across that day, right? Now the idea is that since it was respecting it right here many times, maybe it's going to do that again. That's a pattern. That's it. It's that simple. I see all these videos that say keep it simple and all that, but it's like there's cherry picking a price level and saying when it gets here, go here. This lets you set it up every day with patterns on any stock. It's not cherry picked. You set it up, you look at it, and it might be respected. They're guidelines. That's it. They're guidelines. Again, some people will say, you don't need to do that. I'm going to know how to do it. Well, maybe they do know. I always say the best trader still hasn't been found. He's still out there somewhere. This is another level, but it's already been picked up right there. See how it came back and respected, so we're consolidated. So let's get a look at the 1 minute and see what did that do for us? Well, look at that channel we made. We didn't know it was going to be there, right? Look at how that tweezer move was made, and it so respected that level right there. So there you go, guys. I mean, that alone, that one level alone was the reason to mark it out, just for that one level. So now we marked, I think, a bunch up here, right? Because we didn't know the price was going to drop down there. But as the day opens, then you can go back and check for more historical data to see like, hey, you know, it's trading down here. Is there maybe some levels now that I know it's down here that I might want to mark that I didn't mark? And there sure as heck are. Look at this one here. Okay, so actually that's already picked up. We did that. But here's one where it stopped dead and turned around. Look at it, if you smooth across all that. Well, let's go further back and see if it's picked up at all. Again, it got smoothed here and there. So that's a real serious level right there, right? And you might want to go there to that one. And then I usually don't do post and pre-market. They're not as strong. If I'm desperate, I might do that. But as you can see, you know, you gave us more levels to look at. This gave us more levels to look at as the price gets nearer. Here's another one. Now, you just might respect these. I can see right now that came into serious play where it dipped, stopped, and turned and went right back up. What made it do that? There's liquidity pools there. There's all kinds of things going on. You don't need to know. You don't need to figure it out, right? Because they're there for you. So, you see them now and you go like, hey, that might be respected. These levels might be a place, you might be a winner. Nothing's definite ever. And anybody who says it's definite is selling you something, most likely. But now let's look to see how it tightened it up for us. And how those levels might have been respected. We still didn't get any good levels. There's some down here as we go on through the day here, but they're up here. So you've got a channel right here, this Fibonacci here, and then this historical data, which really you might as well call at the even dollar, 430. This gave you your ceiling and your floor. And then in between, the indicators help you with the whole and half dollars. They help you. So it tightened up that, not much. Tesla's a tough one. But the next thing you would do if you're really getting down and dirty into marking the levels and you're trying to do what I trade is like a recoil strategy where you're waiting to get in and you're waiting for the recoil. Like just look at one of these, either the bid or the ask. You look at a price here, like it was 20 cents, right? So if you got in long at 20 cents and it already went up to 19 cents, I call that like it went down, it recoiled up, get out. You don't wait. This actually gives you a target. This is another like a training wheels for prop firm traders if you don't understand level 2 on larger mega cap, which is different than looking at the share size, looking for it to bind up like in momentum. This is a completely different way to read that you should watch the videos because it works. It works. I mean, I have like 400 videos and a lot of them are the RV strategy. So, which is kind of what this scalping is taken after. But my point is you're in and out in 10 to 20 cents. First, you figure out how far is it really moving? And then you look for the dip based on down and dirty up close data. So I might just call that 50-cent line a line. I might say, well, look, it could dip down that far, the $0.25. So if I go in long down here as it hits here to ride it back up, I know that if it breaks that level, we're hitting new territory, I might want to get out. I set my max loss down here, right? I might actually let it go past it and wait for it to break back up through and then add to my share size knowing it's going the right way and I can make more money or get out faster because my price points become better. Different ways to trade, different, level and patience and risk. You have to see what's good for you. You might want to get out at 4 cents and 5 cents with 100 shares or 50 shares. And just slowly build your $50 for the day or $100 for the day or $500 for the day. I try to get 5,000 a day. So, I started off with much less than that though, like $100 seemed impossible when I first started to scalp and got away from swing trading. So again, that's the basic strategy though, but again, the risk level's up to you is what I mean to say. But you can tighten up this level. You can see how it's swaling in here. So you have a $0.50 here, right, roughly, and you have a $0.50 here, roughly, and then you've got your other major channels based on better historical data to back up your move. If it breaks through that, you're hitting new ground. And I'm not going to break into every single indicator here and how they can really help you, but like I said, look at the video after this. But guys, that's the basic strategy. You can see me streaming for right now, although I'll be changing around different strategies. So don't forget to tune in and watch it and get ready to watch this next clip. You'll see it in action. Okay, guys, thanks for tuning in. All right, so I'm back on. Just had to do something. I made a quick trade there. and got up to 182 here.
Reports that he is not rushing decision due to U.S. trade tensions and criticism. That's from Reuters sources. GOO.
That was a short I took off of this area right here, which is not, that's a intraday level, so it's not really, I mean, it seems to be respecting it, but I wouldn't trust it for very long here, so. But the 428 I will. I'll go short off the 428 to try to catch a recoil on 100 shares and be prepared to add to my share size up to 200 if there's an opportunity to do so. Tried to get in, got in. It hurt me right away. To add to my share size here, I'm going to have to do market. Oops. So, holding that even dollar, which is not great news for me because I'm right below it. I thought I got it at the even dollar. I see now that I didn't. So it gave me a really bad fill on the, when I hit the ask, unfortunately. So that's going to hurt my position here. So sometimes when you get a bad position, it's better just to take the loss right away. I'm not doing that. I'm actually going to add to it up here. So it's 57. 60. I'm going to do it off that 70 level. So now I'm up to 24 now, 24 cents, and I'm looking to buy out. Oh, it's hurting me. It's hurting me. Really hoping it rejects off that fib, or it's going to be a bad trade. My max share size, I believe I can go ahead and get 50 shares more in. Yep, I did. So I'm up to 250 now, and I'm at 37 cents and really risking it by adding to the share size, waiting for the dip off the VWAP. I want to see a big dip off the VWAP. I'm at 37 cents here, but it's getting closer to my position. But that's 250 shares, so it's a bigger risk with Tesla. You can move $1 in a split second. So I'm looking for this to go down right now and not keep going up. I mean, I can hold it a little longer off this level, but it starts to get really painful if it doesn't go down. So yeah, it's not going down. So it's going to get, this could put me in the red. I'm okay. I'll hold it into the red. This is a different kind of trading where I'm not streaming with you guys. But I am staying within the rules of the PDT, but I'm not trading quite as conservative. So you can judge whether it's something you want to try to do or not. If I go really red, you're probably going to pick not. But if it works out really well, you go like, damn, I should just trade. Why doesn't he show that all the time? Because you just don't know, guys. That's the thing. You just don't know. So now when I do get out, you know, I want to see this strong to hit the bid. You know, I can't see this nonsense because I want the bid to fill. And if it's doing really up and down right at my position, it could be. So there was a profit for a brief second. But, you know, I'm looking for something a little bigger now that I have this many shares like that. Let's see if it gets it. Right there. It's right there. It almost picked me up, but it didn't. Swailing down. Here it goes. That should get me. I'm right at the level, but it didn't pick me. Well, you wonder sometimes, right? The games they play, you just wonder. But that broke 200 on this, so nice and green. Let's get back down to 100 shares here. So going long off that same level again is tempting. It did break it though, right? So if I go long and I add, which is far more risky, you haven't been seeing me do that, I have a chance for it to recover. So we're way, this is where it was hitting 26. This is a little over $1 down where it reversed before. If I get in now at this level, which is tempting, but I'm waiting to see if it's going to break it. I want to see it break it, really, is what I want to see it do. And I'd love to go long from down here, but I don't want to go long right on this level right now. So there's a break at the 50 cents. I already could have done a little trade there. I say I want to see it break it, but I'm not confident enough to go short. So there's always a mixed feeling here. There's people trading alongside me right now with 1,000 to 2,000 shares, so I have to take that into consideration, as it might slightly front run my position if 20 people are trading 2,000 shares all in a split second when you only have that kind of volume. So I have to think about that as I'm trading, and I take that into account, that it may actually influence. So it's really hard with a stock like this, but it's possible. So there's our ATR, low, the whole ATR, not the RV ATR. So we're really near a support level here. And a couple of times it didn't quite make it. And then this, it did finally make it and break it. So we'll go, there it goes. So now it's down to the fib at 27 even for a second there. And I'm getting more interested in testing it long here. Already could have gone 50 cents on there, huh? Or 40 cents anyway. Yep. We just didn't grab it quick enough. The way it moved down, it looked like it might do a second pound. Yep, there it goes. Well, that's too bad. I missed that move, and I'm kind of afraid to chase it up. So I would tend to go for a short up here again. I have to wait this out, guys. Every time it does this, then I have to, recalibrate, like, where are we moving in here? Is it about to do two more of those? So I have to just take a breath and see, is it going to start giving us some consolidation, and then you try to catch that move the right way, or just trade the consolidation on the recoils. The way I move this chart around, it reminds me I was very young and driving stick shifts for the first time. And I just was at the, whenever it came to a stoplight or something, I constantly worked the gear level to make sure it was in neutral and then first, so I'm ready to go on first, just constantly. And I was selling, I already had businesses then, and I was selling a boat to a guy from Swedish guy, if he happens to be listening. And he finally reached over and he put his hand on top of my hand on the gear shift and just said, like, "What are you doing? Stop it," in his Swedish accent. "You're in first gear." I'm like, "Yeah, okay, all right, man." It's like, "You're wearing out your gearbox, just moving it around." Okay. Calm down. It's my friggin' car. But I move the chart constantly, like up and down, and it kind of reminds, like, you're just fidgeting. What are you doing? It's not giving me more data, right? It's just, you get bored. That's the way I don't take a trade so much. I look, think about it. Look at level 2. Think about it. What are the indicators saying? Think about it. Move it. It slows me down to move this around, I guess. So it's really respecting that fib. This is the fourth time that it's hit it. Hit it here too and turned around. Hit it to, so 4, 5, 6 times. It broke it a long time ago. Making it more likely to go in here, huh? At least you'd get some recoil, right? There's 30 cents. Can't short here, though. Don't want to short there. The crowd has spoken. This is the level they want it to consolidate in right now, right here. So we'll short way the heck up there. 27.70. Yeah, that's way down here, actually. That's way below these. 430 is really the area to be a safer short, right? Well, no, this is, 431 right there. This is the 430. So this is stair-stepping down. Hey, we broke it. And we break it lower than that. Tempting. Give me a big flush there. Then I can get you on the recoil. Big flush. Get all the way down to 26.50. All in a split second. 94, 93. Nope. Nope. It's still respecting that $427 amount there. It's not going up enough to get in there. It's only going up like 8 to 10 cents. It's hard to catch that on a recoil. Need a bigger dip. It's 85 cents now, finally. 82. You can see Risk Oscillator said it's going to turn around, so 68. That could have been it there at the 68. Let me see if there's 68 again. I'm looking at the bid, guys, down there. Could have got a 20-cent trade there. $57. There we go. I'll try that. And I get it at 55. It's got to pick me up soon, or I'm out. No, it picked me up. Damn. Maybe it's not a damn. I didn't like the way it was continuing to go down. There we go. So I got some money there. Yeah, I picked it up there, got it on the recoil. I don't know what my exact price was, but I got some money there. But it's only 100 shares now, so. You guys are trading 1,000 shares. I can't trade it in this account. I can't. Without switching accounts, I can't go up with you. What's our high? So one of you has 3,000 shares. See? So you're making way bigger money, obviously. So a couple of you are at 500 shares. Wow. She already made over 15K, 12K, 8K, 6K. Yeah, Tesla's doing good for everybody. Charlie's right there. Yeah, right there, 175 bucks green. Looking good. You can do it, Charlie. You got it. We're going to make big money today. Let's get a dip down here. See if we can break the 50 cent. Gave us a 26 cent recoil already off that level I did not capture. Think of it like a snake striking. Strike. Whoa. I'll take that. What did I get that at? 27. I think that's really good, but God knows if it keeps flushing. Let's see if we can get a bigger pullback there. I got it at 27. Recoil a little higher than that. Let's get back up to where those levels we were a second ago. 27. That's 34 on the ask. Nope, it's dipping down. Not good. I will definitely add to this if it keeps dipping. So I'll ask. So 26 even would be a spot, you would think. 426. Yep, I could have got it there for a second. No, I want to go long. Oh my God, what am I doing? I was about to thinking I was doubling down, and there we go. We got a good trade. I sold. Well, you saw me see. Okay. Oh, well, we could have made more. I was a little worried about it continuing to dip there, so I got ahead and got out on that. Yeah, as you see, it's going back down. But I do think 26 is a level to, 426 would be a level to try again, the way it's kind of stalled there, to try to go long off that 26. Let's see if we can grab it down there. I'm doing the bid to make sure I really get it near it. No, it's already gone up 50 cents from that level, which is $50 with this share size. That's how fast that can happen. Where do we go? Short now. Not doing the reverse on this one. You guys have reverse up, most of you, right? Yep. They're all using reverse. Okay. You can activate that on your, if you're watching this, you can activate the reverse button. It's just a little, which just takes the same share size and goes the opposite direction when you get out. It gets you out and then moves you the opposite direction all at the same time. Reverse. But you do get slippage on both sides. It's definitely an advanced way to trade. The logic where I started a movement about the reverse on a 1 minute where people were like, he's crazy. The thing is, if you think the price is going to stop going your way, then why aren't you, that means it's going the other way, right? So why aren't you believing in yourself? That's why I do reverse. It does not work all the time. And then you do what you call manage a bad position. So these are just different ways to trade. Now, if you, this is just a recap video and you didn't see the whole stream, I talked early this morning that FINRA, they voted in that the new PDT is down to 2,000. So now the SEC, they need all the paperwork and everything, and that's going to change the game, guys. That's why I was trading a lower share size, a lower price stock today. I didn't do very well with it early on, but we made our money back. But everything's going to change. So I've talked to the $1 Million Margin Club, who writes strategy books, like, please make a strategy book that's going to encompass the new lower PDT for people that can really grow their account with much smaller amounts of money. I think that the RV strategy from Day Trading Volume 1 can be used for the most part, but I'm going to be back testing to see if the same fib levels, same support and resistance levels based on historical data, if they actually work on, you know, stocks that are ranging from like $10 to $50 or $10 to $75, where you can, if you only have $2,000 in your account, you can margin up to 8,000, or if you have, you know, 5,000, you can margin up to 20,000. 5,000 would be enough to make you a living with the right strategy. You know, that's all you need. Then you just add money to your account and you can go higher and higher in share size. Obviously, you want to trade in a simulator. I'm not a licensed financial advisor. Remember that. Seek the advice of someone licensed. Let me get this message down here before you follow anything I say here, okay? So remember that, guys. All right, so we're good for the day with Charlie. She's made her 150. I was just looking to see if there was anything else I could do before I jump to the higher share size, but all right, she's good to go. She wants to stop now. All right, so guys, thanks for watching. This will be the recap of the stream. I'll give you an update about how we're doing on the account. If you didn't catch my stream earlier, I haven't been on live streaming. I've still been kind of trading due to some, you know, bad news and stuff that's been going on here regarding my personal life is kind of snafu'd in my schedule and changed when I might trade and not being very verbal about my trades, not calling them, just going in and trading. When you're not in a good mood, you know, it's hard to be exuberant about calling trades for everybody. So that's pretty much the gist of it, but I will go into more detail as time goes on about what actually happened. But it's not really about my trading, but it does involve it in a way. And anyway, and then we have all these plans for next year that we're going to be gearing up to doing things a bit differently to expose people to better ways to make a living, you know, that they can make a living easier. The PDT being changed, hopefully it'll be completely figured out by the first of the year, is going to change. It's a whole new world. That's why I was saying the $1 Million Margin Club needs to do a new strategy book based on that. Stocks that are cheaper, not large caps. So, all right, guys, thanks for watching. Be careful out there and go green, and I'll see you soon. Don't forget, check for me live every morning. I might not be as consistent, but just put your alerts on and you can see if you want to trade along live with me. Hey everyone, this is Professor with Day Trading for Success. Stick around. I've got an exciting video to show you about how we're doing in our challenge this month. I'll be right back. So welcome back, everybody. This is the Professor again with Day Trading for Success. So I've got open here Trader View. This is where I report to from Charles Schwab and Thinkorswim. Every day, every morning, we bring back over the trades that we traded, and I'll show you on the actual platform as well. So right now, we're just showing how to scalp. I trade live every single morning. You can come over and trade along with me. There is no membership fee. There's nothing. I don't ask for your email, nothing. Just come over and watch and root for me, and hopefully root for yourself. Obviously, I'm not a licensed financial advisor, so you should seek the advice of someone licensed before you try to emulate me. Trading is risky, so be careful. Trade in a simulator, and only with money you can afford to lose. Anyway, today this month we started out wanting to make probably $150 a day. We had some of the staff trading with us. I'm trading in the studio here, and today was a pretty good day. We did over 300, as you can see here. Labor Day was off, so we have 7 days of trading so far, and we're averaging $207 a day. So about $50 more than what is my minimum that I go for each day. So it looks like this is going to be over $1,000 this week. So if you just compute that, I mean, if you're trading 20 days and you're making $200 a day, you're making $4,000 a month towards your expenses with only trading about an hour a day on a very, very conservative trading. It's very, unless you just don't get out, you don't pay attention to your max loss, and I put out rules all the time on what to do. You should make your own, but this is basically how I trade. Now, this comes from a swing trading mentality. All right, but following these steps, the one that is outside the norm of what you would normally hear is that you would add to your position. And I learned that from swing trading way back when, where you're waiting to get in at a certain dip, and sometimes it looks like it's not going to get there, so you're like, well, I'm going to get in some of my position in now above the dip, and then I'll scale in the full position as it hits it, and then I have a max loss down there if it keeps going against me. But for the most part, you're getting your max position in that case would be the floor, like where you intended to enter all the shares at once, but you're afraid it might turn around and go the other way, assuming you're trading long here. And that's why swing traders will scale into the position. They'll also scale out as they go out. In this case, the way that I scalp, which is a little bit different, I put far much risk in my scalping. I only go in 25% of my position. In 80 to 85% of my trades never even exceed that. They just stay there, and then I get out real quick and make some money. Some money is better than no money. I'm not going for big money. Scalping, you're in and out. It's the fastest way to day trade. You're in and out in just a few seconds, maybe a minute. You could get stuck and you wait, but I just get in and out. I don't get greedy. $10, $20 a trade, and then you trade 10, 20 times, and you've got a lot of money in less than an hour, and you've never really risked too much to do that. Not saying that I haven't lost trades. I certainly do, but my average runs, I think this month it's a little bit below 90. We'll go over that in a minute, 90%, which if you talk to most scalpers, that's unheard of, that type of accuracy. It's not me, though. What it is that basically following support and resistance historical data, and then watching the price flow by using indicators to do that. That's how I trade. You might want to trade differently. But back to this, if the price is going against it, like you get in and it's going down instead of up, if you're going long, right, and it keeps going down, you don't want to just add to your position so you get a better price point. No, absolutely not. That would be the wrong way to do it. But if it's going down and then it shows signs that it's going to reverse back to your position, or even maybe further, it's gone down and now it's going back up, right, on your chart. When you see definitively that it's going up, if there's such a thing, right? It's just probabilities, guys. That's all we have here is what's the probability here. But then you add as it goes up, and you've made a better price. You're not getting the best price because you didn't get it at the bottom. You waited for it to turn around and show signs of full recovery. Then it's like, hey, why not go in for a higher share size? You can get out quicker, or you can make more money. But all these other things are really things that any trader should follow, log every day. If your hands are shaking, you need to lower your share size. If you're sweating, if you're nervous, if you can't hold into the move that you predicted, because you're making a day trading plan, remember. And if you can't, every trade is its own mini plan. You should see, like, here's where I want to get in, here's where I want to get out, here's my maximum loss. So you have lots and lots of videos on that. But if you can't wait for that, that means your share size is too high. That means you're too afraid, and that you can't trade if you're trading completely out of fear. right? You want to trade out of confidence. So anyway, you should make your own rules to follow, but this is, other than the add to your position, these are pretty good rules for anybody to follow going along. And I'll just flash this up while I'm here. Remember, I am not a licensed financial advisor, guys, so please read that and be careful with real money. A lot of people just go in with one share size, just one share size until they get, or they trade in the simulator, right? Today we had a pretty good mover. And let me go into the monitor here. So here's the stocks that I traded today. CoreWeave, Hood, Robin Hood, and then Oracle, right? I came back on after the stream and did a few more bucks on Oracle. Got us up to I think it was at 218 when I stopped. This was just a couple of trades more, and I got it up here. So that worked out pretty well there. Let me go back to let me see if I can, I think I clicked off before I showed the accuracy. So let me get this tab reopened over here. And we can get into the accuracy of, because I never looked at that. So here was the month we were open right there. And then now let me go into the report so you can see how I've traded for this month. So here's my accuracy trade. So only 80% today, 92% yesterday, 76% back there, 90% there, 73% there, 80% here, and 90. So if I did a quick assessment here, I'm only running at about 82 to 84% on an average over those days. So that's down for me. Normally I'm higher. I have been getting out more often than I normally would so that it's easier for people to follow around with me, like take the losses much lower than I normally would, or I would hold into them and might make them a swing trade, or I would add more to my position. What I've done here is I've opened an account that is the size that everybody should be able to trade if they've made the PDT rule, and I never go higher than that 4 times margin. So anybody who's trading this way, who's scalping and can do as many scalps as they want in a day, should be able to follow along with this. Again, I don't recommend that you follow along. I recommend you follow along to learn, but not adopt every single of my trades. You need to really see it for yourself and go in and go out. I know most people don't, though. They just follow along exactly. Remember, there is a delay on the stream, so remember, that's why I try to call out the levels I'm looking at, because I know what you're going to do, but I cannot take responsibility for your trades. I am wrong. But often, so you have to, I can't take on the responsibility of you and me, and I really worry about you. I want you guys to make money. So that to me, it's more important than making a few bucks, as most of you know that follow along. I am a large share size trader. I trade thousands of shares with other groups. So doing it on a smaller account like this, it may seem big to you to trade 50 shares or 100 shares, but really that's pretty standard as you start to feel that your confidence and, adding $2,000, $4,000, $6,000, $8,000 a month is not that hard to do once you get into it. It's just not that hard to trade with that kind of accuracy. We can kind of look back. Let me go to say, I think some of these still have my original, these still have the original levels. Let's take a look at Robinhood that I traded this morning. I think I just took one trade, maybe 2 trades. I set the breakout levels here. That's what that is, based on Day Trading Volume 4, which is the book that has you trade the open with 4 different breakouts. And what I mean by that, a lot of traders will wait for the candlesticks to form at the end of the first 5 minutes. You'll have a 5-minute candlestick high and low, and if it breaks out the high or breaks out the low, then you normally wouldn't jump in that direction, short or long. Not, you want to look at other things, but that's a breakout level. Like, hey, it's breaking out. Get in, go for it. And they do it for the 15-minute as well. So the book covers 4 of the main breakout levels. So I recommend you get that book. I have a link to it. But most of the historical data is based on Day Trading Volume 1 or the theories behind, Trading in the Zone or Best Loser Wins. I mean, I have links to all those books. If you're interested, it helps me out if you buy them through my links, but just get them wherever you get them and read them. And, it will help you become a better trader. I like the $1 Million Margin Club books because they have strategies. And then they also have that Day Trading Volume 2, the Candlestick Pattern Playbook, which is the only book that rates the accuracy of the patterns. So you have a couple different things to think about, and I talk about this a lot. You have the overall patterns, right? And you go back multiple days to see those, right? The overall patterns, what's happening here. And if you were to mark historical data, there's an example of historical data. Where did the stock come up and abruptly turn around, right? Right there, right? That level. This was the close of a different day, so this is kind of not helpful at all. And then here, this was an intraday level that I set, right? But this might be a level that you would smooth out and mark. See how many times it stopped there and turned around right here, right at the end of yesterday's session. The black are the open sessions. These are the post-market and pre-market. Not as many people trade in these. You have to have the right brokerage to be able to do that. But you can see this historical data as it went across from this day. The pre-market, it held it nice and firm. It looks like it did a bunch here. It gravitated around that level. Why would it do that? Well, that's a pattern, guys. Patterns repeat, right? That's why they're called patterns. So you're looking for something to repeat. So you'd want to make a note of it. So there's that kind of patterns. And the other kind of patterns that I was just talking about with Day Trading Volume 2, the Candlestick Pattern Playbook, were the patterns within, that the candlesticks make themselves. There's all kinds of patterns right here, and when you learn them, they're very, very helpful. This is a tweezer move right here, so that's where they line up and go down, showing the rejections about to happen. This is the doji or rickshaw man. I'm just trying to pull some of the ones I see. But there's all these different books that whatever book you get. See, this is what I would do for intraday historical data. I would mark that level right there because it tapped here twice, turned around abruptly, came down, tapped, turned around, then it finally did a breakthrough. And now you look at it like, well, is it going to reject or is it going to come back through again? And this is creating a channel between the older historical data and new historical data. I know I went off topic there. But yeah, the pattern books are very, very helpful. To one more way to tell you what direction the stock may go. You may be a winner. There's nothing's going to tell you exactly right. But the more things you line up, the better chance you have. So if somebody says, when it gets here, do this, then turn the channel. Don't listen to them. Because nobody really knows, and it's not that kind of pattern repeating, right? If it gets there, maybe do that. If he says that, and then look for or she says that, and then look for other reasons why to maybe do that, then that's cool. I'd listen to that person. But there's no always, no definite, no. And just remember that. And usually when you get people that are so definite that aren't like questioning themselves, they're selling something to you. They're selling a strategy, or they're selling you to get on their channel and buy their course, and they need to sound really, really confident. And they start to say, let me show you how much money I've made, and which is a weird concept in yourself. People are showing how much money they make for marketing purpose. They're marketing something to you. Look how good I am, So I just did that. In fairness, I just did that with my trader view to try to get you to come over to trade along for free with me, for free. I'm not charging. So that maybe, just maybe, you can be one of the 5% that makes money, doing this. Another way that you can do this to things that you mark is you mark trend lines, right? So let's add a button. Let's do a trend line. So now I put it up here on my tool, right? So I click on this. If you're going to make a trend line, you'd go down to a low and, get close to it, and then you click it. And now you're dragging this trend line along, and you're looking for where did it respect it again. Well, it came down and hit it there, but that was pre-market. Open session, it hit it there, but now you start to look to yourself like, look how far away that is going to be from any of this price down here. So kind of useless unless you're in a long-term thing. Then you're getting into day trading, you're like, wow, look how it hit there, and then it rejected off that level. So this, you wouldn't have known that, right? Like say you marked it before the day opened. So now you have something that was fairly well respected here, right? So that's not a bad level to have marked. And if we got into the intraday here, what would that have looked like? Well, it hit it a bunch of times and rejected. Then it hit it and came back up. So when you combine the trend with historical data, with candlestick, when this is historical data too, but with support and resistance, horizontal lines, and then candlestick patterns, and then indicators that help you see which way it goes, and then price flow, right? I'm going to overwhelm you. But the more things that you line up, and I go through this on almost every trade in every video in some form or another, the more you line up, the better. Trading with the crowd. See these little gray lines? That's every half and whole dollar. People instinctively get in at half and whole dollars. So that means that huge momentum of people jumping in or out helps you determine the direction of the stock. So you're going to just try to go in for like a 7-cent move or an 11-cent move. This is showing you the average of the last 9 candles. And it's basically telling you what to go for. 100 shares, 7 cents, $7, right? $10 if you only go for just a little bit below at 10 cents, say, right? You do 200 shares, double that. You do more trades. I think this was 2 trades, maybe 3. I just stair-stepped up, and I did all my trades today in less than I think it was about an hour and 10 minutes when I came back to assess and trade again. Hour and 10 minutes, $307, whatever it was. So you can't expect to make it all the time. I would set my goal much lower, $25 a day, $50 a day, and then gradually work up. First, I'd trade in a simulator. But I mean, the more things you get to line up to trade with the crowd. I have moving averages here. So what are these little snakes going across the screen? That green line is showing you the 20 moving average. It registers the last 20 candles, and then it averages out, smooths out like this is where they'd end up if you averaged out the price movement of the last 20 candles, right where that ended. This gray line's the last 9 candles, right? Sometimes I'll have a 14 on here, or I'll have large day ones on here, which are going to probably confuse you. So I won't even go find them. But so that's going to help tell you too. And then you have indicators that when those cross over, they register with an arrow and they tell you, hey, this is about to go down. It's so simple, right? You don't even have to know what it means. It just says, go down. Okay, go down. So sometimes having the prop firm indicators that they train their traders with is a really good thing to have. So I would look for those and get those. And really, if you go to buy them, anything over like 25 or $50 at the very most, you're getting totally ripped off if you're paying hundreds of dollars for an indicator. On Thinkorswim, at the $1 Million Margin Club, they're all like $24.99, and the custom scanners are like $4.99. So, look around a little bit. You can get free ones too. You can find free ones. I have a lot of free ones on this channel, but the choice ones, the real, up-to-date good ones are at the $1 Million Margin Club, and other ones too, but I haven't seen anybody cheaper than the $1 Million Margin Club. So with all that data, it just becomes a no-brainer. Down here, the Scalp Pro meter. This is telling you what's happening inside the candlesticks. Let me open this up. This blue column is this candle representing this candlestick's volume, and this says how many buyers are in green and how many sellers in red, and this meter shows you how strong they are, and here's the percentage inside, and then this turns blue rather than white when the volume increases the volume of the last candle, letting you know, hey, there's a trend here. It's stronger, or at least a very, very short-term trend of strength, right? So I don't know if this will turn fast enough to, yeah, it's going to turn. Watch this turn blue. So this is going down, and it's about to tell you that it's a trend down, see? And the MACD said go down too. So basically, this trade right now said go short. Let's see if it actually goes short. This is hood, meaning going down. So it set it right here at 72, and it's already down to 69, 67. I mean, it's stalling. It's pretty slow. So you could have gone out already, but there it goes. Yeah, just like it said it would happen. So that would have been an easy $10 to $15 trade, depending on your share size. And you just take the money and run. Don't get greedy, right? Unless you really know through all your technical analysis, I believe the stock's going to go down to 117.50 right here. So I'm going to hold to there because of my due diligence and data. I'm not going to jump out like I'm scared. I'm going to hold it. But if you're not sure of that, which most traders aren't, taking those short-term scalps are better. If you want to trade longer for bigger moves, then move over to a 5-minute chart. This is just 1 minute. Every one of these represents a single minute. And I see people trade on 10-second charts. So once you start trading on a 1-minute chart, all the other charts seem so slow. It's like watching paint dry. It's just, come on, man. Make a move, man. I get that way. You'll listen to me whine a little bit like, come on, when I'm trading. But I have a lot of patience learned through life because I'm older. So sitting on the park bench, trading 1-minute candles before I start my shuffleboard game. No, it's not that bad. but I'm just saying you can learn patience, and it's a good idea because trading is boring. And you want to be able to sit and wait for even these 1-minute moves to go in your direction. This is still living off the data we got. It's still pushing down. You could have made this trade several times, in and out, in and out, in and out, So that's just a little bit about technical analysis and different indicators. If you open the day chart down here, you can see I even watched the social sentiment here. This indicator is actually free over at the $1 Million Margin Club. You should go grab that one. It's telling you that there's a minimum of 100,000 volume in every 1-minute candle. It's telling you right there over a 10-day average and then over a 1-day average, right? This is another one telling your average true range, split in half in the full thing. Here's the daily moving averages. I remember I pointed out the 9 and the 20. That's the 50, the 100, and the 200. When those cross over, that these are things to think about, how to foul that trade. Like when that crossed over the 100 right there, that told you on a longer term trade, go long. Look at just how it just went straight up, right? So this really gave you like 3 weeks worth of trade upward by just following that one thing. It's even stronger when it crosses the 200. And then when it crosses back, be careful. See how it's crossing back down? It's like losing confidence. And then it broke back up again. There's an entire book. All it teaches is that particular move for long-term trade. So I recommend you look around and study. And if long-term swing trades are the way to go, those are, books that cover that kind of stuff is better. But if it's a book that's selling you a course, take it with a grain of salt. If it's a book that they're just passing on their wisdom, those are the books you want to go for. And there's a lot of good ones out there. And I've linked at least 3 really good ones for you that aren't selling courses or anything. So look at those because that's how I started. 2 of those books, well, I wouldn't say it's how I started, but I added them very, very quickly to my trading, and it helped me immensely. Those books. So check those out. Check out the indicators, but just come around, stop by, and trade for free. If you subscribe to the channel, you'll get an alert, or just remember to check. If you don't want to subscribe, just remember to check every morning. We're kind of doing a revamping where we're switching to small share size live trade rather than large share size. So a lot of people have jumped ship because they only want to trade large share size. And I do that on Zoom, but I don't do that on streaming. And these are all people that are registered to trade large share size with the SEC, just because of the amount of money that it is. So maybe one day you can be one of those people, but you need to start small. People were trying that, and people were getting hurt. So learn how to scalp with me, guys, or with other people. Learn how to bring in $50, $100 a day, $200 a day. How much, if you're retired right now, how much, I definitely sound like a commercial. Get a reverse mortgage. No, but if you're retired and you and your wife are bringing in between, $3,500 to $5,500 a month, but you really need like $8,000 or $10,000 to make your nut, right? And you have money saved, but it's slowly dwindling away like so many people because you're making the difference between your Social Security or whatever other funds you might have. You're kind of, it's drawing on your account. You're not making enough on your investments to pay your monthly nut. There is a lot of people like that, a lot of people that didn't plan well, or the plan didn't go the way they wanted, or it's not their fault in any way, shape, or form. That's not what I'm saying. And they need to augment their income. A lot of people, more people are that way from who I've talked to out there. I mean, I was a former math teacher, but also been, I'm a trader and I quarterback, so I've been mentoring and training traders for many years. And I've come across a lot. I don't do that now, so don't email me, ask me that. But I do quarterbacking still, but for large groups. So I know for a fact that there's a lot of people that just need 2,000, 3,000, 5,000 more a month. And the $1 Million Margin Club put together this support and resistance strategy with Fibonacci levels to help you. Since I've showed you this much, let me just, in case it's the only video you watch, let me go to the Fibonacci levels, okay, guys? All right, so the base of a strategy is, let me go to something like Apple here. Let me go to Apple. Is Apple up here? No, that was one that came up on the scanner. Let me look for Apple right here. Okay, this is marked up to the 9s. I'm going to get rid of all these for you because my life is drawing lines. It's all I do every day. So those of you that already know fibs, you'll now turn off the video. But if you don't know, so this way of marking Fibonacci levels that I'm about to show you for support and resistance is not the same way a lot of people will show you how to read the different percentages on your Fibonacci levels, which people talk about as being nature's mathematical formula because of how it's repeated in everything that grows around us on our planet, you know. So a lot of people follow the Fibonacci formula all the way back from, I mean, it's about as old as you get, nature's mathematical formula. So professional traders put together that if you go to a 5-minute chart and you're just looking for support and resistance, this one's set for 10 days back, a 5-minute chart set for 10 days back, okay? Now I'm going to look for the high and the low, and the high could be up here and the low could be down here, or the low could be down here and the high could be up here. It doesn't matter, but you always mark it left to right. That's the one thing to remember. So I'm looking for the low now. It's right there. I'm going to pull it right to the edge. I happen to have this up on my tool bar already, but it's called the Fibonacci retracements. So I'm going to click on the low down here. So that's 69. So 224.69. I'm looking off to the right to see the price. There it is. Now I've got to wheel over here, a little out of position here because they're so far apart, and get to the high. And the high we saw right over here. So there it is. So that's 241.37. So a couple pennies down from right there. It's very sensitive to get to the exact. There it is. Now that is Fibonacci levels that just opened up from its formula. Look at how the price action, every candlestick, right, represents the price going up and down in a certain time increment. These are 5-minute candlesticks, and I can zoom in on them, but I just wanted to show you the broader picture of how it bounced back and forth, how you could have taken a long trade, then taken a trade and gone down, right? And then, you know, here you're kind of in the doldrums, but if you just played that the day, like maybe 2 trades, you have an amazing channel here. Happened again, channel here, then it channel hopped, channel here. It's not exactly, right? They're not exactly. Let's look what happened on today's action from way back when. It kind of stopped in this channel down here. This is just the beginning of the strategy. Now then, look at how it respected it there. From way back there, I marked it. Look at that. Came to a complete stop and told you, go the other way. It's not going to tell you every time. So how did they make it even better? Well, then they do a 5-minute 2-day. Okay? Now you're going to mark more of these, but much closer time frame, right? This should just be on 2 days. It seems like it's going back further. Oh, wait a minute. I can't mark today's action. So let's pretend we don't know that today happened. Did I mark today's action on this? I don't think so, right? No. All right. So we're going to go high to low, which would be, yeah, so it would be like we'd mark here. Because I'm pretending that we marked this before the day started. So otherwise it's kind of cheating to go down to where the price actually went to. 72, there it is. Okay, so now I'm going to scan over here to where a low would be, which I think is right here. Yeah. Does it go any lower? Oh, no, it goes lower. So let's say I marked it on the pre-market, so we get a little bit different readings here. So right there. I'll make that a different color so we know this is only the 2-day. Often I'll only do the open session. Now the gray are post-market and I mean aftermarket and pre-market. This is the open session where most people trade, right? So now, as you can see, I'm not editing, I'm just riffing here. So let's just see what happened here. Yeah, because the 2 days are way up here, this price action would have helped us up here, but it doesn't help us down here because this Apple dropped way down today for some reason. So normally when you're trading this strategy, if it makes a big move that's trending, you don't want to try to trade it because you're looking for a consolidating one. I thought I was going to be at a consolidating stock, but apparently not. Let me just open the 10-day to see if we have any historical data here. Hang on. Did I not go to the 10-day? I went to the 2-day again. Hang on. Here's the 10-day. Okay. All right. Let me go back here. So we're way over here. So yeah, so we do have some historical data that is in the same price range. So it's over here. So what else is historical data besides Fibonacci levels? I think I mentioned it earlier. Where has the stock stopped and abruptly turned around? And then has it stopped in multiple places as you go across to try to smooth a level that is catching more areas where it might respect? So I would mark that level. And we definitely want to mark this. Now we're down here because we know that price action is in this area already. So I'm just marking these to see. Normally we do something like that, right? Because it catches all these. Like that's an amazing level. Probably. You don't know. But that's all historical data is where it stopped and abruptly turned around. So you can see as we got into this day, I would have gone back and checked these levels to see how well I could respect those. Look at that, guys. Look at that. You know, I go short, boom, boom, boom. It gets close, it rejects. I go long, gets up. I go short, boom, boom, boom. I go long, it rejects. I go short probably, and I have a losing trade, but then it comes back and it makes it a winning trade. I go long. This is channel trading, ceilings and floors. A strategy put together in the original book, Day Trading Volume 1, still used today all over, and it is really the safest strategy to trade. So that's Day Trading Volume 1. This is called the RV strategy, and it's really, you need to try it because most people just stop right here and make money. But as the trading goes on in the middle of the day, you can do what we call intraday levels. Like if this kept respecting this area right here, you know, right here, that's so abrupt. I would mark that in case it came back. You can see it topped out here and then it did it again here. So if the price action was coming back today, I would make note that that's something to watch. That's all you do. You can't count on it. You can't count on it. But maybe it will do what that just did. So maybe you have something that gives you a little bit of an edge when you're using other indicators like I went over before. And I'm not going to go over every indicator here, guys, because there's a ton of them. But believe me when I tell you, prop firms use them for a reason. Prop firms train their traders with them for a reason. And they do help once you learn, but it's a little bit of an education. But you can see it's messing around on, this is the 1 minute chart. That's the 5 minute chart. So it's messing around at this level, telling you like, you might want to go long when it hits here. It turns you around with this risk oscillator, turns you around here too. It's like, hey, go long. And then you already had a move right here. It wasn't a big move because Apple's a slow stock, and then here it just kept bounding. You know, it broke it for a breakout, a flat bottom breakout, they might call it. And then it's and then finally broke up. And you're like, holy crap, that's a move. And then you get ready to get out because you have more historical data right here. It's like, uh-oh, get ready. And then boom, 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 boom. Look at that. Look how much money you could have made there. And all I did is I simply marked out the levels. People tend to overcomplicate this. That's all you have to do is mark out the levels, be discerning, be conservative, keep your share size small, and don't overstay your welcome. Just put green in the bank, put money in the bank. A green trade adds up to big green trades, to pouring money on top of you. Just take the baby moves and don't try to get rich quick in one day. You see these guys make $100,000 a day. I've seen guys make $200,000 in a day, you know, right here in this studio. and not just a day, like in an hour, so it can get you really excited, but it's a lot of years of experience, and it's not as easy as it might seem. So you want to just build up your money ever so slowly. Okay, that was my words of wisdom, guys. So that I'm not showing you the whole recap today, so please go to the live stream and you can see the trades that I took, that I gave you the total on. And thanks for tuning in on this video, and follow us for the rest of the month. Come on in and trade, or just watch it being traded. It's not a waste of your time. You might really pick up on something that could be helpful for you. Okay, guys, I'll hopefully see you in the morning. All right, go green out there. Hey everybody, this is the professor with Day Trading for Success. So every morning you can see myself and a group of traders trade live for absolutely free. We're trading on Thinkorswim, and you just put on alerts, subscribe to this channel, put on alerts, and you can trade along with us if you want. Now this month what we're doing is we're doing a strategy. We're teaching scalping, which you may or may not want to call it a strategy, but it's a way of trading, a style of trading with scalping. And then we're really using the Day Trading Volume 1's original strategy from way back, which is called the RV strategy, where you set historical data, support and resistance levels, and then you go on from there and you look for the price action and indicators. So I'm going to break in a little bit more about what that is exactly.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
So basically, this layout that's confusing you is it's a dynamic tool that pretty much guarantees me a profit every time I trade, if there's such a thing as guaranteeing. And the secret of being the 5% that makes money day trading is trading with the crowd. Wherever they're going to go, you need to know. You need to predict it ahead of time. You need to have a good probability of knowing which way the price action is going to go. And you do that in a few simple ways. So let me talk to you about how that's done basically. This chart over here in the middle of this confusing mess, if you're new, is a 5-minute chart. You can go right on here and expand it. And there's my 5-minute chart right there. Right? Now what you're looking for is you're looking for patterns in here that may repeat. But guess what? It's real easy. You don't have to figure much out because you go with historical data, and some of that, the oldest historical data, known as nature's mathematical formula, is the Fibonacci level. So you just find the low down here. So that's at 34 cents. I'm looking over to the right. I've got it clicked pretty close. I click once, I drag it over, and we go to the 44 cents, which is right there, that high. And then these levels, it's very sensitive, so I'm going to get me close, and then I'm going to go in here and I'm going to type in what we need. So we need that top to be at 44, and that's 58. So this is going to be at 44 because that's what the price range was down there, and this is at 34, not 33. And then what that does is it opens this amazing mathematical formula that's called Fibonacci retracements, and they create channels, and they basically identify the patterns, the way that the stock's you can count on they basically move. So this is a strategy is based around this Fibonacci level. It doesn't matter whether you're going high to low or low to high. You always go left to right. And then the way we trade in the morning particularly is we open it. That was a 10-day back 5-minute. This is a 2-day back 5-minute chart. Now we're going to zoom in for a little closer action, looking for the high-low. So here it is down here. It's in a different spot. And it's going to give us a little bit different levels and tighten up how we can expect to trade this. I'm looking over on the right, trying to get the right price. There it is. I drag it up here. Now I look for the 44 again. That's 47. There's the 44. I'm going to make that a different color. All right. And then we're going to go into here. Now, if you want to see some of the live trading, just go under the channel, which I happen to have kind of zoomed in right here. And there's over 400 videos, right? So you can see me make 33 minutes, make $13,000. You can see freestyle trading, $300 with 50 shares in just 6 minutes. How much money you can make over a month's goal. We do a lot of challenges here. So right now we're trying to just make $150 a day. There's a lot of videos over there, but if you go to live, right, you're going to find all the live videos. Lately, I've decided to just stop doing the thumbnails, and you can rewatch those there if you want. And I do recaps with them as well. So if you want to see that, but that's basically if you want to just see what the channel's about. So now I've done 2 different Fibonacci levels here, and now we've tightened up the channels. So you're basically looking for these to repeat. And the other way you market for this strategy is you do historical data. Well, the Fibonacci levels are historical data. Let me just get back to see where they end. So here's our price action today, right? You can see how well these levels were respected, kind of stayed right in between them. But we want to tighten it up, right? We want to even have a better opportunity to figure out where is that going to turn around. So you look at the previous sessions over here. Now, we don't know what's going to happen here. You go back a little further if you can, and you look for an abrupt stop and turn around of the price action. See how these candlesticks are marking the price action over here, and they're going to change with every 1 minute. Well, this is on a 5-minute chart. So every 5 minutes this changed, but see how many times it stopped right there? Now I follow it around, and you do what you call smoothing. You try to line it up to as many as you can, so you can see that's a really good level right there to create additional historical data. So just with that one level, let's see what they did. I have no idea, by the way. But, it let us know that after it broke that, it's probably going to turn around. So it tightened this up a little bit. You can see this day, it was right there. Of course, that's where I marked it. Never mind. So now we'd want to do other additional levels here. On the upswing, there's a whole bunch of markings there. And then you can see a bunch here. Let's see if we can line up multiple days together again. It turned around right here. See how many times it turned around right there? And then it picked it up right here and right here. And then you can do an abrupt turnaround there. And you could do them on the wicks, or you could do them on the bodies. You try to catch as much as you can across, because it's more likely it will repeat at those levels. So what is a pattern? A pattern is something that repeats. That's all it is, something that repeats. Now, you can learn the candlestick patterns, like in Day Trading Volume 2, the Candlestick Pattern Playbook, and you can learn what those actual patterns mean within themselves. But there's another way. You just want to see a pattern of when the price action stops at a spot and goes the other way. And how many times will it do it? Over and over. You might get lucky and you just are able to call it like clockwork every time it's going to turn around. So, these didn't create perfect channels, but they're not bad. You can see, it hit it a whole bunch of times there. So there's a channel between this fibs right in the middle, kind of made a wide channel here, lots of places. This got picked up here and turned around. They're not going to be exact, but they're going to give you an idea of like you're getting to the end of the price action. But you need more, right? You need more than just historical data. That's just the first step of how to trade this strategy. So let's go into a little bit deeper. So before I go back to the layout, I just wanted to make sure I said we want to go a bit deeper. This channel's been around a while with professional traders that make thousands and thousands of dollars doing different things. And I myself am a coder. So I code custom scripts for Thinkorswim and ThinkScript. And you can get, most of those are available. I have links to them to help you trade along. But we've also got this into different seasons. So you might want to sit down and really see how to set up a chart properly, how to use an indicator properly, how to build a layout. With lots of free layouts that you can download, and just so much information that you might want to look around a little bit, as we get into this, so you can really see. So now this is the layout that I use today, and I'll go over it with you. You don't have to have something this complicated, and if you're new, it's very complicated. But it doesn't hurt to understand. The more you understand, then the better chance you have of making money, basically. So this month's challenge is very basic. This is all we're trying to do right now, is just do like $150 a day, so that we can add up to like $3,000 maybe at the end of the month, which can help pay people's bills, and try to do that in a half hour to an hour every single morning. Monday was a holiday, but here we are. And so far we're right on track. We're a little bit ahead of track, and it doesn't come without its drama, but it's exciting to have a bunch of screens so I can drag this stuff around. But this is a 1-minute chart filled with all kinds of data that I'll talk to you about briefly. Then you have the news down here. You have a daily chart down here that has all kinds of custom things as well on it. We'll go over those briefly. This is the active trader. This is a level 2. I hide the exchanges off of here because it'll show my account when I'm trading, my account number. This is a 15-minute chart, a 5-minute chart, the time and sales, another 5-minute chart. This is the 2-day one, and this is the 10-day one I just showed you on the fibs. This is a 30-minute chart reduced, a 1-hour and a 4-hour chart, all reduced. I have those all on one layout specifically because when I stream live, I'm jumping around showing people things, and I want to make sure that I've got it at my fingertips. A lot of people will spread it around to different screens. I've learned to put it on one so I can set up the strategy, talk about, as far as the historical data, talk about the style, talk about any strategy, talk about the stocks. So that's why it's set up this way, and I'll explain about this in just a second, but I want to go on about how we find our stocks first. So this is a scanner, and I am a coder, and I actually code these scanners in too to find specific stocks. So what might I be looking for that Thinkorswim Charles Schwab wouldn't have readily available for me? Well, if you're scalping, you need to make sure, and we'll go back to the charts for a second, you need to make sure that this price action on the level 2, typically you'll see a level 1, which is just, there's the ask, there's the bid. Level 2 shows you who's waiting down the pike. And you want to see that moving in a certain way, swaling I call it. You want to see it moving 10 to 15 cents either direction every 10 to 15 seconds, 30 seconds, so that you can have 10 to 15 pennies to trade. With 100 shares, that's $10 to $15. 200 shares, that's $20 to $30. And in just a few seconds, you get that. If you have the right indicators, it even tells you your target. So you need to find a stock that's going to move that way. Now, some of them are no-brainers, but it gets a little deeper where you need to find them. So I have coded this up where a couple of things. If this doesn't move at least 50,000 in volume and liquidity per 1-minute candle, it won't come up here, right? So that's the one thing. It also shows the spread, and then it also has it that it has to move at least 15 cents in a 1-minute candle, and often you'll have it repeated. So with all those codes in here, and by the way, they're over at the $1 Million Margin Club. I make them available. I don't sell anything. They have them over there. I get paid to code, and then you guys can get them there. Only like $4 to get these custom scripts if you want them. You don't need to have them, the custom coded scanners. You don't have to have them. You're going to find a lot of these, but it makes it a lot quicker first thing in the morning. And of course, I have so many different ones that I do, like the Gap and Go. If you're looking for momentum ones, you don't have to pay a service. I code them for people. I make them available for like $4.99. They make them available for $4.99. I'm just saying they're not like the $200 scanners you might see or the monthly fee. There's no reason to get caught up in doing that. These are going to have everything that they try to charge you for like $4. So keep that in mind. But let's go back so there'll be a lot of them. If you watch, you'll see a lot of videos about scanners. But let's talk about this. Let's open the day one for a minute so you can see, right? So I've got the social sentiment here. I've got the ATR here, which is so important. And then this one's free over at the $1 Million Margin Club. You might want to grab that. I put this on my day chart because it's immediately telling me that this stock is worthy to trade, which of course with a Tesla is no problem at all. And then I always have my ATR down here so you can see, and then there's a custom script that gives you the half value of the ATR and then the full value. What is an ATR? Average true range. It's an acronym, ATR, average true range of a stock over a 14-day period based on Wilder's mathematical formula, smoothed out, so you can pretty much predict the range high and low of a stock. Now, it's going to give you the overall range down here. Like if I go over a candlestick, let's just say I hit this green candlestick, and you look down here next to this, it's going to tell you how much money that's going to move in a day, $18.30. Now, it probably isn't going to move $18.30 in one direction, right? So a strategy was developed way back when they did Day Trading Volume 1 with the $1 Million Margin Club, which is a group of professional traders. Link connected, along with a lot of other great books that I may or may not mention. That strategy put half the ATR level on your chart, meaning it'll probably go half one direction and half the other direction, not all in one direction unless it's trending. And basically, there's a couple ways to, well, there's a lot of ways to trade, but the two main ways to trade are people are like, don't fight the trend, go with the trend. So going up or going down, you're looking for a stock, figure out which bias you have and move that direction. But another way you can trade, which will always have a stock, is when they're consolidating back and forth like a slow moving snake, right? And they're going to back and forth in between their ATR. If it breaks the ATR, it is now trending, and you might want to ride that trend up or down. The problem is you never know when it's going to exactly stop. If you've created historical data with the Fibonacci levels and with the price action levels that I just drew for you a second ago, you can really predict very, very well where they're going to turn around. Never exactly, and so you need more and more help. You need crossovers. This is an average true range over 100 candles back. That's 200 candles back. That's 50 candles back. You can see the inertia as they cross over each other, but indicators were made to signal you and even give you alerts when that's happening. So you don't even need to learn how to read it anymore. Things have come a long way, and I'll show you a little bit about that right now. Let me close this day chart. Now this has the ATR levels on this big jumbled up chart, but it doesn't have the labels at the top up here, but it does have the ATR. So let's take a look if we can find them. So they'll be green, a green line. So that is your ATR overall high right there. This is your ATR. No, wait, I'm sorry. That's the market magnet. Here's your ATR overall high up there. I know a lot of line. All these little gray lines are marked every whole and half dollars. Trading with the crowd is so important. A lot of people go in whole and half dollars, so knowing where those are is very helpful, but you may not want them. So you know what? You can just get rid of them and apply, and now they're gone. And it's much less messy now. Let me zoom in. Oh, we're way back here. So I'll zoom in here. When you trade on a 1 minute chart, of course, you're not going to see all these lines, right? Because you're going to trade like that. So you're going to see that historical data. Look how well it's respected here. You're going to see those Fibonacci levels. Look how well they're respected here. You know, here too, turned it around, you know. So I was trading this just a little while ago using, and this is the VWAP, right? The volume weighted price average right there, which is technically the value of the stock at any given moment if you were to try to buy a larger share size. And then it's got a bunch of other indicators in here, but the average true range is up here. There it is. That is like a wall when you go hit it. That's half of it, and that's half of it down, and then the whole amount is there, and then the whole amount is down here. Right? These other dotted lines are something different up here. You'll learn what they are if you get those indicators. There's your 200 moving average there. It's just going to be a straight line on a 1 minute chart. On the day chart, you know, it moves, but on a 1 minute chart, keep in mind, this is in the middle of one of those days, so you just see it static looking. But so having those average true range here is going to really help traders. The other thing you have is the engine here, really, that tells you when the trade's going to go a direction. This is an advanced indicator that scalpers use. It shows inside the candle the power. I always annotate it to you're on top of a wave and you're waiting to jump on that wave as it comes, you know, as you see it, as you see the inertia coming, you jump on. See how it's the inertia was just telling you it was going down, and it went down when it saw it there. So inside of this, you can see it going up or going down, and it gives you the confidence, even the percentage, when to trade. This is called the Scalp Meter Pro. I have a link to get it if you want. if you're not going to get anything else, I would get that if you're new here. This one here was developed pretty recently, mostly for beginner traders, telling you, giving you the overall average of the last 9 candles, up or down. Red meaning down, green meaning up, and then it smooths out a target range. So if you were to get in a trade on a 1-minute candle and you're trading on a 1-minute chart, you don't want to hold that trade for more than 9 or 10 cents going up or 11 or 12 cents going down, meaning 100 shares, $9 or $10, 11 or $12 going down, or 200 shares, 500 shares. You trade with more shares, you make more money on that short target. It'll let your pennies be marked right here, and then your overall P&L right here, made for fast trading. This is going very slow right now. You can see the meter called this to go up. You could have jumped on that. You might want to see how it keeps rejecting on that historical data I drew from way back when. So you start to pick up on this stuff, and it becomes like taking candy from a baby. What a weird phrase, right? Anyway, it becomes really easy to figure things out when you have all these things to help you. If that weren't enough, you have the arrows telling you which way you're going to go. This is from the MACD, a different kind of, you can get a histogram on your chart, or you can just get the indicator that says, go that way. And then the other one that says, oh, you're done, go that way. And it's just, I laugh because it's just so simple now compared to how what we used to have to go through. Now, none of these are going to be 100% accurate, but they're pretty close. So you're trying to cumulatively get as many that say the same direction, 80 to 90% of them, which they usually will agree, not always. And then you make your move. And like I said on that surfboard, you're jumping on, and then you get off before it hits the rocks. Once you learn to trade in a 1 minute, once you trade in a simulator or just trade with one share, it's like, oh gosh, I lost $5 after I traded all day because I only traded one share. You get rid of that nervousness and you start to see that this isn't really very fast. This is pretty slow to decide when to push a button to get in or get out, right? And you see your number, your number will come up right here or right here, and you can see the price action. Like if I was going to let's just make an example here. Like let's just say I took one, that's 10 shares. Let's just say I did one share. Like say I'm you guys, I do one share. This says it's going down, but you have a support right there. So I could buy in off that support. Now that's 53, so I'm going to go ahead and go in. So I got that, and it dropped right when I got it, but it went down 10 cents. But it was saying that it was going down, but I bought it off the support level. So, I'm not wicked nervous. I'm like, oh my God, it went down. It went down so fast. And that's really bad if you had 100 shares, right? I mean, that really went down. That Fibonacci didn't hold it. Instead, the Meter Pro told you, and the volume increased when it changes color. That's telling you that there's more volume this candle than last candle. Strong move down. MACD, that arrow says, hey, we're going down. Why did you just go long on that, right? So I'm 13 cents down. You can see here, it marks it up here too, right? I could shrink this down so that whole thing is all the way across so I can read the whole thing. You can move this around. This is what they call on a custom grid. And I have the news down here saying, I might read like, why the heck did that just happen? There might be a news story but as you can see, you just wait a minute. What goes down must come up. What comes up must go down. You know why? We're trading a large cap, mega cap stock in Tesla that always retraces, they call it. It goes back to, not always, I should be careful with that word, but pretty often will give you the opportunity to make money no matter which way you go. But you have a max loss set, like, hey, look, I don't want to lose more than 10 cents here, on a one share, right? So if it gets that high, I'm just going to get out, right? In this case, I'm making money. So I get out, I think I made 4 cents, but I'd already made more money on that. I should have paid close attention. But, if that was, I think it was 4 cents. If that was 100 shares, it would have been $4, or 1,000 shares, it would have been $40. And I do trade that high, and I do trade on margin where I trade with the bank's money, and you can get approved for all that. So you should learn about that, and you can get offshore. Again, if you get that original book, I found it to be the best book. Day Trading Volume 1 put out many years ago. It talks to you about offshore accounts. It gives you sample, when you're opening a new account, it gives you sample applications. It literally walks you through, starting from a beginner, every step you do with no nonsense, not like 500 pages, like in 15 pages. Like every page has something that really means something. So and then it goes into the strategy that was developed by professionals that so many people trade, thousands upon thousands of people, many millionaires. So look for that book. I have a link to it. The other book would be Mark Douglas, Trading in the Zone. He's a different author. Really helps you deal with the probability and outcome, lets you, and gets into your psychological makeup to deal with the risk. Another one is Best Loser Wins. That's by Tom Hogarth. That'll talk to you about never follow the crowd because 95% of the crowd is wrong. Now he's more of a swing trader, day trader too, but that's a swing trader philosophy, really. When you're scalping, you do want to follow the crowd because the moves are very short and everybody jumps on and literally, like, picture that if you're on a boat and everybody lean to one side, right? You lean, everybody's going the same way. You can see it. You can see they're all over there, that's where you want to be. Not really, you'll capsize, but maybe that's a bad analogy. But I mean, you can see it happening, right? In very short term before the boat's righted, then it might be righted, but I'll have to work on that analogy. But trading with the crowd is so important, and the indicators are going to call it out because inside here, these are like moving averages. That's 20 candles back, that green line. This is 9 candles back, this gray line, right? And then I used to have a 14 on here too. And then those solid lines are done based on the day trading, a day average. So you might not see those here because it's rare they come across your 1 minute. There's one, a 200. There's a 50. This blue line's a 50 moving average. So those are really important to see where they are because you see where the crowd's averaging out, and they're always going to be kind of in this snaky movement. So as you start to understand which way the arrows say and which way the meter says to go, it really becomes very easy to predict the direction for a short period of time. And everybody can be wrong. It's never going to be 100%. I'm not trying to say that, and I'm wrong all the time. I'm just letting you know that it's really as simple as the probability and outcome. And you'll watch so many videos that are cherry picking. When the price gets here, go in here. This always works. I've got a pattern. When 4 candles go this way and 3 candles go this way, then you go up 2 candles. Okay, well, that's just not going to work, guys. That's people finding stuff on a chart. Whenever you see a video like that, and I'm not bad-mouthing everybody. Everybody's got a right to make their nut, right? But whenever you see one of those videos, all you have to do is go back on a chart and see how many times that actually repeats. And you will find, if you can even find the pattern, you will find that it rarely ever repeats. Rarely ever repeats that pattern. So they're selling your course. Just look a little deeper. What are they selling? You just click here and you too can trade like me with this amazing pattern. So, sorry, I just had to say it. You need to make a decision in the moment. You need to be your advocate. Read those books, watch those videos. It certainly doesn't hurt. I would just say, be careful buying a course. I don't sell courses, right? I'm just telling you like it is, right? But I have certainly bought those courses. I bought a whole bunch, even when I was already making a living as a trader. I just kept buying them because I was very interested in what these people were saying. And then I found out that it's all cherry picking stuff. But, it doesn't mean that it won't work sometimes. It's just the impression. You know how we are. We're so impressionable that we decide without them even saying it. Here's what they're saying. Oh my God, and we just take that journey. They actually haven't lied to you. They're just, it's like a carny. They're letting you decide. You're having a good time, but you could lose the house. So be careful. But anyway, I am an indicator driven trader. I am not a licensed financial advisor. You should seek the advice of a licensed financial advisor before you trade. And they'll Probably all of them will say, don't day trade. That's what they'll say. But when you start, trade in a simulator first, and then start when you go with real money, go very, very small share size, guys. Okay, so anyway, now let's go into some of the other indicators here. So this down here is called the market pulse. I love to have this up because this is telling me what the overall market is doing. And right now, it's not looking good. Everything's red. The Q, the SPY, the bonds. But look, it's right on the close to flipping. This is on a 15-minute chart. So that just told you how close those were to flipping. This is a 5-minute chart. It's giving you shorter data of the same thing, but right now they're lined up. This up here on this 5-minute is multi-chart alignment. So this is telling you on this Tesla stock, the 5-minute chart's going up, it's green, 15's going up, 30 minutes going up, 1 hour's going down, and 4 hours going up. That's because it's going to pick up different ones because it's very wishy-washy, up and down. What goes up must come down. What goes down must go up. Lining up the charts, because that's when people only trade sometimes in those time increments. This is the simplest thing that people will not tell you on these videos. Just the simplest thing. And I always wonder, is it because they just don't know? Or do they just want to sell something they're doing? I just don't know. Some people do, but mostly you're looking for alignment with everything. It comes down to that simple alignment. The more you get aligned, you know, retrading in the zone, man, it's not just my word. The more that you get aligned, the better probability you're going to have a winning trade. You go the direction of the alignment and get ready to get out because you can always still be wrong. I have these levels over here marked on vertical lines. Every one of these is a 5-minute marking here, right? So I know when it comes up here, like when it came up to that 15-minute, I know that the 5-minute people, the 10-minute people, the 15-minute people were all making a decision based on that. So what did that break? That broke up. So everybody trading those candlesticks says, we're going to go up. And they jumped in and they drove the stock up. Doesn't happen every time. Probability is, though, it will happen. Then you just align that with the meters. Like, hey, meter says it's going up. You know, target's higher up than down. You know, those three on this one. Hey, look, MACD said it's going up. You know, it's like everything's aligned. Here it's getting weak. That's this has a crossover attached to it that says, hey, it's getting weak. And sure enough, you're hitting a resistance line up here. This just told you it's getting weak. This is starting to split its average. It's telling you you've hit the range. Be careful continuing. Doesn't mean it won't keep going up. It's just saying be careful. What I would do here is, I'm just going to play a little bit more of a move here for you. So I would take that and I would sell that position, right? I would sell on that. So now I'm going short, right? So there's my position at 81. Now I already could have got out for a couple bucks if I wanted to, but you know, because things were turning around there and we hit historical data, I took a bet that I was okay and I wanted to put a little bit more on the line to show you guys. And now I'm just going to, well, it zipped down right when I went, but I made 50 cents. But I just wanted to show you, like, if that was 500 shares, I would have been up to 125 or something. And if I had just waited a second longer, I would have had more money there. So now and that's what they call a rickshaw man, a pattern. Read your pattern books, guys, for the interior patterns, not just the historical marking the ranges. I mean, this is going to tell you things like reversal sign. So we hit that, and it gave you a rickshaw, which means, again, there's a reversal sign. This is likely to go down, but it might take a beat. It might take a beat, and it might not. It might. You might be a winner, right? So anyway, this market pulse is really handy. This multi-chart alignment is now everything's aligning to go up. So you might second guess taking a short there. You're always reassessing. You're always looking. You're looking at this level 2. You're looking, unfortunately, this stock is, the level 2 is broken today. Let's go to AMD for a second. You'll see that I have like little trades on many stocks that I picked up on the scanners. Now, when I switch, everything gets all jumbled up again. But if you look at this one, I'll talk to you about level 2 for a minute here. Let me zoom in. Now, you don't have to be this good at moving these things around. As you can see, I traded AMD very recently. I trade with a lot of the staff here in the studio. I'm in a studio, and I was trading with Charlie, and we were trying to make sure she was at 150, and this is when we made it. We just needed like $4, and we made a couple trades right here. And I did intraday historical data. Like I marked where they were making what we call a flat top, seeing if they were going to have a breakout or a breakdown. And right there, I called a couple right, and she made her money. And I do what they call quarterbacking. I call the trades. So trading is really boring and you're sitting around. But let's look at the level 2 here just briefly, guys. So this is what they call the spread between this. So this is what somebody's willing to pay, and this is what they want. So the closer that is, the less that the market maker will take from you when you make the trade. It's totally free to trade on Charles Schwab. So you can see right here, like if you were bidding, you would go across this bridge. Picture it, and there's a toll booth here before it comes down and meets to their ask price, and then they take some of that money, usually a fraction of a cent. But if there's a big spread, they can take 5, 10, 15, even a couple of bucks, depending. Some of your spreads can be $30, you know. So you want to try to make it really tight on your spreads here, so you can, they don't get much money from you, because they do not charge trading fees on Charles Schwab. There are no trading fees. Now everybody pays a small amount to the exchanges, but the market maker here, they take it off the top before you ever see it. And this is what the price is that they're going to give you. And it's usually in between. But when you press market, they're going to kind of make it go the direction they need it to go to make that full penny. It's not like the guy selling it got their money. They took it, and then they got just what they were, you know, they got the in-between. Like these two guys get the in-between or the worst, and then they make that money. So the tighter spread means you're going to, if that makes sense to you. But I wanted to talk to you about, these are the people waiting. So once those get filled, the next one comes up the line, waiting to go up to get their chance at the auction, their chance at the bid, right? So that's always moving. So when I'm working those scanners, I want this to move 10 or 15 cents up or down in 10 or 15 seconds. When it just sits here like this, we can just sit there and watch a stock for an hour. It's like watching molasses dry, and you'll make, $5. So you really need this to move up and down. And what happens is, these are the number of shares that are waiting multiplied by 100. This is a lot of information. You might want to rewind. I have tons of video with more detail about each specific thing here. But if you picture the ask and the bid moving like this, picture them making a little noise like little ticker wheels, right? Asking bid, ask bid, ask bid. They get filled, and then it moves. Every time they get filled, and it moves. Well, when you see them stop, but you see the volume going up here, this is registering the strength of the volume. This is showing you how many, what is the liquidity, the volume inside. This is the overall day, 29 million. This isn't just a 1 minute candle. And this is how many buyers or sellers are inside the middle. A fantastic indicator here. You can see I've got it so tight here that the meter is off because I'm trying to show you this level too. But if you go over here, now the meter's on here, so it's easy to read. But now as this is coming up, if this stops dead, but you see this shoot up, but the candlestick's just sitting here, because this is only going to move if the price moves. This will move with the price. So you can get a pattern of the price by looking at the candlesticks. All the way back in the 16th century, the Japanese rice farmers were doing this with an abacus. They were reading mathematical formulas. This has been around forever, right? So the price action will design this pattern, and then you can try to see if it's only called a pattern because it repeats, right? That's a pattern. So you're looking for it to repeat. At some point, it's going to repeat. Your job is to find out when that is by using as much data as you can. And I got off topic slightly. But when this is moving, just staying here, but the volume's going up, that means that as soon as these buyers or sellers are bought up, as soon as these orders are filled, and there's like, usually you'll see a big number here when it stops on one side or the other. Remember, you're multiplying that by 100. See how it keeps stopping at the 12 at that price? You might see a 3-digit here multiplied by 100, and you see the candle going straight up, right? But it's not, I mean, you see the candles, I'm sorry, you see the volume going straight up here, the bar, but the candle isn't moving because the price isn't moving, right? What does that mean? That means they're being absorbed. All the shares are being absorbed, but they're not gone yet. So the price can't move because there's too many at that price. And then the second they get absorbed, bam, so you want to be right there waiting. You'll see the number go down. You'll see that 1,000 go down, 800, 700, 500, 400, 300. Oh, God, get ready, boom, and you're in, right? Or you're just waiting. There's a way on Thinkorswim. You can just set the price just above where you want it to go and just have it waiting in there. So there's a lot of videos on how to do this, and they have a great help button up here. And you should watch all their videos. They have a bunch, and I have tons and tons of videos about this. So the market's about to close. This is the post-market over here. So everything's going to die out. But I came over to AMD just to show you. So the stocks we traded today to get to our $155, and it wasn't without this drama, was Palantir was $30. Tesla was the big one, 113, and then I think AMD, we were just there, was 12, and I think that might have been it. Yeah, I think that's all we traded today and made any money on. Yeah, because that equaled that amount of money. But remember, I went to the scanner and I looked up various stocks to see what would work, and then I used these custom indicators and historical data. And there's another book called Day Trading Volume 2, which is, Day Trading Volume 4, which is has a bunch of breakout strategies, and they tell you when the price gets to a certain time increment level. Like this is a 30-minute chart. See here? So before the market opens, actually, what you do is you mark the open and the close of the last 30-minute chart. So if I just click here, and I click here, and then I drag this over, I don't have the chart open up, but say I drag that over, I would mark what they call a breakout. If it went below, you'd go short. If it goes above, you go long. See how well that worked? It went above, it went long. It told you. That's the 30-minute pre-market breakout. There's another breakout, and there's a book that shows you all those. I think it's this one. Is that going to open up for me? Yeah. This has them. Breakout 1 and 2. I don't know if 3 or 4 is on here. No, that's taking me to I have a desktop icons here, but this has a bunch of different ones. So that's in Day Trading Volume 4. And people wait around for those to break out, guys. I'm going a little bit into some analysis here to help you out if this is the only video you ever watch. So they'll also do a 5-minute breakout on the open session, the first open session breakout. So let's get into the 5-minute here. So here's your first 5-minute after the market opened. I remember marking this earlier because they ran into each other. So you can mark the high. Now I took to doing this rather than just a solid line and I'll tell you why. Because of all these pro traders came up with the most fantastic way to trade breakouts. They learned that you trade the breakout up, but if it comes back into the range, you never trade inside the high and low. But if it broke down low, then you'd go short. Then you wait for it to break high, you would have had a winning trade. All right. When it goes back in, don't mess with it. When it breaks out high, you have a winning trade. When it goes back in, don't mess with it. When it breaks out, you have a winning trade. It's like, they say it's like printing money, right? So that's your 5-minute, and you can see if you were trading on a 5-minute chart, you could have so easily called these trades. Another indicator down here is, this is the ADX, and this shows you the trends, and the cloud shows you the strengths of the trends. This is clearly trending up, and then it's going to show you the power of how strong it is. So these are all custom. This is a custom one. I also marked the close on this just in case it came down yesterday's close. But I mean, this is just some ideas, guys. If you can, there's more in-depth videos on this channel. I hope you do watch that. I do get a small income from the channels. I have links to affiliates that I believe in, only that I believe in, authors that I believe in, and then the $1 Million Margin Club has all the custom scripts. And since I'm a coder, I really believe in those only if they work. So what you're really trying to do is to basically see, learn these things, practice in a sim first, and then trade with like one share live until your hands stop shaking, and then you can build them up. I have a video out there called Trading with Nerves of Steel. You should watch that. So I'm not going to attach on the whole live stream for today, but if you want to, because this video would be so long, but if you want to see every trade, just go to the live trades. And you can see the live trades today, and we have a fairly large group that trades every morning. And I hope I see you there, guys, because I think that with a little bit of practice, you can make a living day trading. So the bell's about to go off. Let's listen to it. The market's going to close. A few seconds here. And there it goes. Market close. Does that feel like you're in the room? Like you got some cool trading? Anyway, guys, thanks for watching. I hope I see you in the mornings. I'm starting to say this channel is dedicated to trying to help you make $100 a day, $200 a day, $500 a day, right? Make a living. You make a living, you let me know. We've got quite a few millionaires that have already let me know over the years. Many, many people making a living. That right there floats my boat. Wow, did you see that? That's an algorithmic trade. Did you see that spike? Look at that. Now, was anybody able to catch that? Probably not. The market's already closed, but it showed it in open session. So they do these share drops. And I have my layout set up very sensitively so they pick them up. We call that a shadow wick. And most people might not have even seen that on their chart. It depends. I have a video about how to speed up your layout, speed up your chart. I mean, all kinds of videos, guys. You should check them out. Okay, guys, thanks for watching, and go green out there. I'll see you soon. So let's break it down, guys, in this collection of videos, how simple trading really can be if you just know some basics and what you're supposed to look for here. So this right here is a Thinkorswim platform, okay? Now, there's lots of videos on this channel about how to build your own layouts, and there will be one included in this collection of videos that we're doing right now. This is a 1-minute chart. Down here is a reduced day chart along the bottom here. This is your active trader where you would take trades. This is your level 2 showing you the depth of all those trades waiting down in the market for you. And this has got a custom indicator, and I put this on down here. This is a 5-minute 10-day, which is very complicated that it's here, but I think since we're going to be jumping around to so many stocks, so I can show you about how to trade and how simple it really is if you start with the right strategy and you're careful. Now, with that in mind, you always should have a day trading plan. And in that day trading plan, besides the time of day you want to trade and, basic things like that, number one thing, maximum loss per trade that you're willing to accept. Maximum loss per trade. So when you enter a trade and the numbers start cropping up here, how much money do you have? And it's going to be red if it's down and green if it's up. You need to pay close attention to that, or at least have a notification set somewhere if you're walking away that the stock price has reached a certain level that puts you into danger. Now, if you don't know anything about any of the instruments on this chart, it's already too complicated for you. So I would invite you to either speed forward ahead on this or go to one of the other videos on the channel, Day Trading for Success, that this is being broadcast on, and look for how to build your own layout, how to use a chart, how to look at all the different ways on what a layout really is and what it means, because you need to at least know that, a little bit of that, before we go on. You might be able to follow, but we focus here on this channel on day trading, and you can see me mostly scalping, and you can see me in many mornings trading on live streaming. And you can follow along with me and try to make money. When I say that, I also want to say, remember, I'm not a licensed financial advisor, and you should always seek the advice of someone licensed before you try to emulate my style of trading, or for that matter, anybody's style of trading. Speak to a professional. Now, am I a pro trader? Absolutely. Do I make enough money to make a living trading? Absolutely, I do. So I do feel like I have something to offer here. Many, many years of trading, but in the end, I'm not licensed to give advice. So you should really seek somebody who is. But what I really recommend is you watch myself and many, many, many other people develop your own strategy, kind of sift through what you want to believe or not believe, what works for you, and then come up with your own way of trading. And you might be the best trader out there that has not been discovered yet, honestly. So, then I still believe the best trader is out there and has not been discovered yet. So let's break into what I want to show you here. So on this 1 minute chart is where I would take my scalps. But if I was going to do a longer term, I would be looking at a day chart. Okay. Now on this day chart, you have what they call moving averages. This is a simple moving average of 50 and what is in 100 and a 200. What do those numbers mean? That means it's counting 50 candles, because each one of these candles equals a day. It's counting 50 of them, and then it's giving you the average exactly at that point from all of these, taking the 50 back, which is somewhere in here, and saying, here's about where the price average is. This is taking 100 back. Here's about what that is. And this is the 200 back, and here's about what that is. Now, why does that matter? Why do you need to know the average? Well, just like anything, an average price of something, you don't want to pay more. You don't want, you would like to pay less, but I mean, finding the average of anything. What is it somebody expected to do the 100-yard dash in? What is the average time? The average of anything you might want to come up with, right? That means the most people, right, do it. So knowing the average is really, really important. We're going to get into that a lot. So just that simple concept, which you probably knew, but just in case, average is where everybody congregates, right? That's the average. That's where most of it is. There's outliers, obviously, either direction. You need to know the average so you can decide if you're going to be an outlier going up or down based on that average regarding the price of something. So this is giving you the average. Now, with that in mind, you can see how they cross over. So when the 50 moving average were to cross over, and this is the location that would be at right here, right above where it crossed. That's the day that it happened. It's telling you that more and more short term, not the 200 term, 200 days that it counted back, because each one of these is a day. This is a day chart. Okay, right up here, D equals day. It's actually a day, and the time frame is 10-year, 1 day. So it's going back 10 years back, counting the days. If you pan, you can go back further, right? But we're at this level right now just to show you a basic concept of moving averages. It's so important to know moving average and just the concept of average as you're starting to trade. If you can zero in on what does average mean to me, it's half the battle of becoming a successful trader. Well, maybe not half, but a high percentage, 20%. I don't know. But it's just, you're going to see me use that. You're going to see me use half a lot probably. There's only 2 halves, right? But by the time I'm done doing this, there'll be 50 halves in my brain. But it's a large percentage of the time you need to know what the crowd is thinking. What is the average, right? Following the crowd is really important to diagnose how the stock's going to move, which way it's potentially going to move in the future. Here's an example. Many, many books have been written about this. When the 50 moving average crosses over the 200 moving average, meaning short term, it's showing you a direction different from the longer term direction. They call that the golden cross. So if we went right where it crossed over on this candle, it's basically saying, hey, it's going to keep going up. The short-term average says it's going up. Take the trade. Go up with it. And sure enough, there it went up. It climbed up. It climbed up. So this price here, when it crossed there, you look over to the right here, you'll see the price. Okay, with the lines, it says right there as it crossed over, it was $413.14. This is Tesla, by the way. There's the ticker for Tesla. This is an expensive stock. I'm going to tell you why I'm on these expensive stocks as we go on here. But where was the crossover? Was this it right here? I thought it was 413. I got lost. Oh no, right here. No. Did I just read that number wrong? Well, here's the crossover right here. Oh, I raised the candle up is what I did. So right there, I fouled that candle up. That's what I got, where it was. So that's the price right there. But here's where it crossed over, and then here was the price of the stock right here. So roughly 413. So now, where did it go up? At one point, it went all the way up to 470. That's a lot of money, guys. All right, 413 to 470, right? So that's $57, right? So $57, 100 shares, $5,700 if you had purchased 100 shares, right? You could have chose to ride it. But one of the other things you want to look at in all these books written about this strategy, as the 100 moving average comes closer to the 50, it's sort of signifying that maybe it's not going to have a long move, right? So this was already climbing with it. They were both crossing the 200. So see what happens as they grow apart. It's weakening the move. So, just by watching those three averages, you can take trades. And many, many traders, that's all they do. I don't know how many thousands, but thousands of traders, that's all they do. They call it swing trading or just trading. And they go in and they plan on holding it for a series of weeks or months based on these three moving average lines. When it goes the other way, when it breaks down through it, it's called the death cross, signifying that it's going to most likely go down. So when it breaks the 200 going up, it's the golden cross. When it breaks the 200 going down, it's the death cross. Here's probably a better example of it. It went down here, it went across here, it went straight down. Now, it's not going to be forever, right? So you have to decide when you take the trade how long you want to you just want to take your profit, right? So right here it was 263. It went all the way down to 225. So again, you have a massive profit. Even with just 100 shares, you have thousands of dollars in just that's like a week, right? So again, many, many books written about that. I wanted to show you why moving averages can be so important. Now when we annotate that to this chart, which is a 1-minute chart, here we have a 9 moving average and a 20 moving average. Much shorter term data, and each one of these only represents a minute. Now, a lot of traders won't trade on a minute. They only trade on a 5-minute, which is over here, and we'll talk about it, or even higher time frames than that. They can't stomach 1 minute. What I'm going to show you today is basically I'm going to cover those other time frames a little bit, but on Day Trading for Success, the channel that I live stream on that you can join anytime, of course, we focus on taking our trades on a 1-minute chart time frame, 1-minute candle. It'll mark it on a candle, the price, how it moved. And when you're looking at a candle, if I go over this candle, look across on these lines up here, and it's going to show you things like the range, which is pretty important. Now, the market's closed right now. So I go over that green candle, it shows you 67 cents. All right, that right there showed 67 cents. That's from where it opened at the bottom if it's a green candle, and where it closed. And there's the high, the wick is the high, but when it closed. Again, there's a lot of videos I have that show you about this. I recommend buying books that show you details. You can look at the pictures over and over. The one I highly recommend is Day Trading Volume 1. You probably heard me talk about it in these series of videos. And it even has how you can join Thinkorswim, what's an average application look like, and so many details for beginner traders if you're beginning. But basically, these candles represent a minute. These are showing you the exponential moving average. Now, why that's different than the SMA, which should be on this chart as well. Yeah, there they are. These are the day ones. Because this is a 1-minute chart, they're just going to look like straight lines because the time periods, I don't want to over confuse you, but the time period's so short that it can't show you these kind of moves because it's right in the middle of a day and a minute in the middle of that. So it's just going to be a straight line, if that concept makes sense to you. But that's why you need, if you're trying to trade on averages on a 1-minute chart, you need much shorter term. You need them to be on a minute, not on a day. And these are set for on a minute. And 20 candles back, and 9 candles back, all on time increments. Again, as these start to come close to each other, it's giving you an indication of how that trade might go in the future. This smooths them out, meaning that these EMAs are different than the SMA. SMA is the actual average of price. EMA is predicting what it's about to be. So it's showing you a little bit of future by taking the averages, using a mathematical formula, and predicting. It doesn't change a lot from the SMAs, but it's a little bit. And traders like to use the EMAs a lot because they're trading in the moment short term. So I felt it was necessary to go over that basic stuff for you. So as I describe things, you have a concept of what I'm saying. So I'm holding down the control button and using my mouse to go up and down like that. And then I can do this to open this up wider. This is your volume down here. Now your volume is going to coincide with the candles up here, showing you how strong that volume was on here. And if you go over the candle, it's going to show you the volume of any given candle right over here. So let's take a look at that right above that. So that's 141 on that. That's a huge amount of volume in 1 minute, right? So that's when traders are trading short term, they're looking for spikes in volume like a lot of people. Volume meaning they're buying or selling, like they're entering the trade. It's how much volume is entering the trade. People equal volume. How many people are buying and selling shares? And then that volume rises the more people that jump on by purchasing, buying or selling a stock. And when they see when traders see a large increase of people being interested at a certain price range, whatever that price is at over here, then they're going, hey, which way is it going? Everybody's pushing that stock a certain way. Maybe I should go along with them. Again, an average. You're jumping on what the average person's doing. You can't count on it for very long because it's what just happened. It's not what's about to happen. It's happening right now when that volume goes up. So that could change in moments. But you can take advantage of right now for a period of time, sometimes seconds, sometimes minutes, sometimes days. So you just have to watch other data to see when it's no longer, going the same way it was. And scalping, 1 minute trading, like I'm going to show you today by going over other stuff, is really wanting to look at the short-term decisions that people are making that might rise that volume up or down. I don't want to overcomplicate it. This is just showing you how many people are jumping in and out. This is showing you as it moves, it would move, and this will be moving with it. Right now we're a closed market. But you should go and see some of the live trading archives, and you can see how it moves with it. And that's basically how price structure is going to be shown, and how volume and price is going to be shown on a chart. So you can, follow along with me now as I describe it. So, trying to figure out how that's going to move in the future is a lot of the battle. So there's many ways to trade. I'm going to show you today a couple of the basic ways that most people trade, but I'm going to center on what I believe can make you a profit every single day if you follow your day trading plan of a maximum loss per trade, a maximum amount of shares that you would go in. And that might vary depending on the price of a stock, the more you can afford, obviously. But I switched over to what I would consider to be a momentum style of trading. And how I did that is I have a scanner reading here, and I went down to one that actually moved pretty good. This moved 42% today. I mean, there were bigger ones, but this one actually price-wise didn't move as much. So I showed you one here that you would see that a lot of traders would have jumped on to make a lot of money. So let's take a look at that in that style of trading, which is basically, you're not necessarily looking for a dip, because one of the other ways of trading is you look for a dip in the price and then you buy it and ride it up, right? And then you get out. When do you get out? Who knows when to get out, right? It's so much easier to call it when you see the finished move on a chart. It's really not fair, right? Because you get to see what happens. But if you're in the middle of this trade and it starts to go up and then this happens, you think it's over and you get out and you barely made any money. But what actually happened is it was barely up there yet. And then constantly it would fake you out like it's over. I better get out. You know, it got constantly. It's very rare that you get a parabolic movement in either one direction down or one direction up. There's usually this back and forth because the buyers and the sellers are fighting constantly. So you're having to figure out, is it a shakeout, fake shakeout, or is it really shaking you out of the trade? And as you get more into trading, you can figure that out. But momentum trading is very, very difficult. It's one of the most difficult ways to do short-term trading. You'll see a lot of people online showing you, some will actually show you live trades, very rarely. Most just show you, hey, here's what happened. So you don't really know if that's what happened, right? But if you get to some of the traders that show you live trading, you can see the struggle and how difficult it is and how good they've gotten over the years and how many hundreds of thousands of dollars have they lost before you got there. So I don't recommend this type of trading to anybody. I do it. I would not do it on this platform because it has a lot of glitches. And I have many stories about that in different videos. If you want to watch it, watch them. But it is a style of trading that people do. And if you look at it, because this stock is really, the value of this stock is so inexpensive, $1.57 right here wherever it closed. You know, this is in the middle of the day. I picked a spike here, but that's the price that it closed at, was $1.57, right, or $1.67 on market. Well, let's just look at this spike early in the day, because this probably would have got a lot of people. Here's to get in to make money. Here's where it started, right around 10:30 a.m. on East Coast United States in the New York Stock Exchange, right? People scanners started to pop off. They probably popped off over here even at 9:47 in this area. Let's take a look at this one. There's the price of the stock, $1.28. When the scanner probably kicked off, or $1.27, right? And you saw this spike and it kicked off. And maybe you bought here and you put in, let's just give an example. You put in 1,000 shares, right? A lot of people that trade this kind of trading, since they can afford it, they might put in 10,000 shares, right? So 10,000 shares is $12,000 of value of this stock. And how do they get that? They margin, right? They could really be, well, I mean, if you made the PDT rule, which you really would have to have, $12,000 is nothing. You know, it's nothing to invest that kind of money in this style of trading. But you've got to keep in mind that, you know, there are 12,000 shares. How every penny, you know, if it goes down $1, that's $12,000 you've lost. So but the momentum traders take that kind of risk, and they do it all the time because that means you can make that much money or more. Let's just say that they stayed in this move, right? It didn't get shaken out here, and they had, let's just say they have 10,000 shares, right? And they go from $1.27, and then somewhere in here they decide to get out. So now they get out at 20 cents up with 10,000 shares. Okay, so you know they've done quite well. In fact, they made $2,000 in just a few minutes, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Basically, 12 to 13 minutes, they just made $2,000 with 10,000 shares. If they put in 20,000 shares, they've made $4,000. And then they go throughout the day, they do this kind of trading. Like, let's take another example, $1.36 all the way up to $1.82. So they've got, let's just say they did 50 cents. Okay, somewhere in here they got. So they did 50 cents. Well, they would have had to be perfect, but let's just say you did 50 cents. So you're basically making, for every 1,000, you're making $500. Well, I'm sorry, I have to get the calculator. Let's just do it. So 0.5 cents times 10,000. Oh yeah, so that's easy. Yeah, 5,000. So $5,000 on that trade all the way up. So, but if they did 20,000 shares, they make $10,000. Now, you can see those momentum traders make $100,000 in a day on a regular basis. But keep in mind, it can go the other way and blow out your account in just a few minutes. So it's really, you have to really be a professional. And this is a lot of people will suck you in to buy their courses and things. And honestly, guys, you have to be trading for many, many years. The course is a waste of money, in my opinion. No particular person I'm talking about. My opinion is you don't want to go investing in stuff like this, because it's just like you can watch a video about heart surgery or read a book about heart surgery. That doesn't mean you can go perform heart surgery, right? So it's, and I kid you not when I say it's probably close to that complicated to make that kind of money doing in what they call momentum trading, chasing a stock higher and higher and higher, and knowing when to add and get out, and multiple ways to trade that. So that is a way of trading. And when we're on this chart, the other way of trading, of course, is to buy the dip and then get out when it's higher. You know, again, buy the dip, get out when it's higher. How do you know if that's the bottom or the dip's going to keep going, and when it's going to go higher? Well, you don't know. You never know that. You, again, look at the averages and all kinds of indications, which we'll talk about, to try to decide to make it easier and easier and easier to do that. But even with all those in mind, buying the dip is a pretty risky strategy, and you need to be pretty good at it. It is going to be a bit of what the strategy is that I'm going to show you that I think is more for beginners. So that's why I'm kind of giving you some background. Buying the dip is involved in the strategy that I'm about to show you here, that I recommend that you guys try. So momentum trading can be extremely risky, much more risky than buying the dip. Getting enough data to buy the dip. When you're momentum trading, like I was just showing you, and you're trying to figure out when stock's going to move up or go down, a lot of it's based on reading the level 2. And obviously you can use some historical data and check about the company and its fundamentals, and then what is the catalyst or news event that's making that move. All those things come into play, but it's all about really reading how fast this is going to move up and down so fast. And usually what happens is when you see the price freeze on your level 2, and this is fairly advanced for the people that are watching this that aren't used to trading, you'll see that these two, the price won't move, but the volume will spike up, and basically the price are going back and forth within just a penny or two, just back and forth, because the bid and the ask are getting filled just instantly, and you're waiting for all these shares to be bought up. And when you trade something like we were looking at a minute ago, there might be 10,000, 20,000, even 50,000 shares. You're waiting for them to disappear off the level 2, and then it's spinning up, it's winding up. It's, say there's 50,000, it goes to 40,000, 30,000, 10,000, 5,000, and it's about to pop, and it's going to jump one direction or the other based on which side that those shares are being eaten up on, the bid or the ask. And then it's going to spring up or spring down, and that's when you jump in to the trade. So that is a real skill. And it's, it's not a lot of people. Some people are very good at it, but 95 to 99% are not good at it, and they lose everything they have. So again, my recommendation, and all my recommendations are from somebody who's not licensed, that you should, it's just my opinion, basically my recommendation, is to not even get involved in that till you're way further along in your trading journey. And then you might be that guy that's so good that can make hundreds of thousands of dollars, but you don't want to count on it. So back in 2022, a group of professional traders got together. They're all wealthy, and they were watching, successful day traders, and they were watching the momentum craze take over. We're in the heart of COVID now at this time, and they wanted to come up with a strategy that was much safer, that people can consistently make money. So rather than be the hare, you're the tortoise, and you win the race as the tortoise. And it's slow and calm, and the risk is much less, but yet there's a way to become successful. So they work together to try to figure out what is a potential strategy that even new traders could get involved in and not get sucked into losing their house based on these momentum style of trading that everybody was promoting so highly to sell their courses, right? And it's not that they're fake, right? It's just that, and how do they know whether you're going to be that guy? Do they just assume you're going to fail? No. So you can't be unfair to them if they want to sell a course that shows how to do it. Maybe you can do it, right? You could see the logic in their head, or their motivational speaker speaking to them. Well, how do you know everybody's going to fail? You might be talking to the guys that are going to make millions of dollars. So tell them. So, but most don't. And so having something else out there that the majority can succeed in is what they were looking for. It took a little while. You saw me cover a lot of it on this channel, because it was through the $1 Million Margin Club. What were those people that could margin up to $1 million, what were they figuring out for your average trader? Well, they came up with a plan, and they came up with a book that was called Day Trading Volume 1. So I'm going to go ahead, and this is not a whole big promotion for that book, but it's something about, I'm going to show you this strategy, and then I'm going to take it further, what's happened since the strategy came out. So it's worth a listen. So first let me show you their promo video, which is, where did it go? I think it disappeared on me here, guys. Hang on a second. So this is clearly going to appear to be a promo for the book, and it's a best-selling book for a reason. So to get out all this information quickly, this is a commercial that they released, and I just want to play it here, and then I'll stop it before the end of it, or maybe at certain parts in here, so we can talk about why it's so important, because it covers so much in like 1 minute and 42 seconds. So this is faster than what I can do. And then we're going to jump into detail about what really it's about. So here's bear with me for a minute and just listen to a commercial.
No strategy, no chance. Day Trading Volume 1 is how beginners become pros. Inside, you'll see real-world setups, practical tools, and step-by-step training, not just theory. Here's what's waiting for you. Learn range-bound trading strategies, channel trading, scalping, shorting, how to get a broker and guidelines for choosing one, margin versus cash accounts, cheat sheet for the questions they might ask, understand market, limit orders, fees, and more, approaches to risk management and keeping emotions in check while trading, learn simulated trading, understand 10 key signals that can improve your entry decisions, learn scanner settings to find the stocks, explore tools and techniques commonly used by experienced traders, learn studies and indicators, average true range levels, how consolidating stocks are identified and potentially traded, the 10 important candlestick patterns you should learn. A sample. Okay, so I'm going to pause right there for a second because this shows a day trading plan. But no doubt, as you can see, all the stuff that's in that book and how it was put together by a group of professional traders that really knew what they were talking about, why it changed everything. So we're going to go into that strategy that it's promoting, which is a range-bound mega large cap strategy based on a market cap of $25 billion or more. So basically, you don't really even need to know what that means other than it's big stocks, right, that move slow like the tortoise, not the hare, that you can count on their movement within a high range and a low range. So that's what's so important to remember, right? So here is an example of what they have in the book, which I think still stands the test of time. You know, trading hours that you want to pick. This is when their strategy they recommend. Although if you watch me live, I'm doing the Scalp and Recoil, which was originally based on this strategy, but I'm starting to find that coming in a little later, it's even more consolidating, like at noon, and it's better for the Strike and Recoil, and we'll get into that later. But you know, you might want to have the range of a channel, and we'll come back to what that really means. But it's basically, you saw those SMAs. You saw I talked about the golden cross and the death cross. You know, they make a ceiling and a floor. And that's basically what a range is. So we'll talk about that a little bit more. Your share size, the goal you might want per trade is very conservative here. Daily goal, $200 a day. That's $4,000 a month, people. Life-changing, trading just an hour a day. Maximum loss per day. So I wanted to stop right there just so you saw
what a trading plan looks like. Let's go forward a little bit.
Of a day trading plan. Learn how to draw support and resistance levels.
So there's what we just talked about. I hate to make it a giant commercial, but it covers the stuff so much better than I can. So based on historical data, you look for where stock price, remember these candles are showing you the stock price over here, how they move. When it stopped abruptly and turned around, stopped, consolidated and turned around, stopped and turned around. So by marking those areas, they're most likely, not always, there's a good possibility they're going to repeat. And that's called historical data. You're marking something that happened in the past. It's data. And you're making a note there. Now, you might be able to remember it mentally, but it's obviously a lot easier to draw lines where stocks consistently consolidate. So you go short, long, short, long, short, long, meaning you take a short or you go a long trade, or maybe you just wait for the bounce. How many times did it hit that level? And you're going to find this over and over in this strategy I'm about to show you. That, remember, I'm not selling you a course here, guys. I'm just telling you like it is, okay? Go and look on the chart yourself. We're going to look ourselves here with different stocks, but I'm trying to get through this as quickly as I can because it could be a 50-hour video. I'm trying to make it much shorter. But so support and resistance levels, finding them, learning to see them on a chart, very important. And they have specific ways in this book that is great for beginners to start.
Examples of how to mark Fibonacci retracements.
Here's the other one. Fibonacci retracements they use, which are always marked left to right. There's a low. Here's a high. It could be low to high or high to low, but they're always marked left to right, where you're looking from a certain time period from the high and the low, and then you click, you left click it, drag it, click it again, and then all these levels are going to open up. In this particular strategy, they're support and resistance levels. They're creating channels. Now we're going to go into a little bit deeper, but I don't want to overwhelm you. Really, the things that you need to know for this strategy are pretty basic, but if you've never traded at all, this seems Fibonacci. What the heck is that? That's a big word. So it's just not, as you start to get into it, it's just not that hard, guys. But it seems like it in the beginning.
Levels. Learn to identify and mark historical data levels. Learn the value of studies, tools, and indicators such as the VWAP.
So that VWAP is not on the chart yet, but we're going to do it on the chart, and that's the volume weighted average price, meaning what is the value of that stock at any given moment that the big traders see? Like, that's the value. That's what it says to do. It's worth $219.24. If you pay more than that, you're paying too much. But of course, if you have data that it's about to go up, when are you gonna? You can't always jump in at the bottom, right? But this is an important indicator, and we're going to be using it.
SMAs, EMAs, the volume profile, the Scalp Meter Pro, level 2, time and sales, RSI, and the ADX. Detailed examples and analysis of trades taken. Yeah, okay. So we're going way too far into this, so I don't need to show you the whole commercial. Oh yeah, this is what I wanted to get to. So rating your stocks that are best to trade, and it has guidelines. And what it's trying to do, and you need to create your own guidelines, and we'll show you some. Now, this book was put out in 2022. The markets change a little bit. And some of these things you might have a really hard time finding a stock if you try to follow all these. But if you can, you're most likely going to get a stock that's going to be easy for you to trade. But you're looking for an ATR that's greater than 5. What is an ATR? That's the average true range of a stock, the price of a stock, how much that stock moves. Like is it going to move between $1 and $1 and $10? So you want it to move at least $5 according to this. We'll go into ATR in more detail. You want 5 days of alignment, meaning you go back on a chart and you look, are those candlesticks all aligning within the current ATR high and low level? It's getting complicated here, guys, but there's just like 5 or 6 things to learn, and then you can just apply the same stock to the same stocks you find day after day. Do they fit? Then the Fibonacci level we just talked about, you don't want a news or a catalyst. You don't want to trade when options are closing on a Friday because you don't want anything to affect that tortoise,
You know, that slow turtle moving. You just want it to stay a high and a low. You want it moving right in between. I call it a snake sometimes. Just snakes along, moving. That's what you want. You don't want big jump outs. Great. If you catch it right, maybe you make a big move and you make lots of money, but you don't know how long it's going to last. It becomes almost momentum trading again on a big, expensive stock. So you don't want to look for things that are going to be outside the box. You want just a steady flow. That's why pre-market, you're looking for a consolidating pattern where it's just staying in a range. You don't want big spikes up, big spikes down. You know, then it's the volatility of that stock is all over the board. How are you going to be able to call it when you trade? You don't know what's going to happen. You know, so, I mean, the reality is we don't really know what's going to happen no matter what, but the more signs that it's just steady as she goes, that's what this whole book was that these professional traders put out, and it changed everything right in the middle of COVID, you know, where a lot of retail traders were coming in, a lot were losing their butts, and something had to be done. So this strategy, I'm sure you can find it all over the internet, is really something that changed a lot of things. So again, these are all the different things you look for: your channel size, support and resistance levels that you want. You could try to find 15 or more is good. Let's play the video here. You want one that at least one of today's channels was tradable yesterday, the day before.
Checklist. Day trading volume 1 started it all, and its success was followed by the candlestick pattern playbook. Over 60 patterns with accuracy ratings. Volume.
Yeah, that's really cool too. Not to do a more commercial, but this is the only one that rates the patterns. We're not going to get into patterns today on this. At least on this clip of the video. And then it goes on with games to help you learn it. And then the next one here,
filled with challenges to improve pattern recognition. Volume 4.
This one, it changed everything too, because it shows how to trade the open, and many traders, it shows the 4 most common breakout levels at the open. Again, not something you need to understand right now, but when people are trading the open, they're looking for a level for the price to break out of, and that's sort of momentum trading, except it's not on a momentum stock, so you're not expecting it to keep going. But when it breaks out, that's a signal like you have an opportunity here. So this talks about the 4 breakout levels and how you might trade them. Another good book. Actually, we'll stop there because I'm not doing a whole, it gets into indicators and stuff, but that's sort of what I'm going to be showing you based on the strategy that we're going to break into some $25 billion market cap larger stocks. Not a mystery. It's just stocks. And some of those stocks are going to be on this scanner, which is basically my large cap consolidation scanner: NVIDIA, Tesla, Google, Apple, AMD, Palantir, Hood, Amazon, MU, Microsoft, Intel, and Iron. So these are some of the ones we're just going to look at today that might hit the scanner that could be traded like we just looked at that criteria at any given day. Now I do custom code scanners that help a lot. This is basically a watch list though that I just come back to regularly, but I do have scanners, and there's lots of videos about that on the channel to see that, or go to the $1 Million Margin Club. So that's the ones we're going to be covering today. So let's get into how you can, the simple part about how you can trade these stocks and how you see the signals. I'll show you right here how you could see the signals if you followed the basic strategy of consolidation, not breakout, not newsworthy momentum stocks, just consolidation, how they present themselves over and over again, and why it's so safe is the larger the stock, the more expensive it is, or the larger the market cap, more expensive, the more you can rely on it steady as she goes. So you don't get into too much, it helps you from not getting into too much trouble, because most likely it's going to retrace whatever it, if it goes down one way, it's going to retrace back up. If it goes up, it's going to retrace back down, because it has to in order to do that steady flow. It's going back and forth, back and forth. When it breaks out of its average true range, that's when you need to be careful. It's no longer going to trade like a tortoise. It's going to be more like a hare. And you might be lucky to get that breakout and it just keeps going. The problem is you never know when it's going to stop. So when I do those breakouts, when it goes past, I just take trades all the way up, say it's an upward breakout. I would just, as this broke out, you can see, like, we're not really talking about this right now. This is the 100 moving average. See how that it respected that? Remember we talked about SMAs? Here's an example, all right? Perfect example, right, of this day. Here's your 50 down here, not too well respected, maybe tapped a few times here, but your 100, you don't know for sure what's going to happen. I think there's a 200 here somewhere, right? Yeah, way down here. So it didn't come into play, but look at that, right? But back to what I was saying, as it's going up, you see how it keeps, it's not just, it's going to look like it's going to go back down all the time in real time. You know, it's real easy in retrospect to look at these. But if you were taking that trade long, you could have just as easily got caught up in that and been lower than when you started, right? So what I always preach in what I trade is I'll take it going up. When it shows signs of it's going down, I get out or I'll go short. And then when I see signs that it's going back up, it's broken a level. Like say this was your ATR, because it's not, it's your 100 moving average. So we can use it like an ATR. It's possible that the ATR is right here. No, it isn't, because they're down here. I can see on the 5 minute it's set here. But anyway, then you can bank the money as the shenanigans are going on, and you can ride that trend. Look what happened here. Another little trick, and I might cover it in other times. Really, the last 15 minutes, I wouldn't say half hour, but the last 15 minutes, whatever direction the stock starts going, it continues to go. That's a trick. Not all the time, right? Not all the time. But the last, 5, 10, 15 minutes, it's a good thing to try on these large mega cap, over $25 billion market cap stocks. They seem to do this over and over and over again. Open up the charts. Look at the stocks yourself. What an opportunity is, right? 5 shares, 10 shares, whatever you can afford, in your account, and just make $100, $200, $500. But again, pointing out these kinds of things is what I'm going to try to do, because this channel is dedicated to ways to help you make a living. You need to find the best way for you, and you always have to remember that nothing's for certain. Nothing's going to be, absolute. So you have to have that max loss and get out, and then live to trade the next trade without saying, oh my God, my life's over. I can't trade. I suck. What am I even thinking? Why did I think I could do this? Main thing to remember, guys, stick to your max loss. And if you have, like I usually would tell people, if you have 3 bad trades, particularly in a row, you need to stop. You need to walk away. Probably stop for the day, but come back. Something's not right up here. But day trading plan. And we'll talk about that a little bit more too. But let's go ahead and get into really looking at these individual mega and large caps. How would things work out for you if you traded something like Day Trading Volume 1 or some sort of facsimile, a spin-off more that's a little bit more for our current market in 2026 is when I'm making this video. So I've opened up a 5-minute chart here, and I put on a custom indicator here because this is just going to make it so much easier. You don't have to have this. Okay, how you would figure this out on your own, and this is your average true range. So let me go back to the day chart, and I'm gonna expand in on this area right here, and you need to know what the average true range is. So if you go over the day, well, that's the day that just happened, but if you go over the day before, which is right here, and you look at your average true range, which is Wilder's mathematical formula based on a 14-day average. You see it says $5.79 right down there when I go over that candle, okay? Now, if you want the full range, which you should have marked, you go to where the candle closed, which on a red candle is the bottom, and you add $5.79, and you draw a line, right? And then that's to get the high from that close. And then from the close, if you want the low, you do it this way, $5.79, and draw a line. And you end up with a high and a low ATR. You can mark it behind the low. If you want to do what was Day Trading Volume 1 figured out, is basically, even though there's a full range of that amount, it might not make it to the top of that range. In fact, it might move that amount of money but it might go half up and half down. So it came up with the concept and then back tested it. And it's not like it invented this. Traders were doing this stuff, right? But it put it in, they put the pen to paper and put it down so people that didn't know about it could learn. So then you would just divide that ATR in half, right? Whatever's over this candle. So you say $2.85 or whatever, and you subtract $2.85 from the close to get the low, and you add it to get the high. Now you've got half the ATR. So what this indicator did here on the 5-minute, what it does, and it's at the $1 Million Margin Club, which I think they have the best ones, all approved for Thinkorswim, all work flawlessly on Thinkorswim. This is showing you them. There's the top, the whole amount. There's the half amount, which is more respected, as it turns out. It seems to hit it and turn around more often. And when you're trading, you want to take a note of that. As you can see on this particular stock, it broke out. It broke out, and now you have more of a momentum. You have more of a hare type trading than a tortoise type trading. However, you can use other ways to trade this action. It just would probably be one that I would reject if I was you, to be a more tortoise type of trader. I'm trying to say, as you can see here, it respected the two lines here. It actually hit that half ATR. It was already above it on. This is, the gray is pre-market, right? And this is the open session, the live session, starting at 9:30 a.m. here. So it did go down, it went back and tested it, they call that, and then broke out. And you would definitely have this on your trading the open strategy too when something like this happens, but as a breakout. But then you'd have to do what I was talking about a minute ago, like, hey, when it starts to go against you, bank it, and then think about getting back in again. I can't help but point out something that's really a strong thing to look at. I said I wasn't going to talk about patterns in the candlestick pattern playbook, but this is an amazing pattern on a 5-minute. What they call this is a bull flag, okay? And this is the pole, and the red candles are the flag. So you typically would draw a line right here. If you were trading this on a 5-minute chart, you would block that out. The second green candle after it breaks the flag, you go in. It tells you all this on the book. And then 82% of the time, it will go the length of the pole from here, the bottom of the flag, down. So we're basically saying 179. Let's see how it did. 179.50. The pole start. You could say the pole either started there or here, but let's call it $3. Okay. So this should go $3 if it followed the 82% accuracy. But either way, it's going up, right? So 179.87. There it is, guys. Exactly. Just like, it's like, there's a reason why it's 82, but I didn't know it was going to come out that good. But so yeah, that's a great book to get to. That's almost kind of funny. That was exactly $3. But so, I mean, I could have manipulated that to make it better, but that's not what I did. I had no idea. It didn't matter to me what it was going to come out to. But anyway, so this way you'd have to trade more like a hare, right? You'd have to bank it, ride it up, and then probably bank it, wait, and then when you see the second, like a real move back up, like you probably would have marked that level that it stopped dead, made what they call a flat top, wait for the flat top breakout, and then get in somewhere. You're not going to get the perfect place every time, right? You're going to leave some money on the table. You don't know what's going to happen here, right? But if you're trading in a 5-minute, again, amazing, easy flat top breakout trades. You get in somewhere in here after the 83. We haven't even talked about even in whole dollars, because this is at 82.93. I marked it, but at $83 as it broke it, the even dollar, whole dollar, I would have jumped in if it was me. And then you see 83, and you go all the way up to 84.9. So you make $1. 100 shares, $100. It just depends on what how you're trading. 200 shares, $200. If you're on margin, you can do that, because you need 25,000 in your account. That means you have 100,000 to trade. Easily you'll be able to afford that trade, no problem. Okay, so if you're doing then you just do 10 shares or something. You do what you have to do. And if you've been following the news, and probably you might be by the time you watch this, they've lowered the PDT down to like 2,000. We're just waiting for the SEC to approve it. But that's just an example on how you might trade that when it's broken out and you're trading the hair strategy, which is, again, not the strategy that I'm trying to promote here that I think is safe. So NVIDIA isn't a great example. As it broke out of that, I would have moved away from it. You actually would have never seen me trade it, most likely, because it broke out too quickly. I would have not even gone into this till like about 15 minutes after market opens. Let's look at a different one. So I'm using this scanner. So I'm going to go ahead and click on these. It's linked. So we'll go to Tesla, much more expensive stock. It's thinking. So let's see how it did on the levels of the only levels we have marked right here. And we're going to stop after this one and mark more things. So this broke out immediately after this level, so you call it a breakout, retested. Now we're getting into another strategy here, so I'm over confusing. This is called the escalator strategy, where it retests and goes up. But you can see it has resistance on the ATR high. So if you came back later in the day and you were doing the tortoise type strategy, a consolidation type strategy, scalp and recoil, or all RV, whatever you want to call it, you have some consolidation in here. Now this is on a 5 minute. We're going to look at a 1 minute to really zero in on these, but I'm just trying to get you the overall, I'm calling it the tortoise point of view here on these. We're going to Google now. So Google used the low ATR for resistance, broke out here. Now, since the strategy was developed back in 2022, the market's changed a bit, where during the current politics of the country, nobody can rely on anything. So and it's just terrible. I can't stand it, what's going on, but we got to wait it out, I guess, until we get, cooler heads controlling the market. I'm not going to get political on you, but it's very hard to count on anything. What you do see here on Google, though, on the 1 minute is the 50 moving average, which wasn't marked on the 5 minute, which became very, very, respected. So now that you see how we're looking at the ATR level on the 5 minute, let's do some other stuff on the 5 minute that it called out to do. Let's just start with Google, okay? And we're going to do the Fibonacci levels. What is the Fibonacci level? They call it nature's mathematical formula, right? And basically, I have it on my tool. I put the tools up here. This is how to do it, build your own layout. So I'm going to click on Fibonacci, and then I'm going to left click on the high. So it's 349.75. I look over to the right to get that price as I move down. There it is. I click it. I let up the button. I'm dragging down to the low. 306.46. Oops, I was there for a second. So sensitive, guys. There we go. So now it opened up nature's mathematical formula, meaning like how many rings on a tree does it repeat, and so on and so forth. Now, this is part of the strategy for large cap traders to narrow down their channels. And what that book called for, and what a lot of traders did before that, is they let's just because I might do this more often, so let's just customize the grid here and add another 5 minute down here. I want a 5 minute 2 day clean. Here it is. Okay. Now this is a 2 day, 5 minutes. So they say market on a 10 day and a 2 day. Now you're going to have a lot of levels here. When I do that, it's going to look really confusing. But when you zoom in on a 1 minute chart, it's not too confusing. So the levels are different, and it's going to open them up in different areas anyway. So let's start at the bottom. This is low to high now. So that's at 50 cents. Now, a lot of times I will do that. I will make the $0.50 in this one, really, I would make more at 334, We haven't talked about the even and half dollars yet, but they're really, and whole dollars, I guess I should say, they're really important to think about. So I'm actually going to make that like that, and I'm going to make this a different color. We're getting a little deeper here, guys. It's probably getting more confusing, but let me get this here. All right, so this is how this day would have ended up here. So let's zoom in. I don't normally trade Google. This is where I ended up to show you guys. Is there data on the 5 minute that helps? Well, look at that channel. That's a pretty good channel, right? Let's go over and look on the 1 minute, though, because that's where you're going to be trading and see what it really showed us here. How often did those levels get respected? We have this amazing 50 moving average. Look at this, guys. Look at how it rejected. That was an easy trade to call. This one very similarly. This one too, when it doesn't make it to the top, you jump on as it starts to go down. You know, this one hit the other fib. I mean, this one, again, it didn't go. So somewhere in here, you realize it's not going, so you got jump up. This one exactly, you know, this is not where we marked this, right? This just happened here. So, but you know, this, and then you probably end up marking historical data here, so that if that ever happened, you know, while you were live trading, you would do that. And then when it happened again, you'd know, like, go short, you know, it's going to reject. Or if you're going long, like, get out. So it's all about marking your historical data levels. I don't want to over confuse you, but the fibs, so many people mark it. Now I'm going back to trading with the crowd, right? So many people mark that level that it becomes a self-fulfilling prophecy that everybody reacts the same way. I had somebody ask me that used to trade. I'll point out she's 90. She's 90 years old and used to trade stocks a lot. And then as I was explaining, sharp as a tack, as I was explaining this type of trading, she says to me, like, well, how do you know that it's going to stop at those lines? How would you even, I mean, the concept of that is unbelievable. That's back when she traded. You had to call in, use a broker, and her main thing was, how do you get the trade filled? We had to wait hours and hours to get the trade filled. Thank God we don't have that anymore. Now you can take the trade yourself, and because of the liquidity, meaning the amount of volume in the market, trades get filled instantly. Maybe not at the exact penny, but pretty darn close, right? So we don't have to worry about that stuff she had to worry about. But the way I answered the question was, it was earth-shattering to her, was we make it stop at those levels. The traders make it do it. That's it. There's no puppet master. There's no mystical thing. Now, there is manipulation in the market, of course, where you'll get the big players come in that spend, you know, millions and millions of dollars having the smartest minds in the world program algorithms, you know, and then they'll dump, like, you know, millions of dollars into one trade to affect the movement of a stock because they're going to pick up all your stop loss. Again, getting more complicated. So you have to watch out for that. That's why doing this was taken into account by the professional traders that designed sort of the RV. I'll start saying RV instead of tortoise. The RV strategy, which is tortoise, the slow moving strategy, but yet in a 1 minute chart, you get out at your max loss. So those algorithms that are manipulating the price, you just get out and you get away from that stock. What's going on there? That doesn't even make sense. Get away. It should make sense because the crowd, you and many other people that are doing the exact same thing, are affecting this price. You're making it do what it should do. And the more people that know, the more it does exactly what it's supposed to do according to these levels. That's it. Not rocket science, guys. Not rocket science. Couple things to remember. You can't actually see the future. You only get to see historical data. Why would that help? Because everybody does the same thing. Two basic things. That's it. Not everybody. I'm generalizing, but you know, I can already see the chat coming in. You know, just like, no, what are you saying? Don't ever say ever. Don't always say always. Yes, guys. I'm generalizing. I'm taking license with how I speak, so I don't self-correct through this entire video. But yeah, it's we know what's going to happen if we have half a brain. High likelihood. When I trade the scalp and recoil, guys, you can watch me. When I trade the RV, I'm 90% accurate. When I trade the scalp and recoil, I'm 85% accurate. I haven't talked about those strategies yet, but I personally see it happen time after time after time. Come on with me and trade, and you'll see on a live stream. You know, you can see real time, no shenanigans. What's going on? You can see it going down. You can see my accuracy. And you can learn about some of the tricks I do too to trade. Okay, enough of that self-promoting commercial here. Let's make sure you make money. So you would mark levels like that, like I just did, historical data in the intraday as well as the past. But what you would also do is you would mark it before you start, right? And the strategy calls for that. Let's go to a different stock. Let's go to Apple. And now let's go ahead and put in these ATRs so we don't have to keep, because we haven't even taken into account where those are on the 1 minute chart. So this means MMC, $1 Million Margin Club. Remember, I'm a coder. You may see stuff here that hasn't been approved by Thinkorswim yet, that I'm being hired by prop firms to put out. So don't get all mad and make phone calls. But he has it, you know, because I code for Thinkorswim. So you're going to see stuff that isn't even out yet. But this is the high, low, let me see, multiple range. I'm looking for the multiple range, and we're going to do it without labels so it doesn't get complicated at the top of the screen. When you get these things, you get many versions of them. So I'm going to go ahead and do multiple range without labels. It's going to come in over here now, okay? I'm only doing that. You don't have to have it, so I don't have to do the math on every single stock. And now we're on Apple. Let's open up the 5 minute over here. Oh, let me do it on the 10-day. 5 minute, 10-day over here. And auto zoom. And let's go ahead and do, well, first of all, let's just see how we did here. Okay, so you can see it broke out. It came back. We don't have any other levels here. Let's see if the fib did it. So this is a consolidating type way to trade, but you can see we don't really have any good levels here. We don't have enough to take trades. I mean, you could have done it right around here for sure. You can see, again, here's that hole. Wherever it goes a certain direction, you can usually go that direction. This is on a 5 minute chart. So you would want to get out. Oh, see, because it hit the ATR. There's an example of, I talked earlier about, hey, the last 15 minutes go the way it's going. And then if there's an indication that it's going to stop, then believe it, because you're already kind of taking a chance here on this. Kind of always happens, but you can't count on it. Kind of always, you might be a winner, right? Let's see what happens if we go ahead and fill in these fibs that so many people do. Now, I can't mark the high there because that day wouldn't have happened yet. So probably the high is going to be right around here. Let's find the low way back here. It's going to take a minute. I'll drag it out here. 28. So I would go to, to the 48. I would go to the even dollar. Close enough. Remember, now these aren't, you're not going to take a trade at the exact level of these Fibonacci's if it seems to show that it's, that this is where the high was, I believe, was right here. So it's just the general area, and then it's to be, okay, so I want to go to 279 even, or close enough. All right, so we'll call it there. So there's the 10-day. Now let's see what happens here. We'll look on our 1 minute first, our ATR and our fib. Our fib's at the same level as the ATR, so it's not helping us any here. And that's one of the reasons this strategy came in with a 2-day 5 minute fib. So we might get a tighter level here. Let's see what happens. I don't know what's going to happen here. So in case you think there's I'm following an exact strategy that was put out, okay? So I'm on the fibs, and I need to go to a 2-day. So there it is. So we'll go low to high. It's an even dollar, which is great. No, I can't go to that. So I've got to go from here to here, right? Because that wouldn't have existed yet. So that's we call it at the 50 cent. That's pretty close. There it is, 50 cent. We're going to get into half and whole dollars, why they're so important in a minute. There we go. We're going to make that a different color. You can already see that it looks like it's going to really help us for channel trading. You always do them on a 5-minute chart. Remember, guys, why do you do that? Because everybody else does that. That's why. So how many people have read that book? How many people designed that book ahead of time? Why they put that data in the book? How much back testing was done? Look at, you can see it's just amazing how well this worked, right? Look at this, guys. Look at this, right? Even here, you know, and then, you know, up here, it kind of stopped it above it too. Not perfectly, because that's a pretty big swing there, but here is like amazing. If you had traded throughout the day, the fib levels just got so respected. So channels, ceilings, floors, right? So if you just took that trade and you got out as it started to dip, you waited for it to hit again. Maybe you got a little scared here, but then you held on to it and you got out as it started to dip either here or here. And then you took it again when it got down, you know, all the way. You waited for that. And then maybe you held on because you're green. Maybe you're not going to get shaken out at the first time that it went back. Maybe you're going, I've already made some money. I'm holding. I'm going to get ready to get out somewhere where it had been getting out. And it probably would have got out right there. And the reason why I would have got out right there is because of this. I would have marked an intraday historical data that it did it, it's kept stopping, and that would have made me think it was really doing the same thing again. So I would have missed the total move. But, you know, I don't want to be unfair and say I would have held it all the way up. I probably would have got out right there. And that's a lot of money. You make a lot of money already trading the stock. So do the fibs help? Yeah, absolutely. In the strategy, can we go back to the basic, like, what the heck am I showing you here? Yeah, let's do that. Basically, I'm finding you a range of a high and a low, and I'm picking a big stock, showing you how to find those big stocks, the criteria, you know, that it has to be over $25 billion market cap. And, you know, you want to set your scanner so it hits it, you know, but you can make a watch list because pretty much you're going to miss some stocks if you don't have a scanner, but pretty much the same big boys come up day after day. You find their range, you make sure they're consolidating and not breaking out, and then you trade either just long and get out or long and short, which is better if you feel comfortable doing short, as long as you know you follow your day trading plan and you get out. This is the key to success. This is how simple it is. What's hard is you obeying yourself and getting out. What's hard is making the share size low enough and not going for all the money so you can maintain the distance of the channel without jumping out of the trade. You will see day after day that the stocks do the same thing. And if you just know what a breakout is, walk away. Unless you want to take that chance of riding at the direction, which is fun, you know. But if you want to make sure you put money in the bank day after day, this is what you do. Now, will it work on cheaper mid-cap or large-cap stocks that are cheaper? It does. It does work, but not as well. It doesn't work as well, guys, because it takes so much to move these mega large-cap stocks. They're consistently retracing. That's the beauty of it, right? So you want to find a bias, like you want to see like what's it supposed to do today generally. And there's a lot of ways to look at that. And you may or may not be right, of course, when you figure it all out. There's no guarantee. But if you follow the right things, generally the bias is going to reflect what your studies showed. Or when the trading starts to go, look at Apple back here. So Apple, when it started out way back here, I would have called a long bias. So anywhere in here, I would have mostly focused on taking trades going long, not short, because I would have thought if I was wrong. Now, this is if you're trading the hare, not the tortoise, because you've broken out. You're not all the way out, but when you pass that half ATR, that's considered a breakout of this type of consolidation strategy, right? So now you're trading like the hare, or a scalp and recoil. You want to have a long bias here, because if you got it wrong in here somewhere, you know, like this happened, you held it. You're like, okay, God, I'm at my max loss. Oh, I waited too long. That's a mistake. You shouldn't have waited too long. But I believe it's going to go back up. I held it, and then look what happened. It came back up. So again, I made a mistake. Oh no, I went long here. Oh no, oh, it came back up. And same thing. It just keeps doing it. Look at how it respected that fib. Stopped it here a whole bunch of times. These would have actually been pretty easy trades to call because of this fib level. Again, once you see it being respected within a few cents, remember that, and it can help you call your bias of which way to go, short or long. All this stuff, I haven't even got into the detailed indicators that actually make it much more simple to call the trades. This is just a big look at how this, you can count on this day after day after day. When I say count on it like 80% of the time, 90% of the time, I don't know. You do the math. You look at the back testing yourself. Don't take my word for it. You should learn how to back test. You should learn, to make sure that what you're hearing on YouTube actually comes to fruition on the charts. Let's move on. We'll go to AMD now. One of my favorite stocks to trade, right? So let's see what it looks like now. On the 1 minute, boy, do we have some consolidating action here, okay? But it broke out again. And this is sort of the volatility of this market, is that it's making big swings outside of its normal ATR. So you adapt the way you trade based on the more and more information I'm about to share with you. So again, this broke out immediately. This would have been great to trade at the open strategy, day trading volume 4, or whatever strategy you use for breakouts. Would have been some nice money here. But now you see how it rejected off the high a bunch of times. It told you, like, get out of the trade or go short. Now we don't have the fibs yet, so we're going to see what happens. But just on the ATR, which is the most respected level, right? Unless you're getting into finding the 150 and 200 moving averages. I think this is the 200 down here. Yeah. And it's right at the ATR low. Wow, that would ever so seriously be respected if it went down there. But it didn't. And that's way down at $179. Let's look at the numbers this moved. I mean, this is huge, right? But anyway, let's take the fibs on this, and then we're going to go a bit further and show you a bit more of how to make it so you really, almost guaranteed to get the trade, to get the right trade. So I'm on it. Did I just open a 2-day? Or is this a 10-day? No, this is a 2-day. No, this is a 10-day. Okay. So let's get this marked. So I'll go to the 50-cent mark. 260.50, right? So I'm looking to the right. That's where the price is. Close enough, 53. And then I'll go down here to 80. We want 87 even. There we go. So there's our first fibs. Let's see what that did on the 1 minute. It helped a little. Kind of gave you parameters if you were going in the wrong trade, but that's a huge gap. So not of much use, right? Not of much use for us. So let's go into too big to hold that trade. You got 100 shares, you're holding into $500 the wrong way maybe. So let's go for the 2-day, which is why the 2-day was invented to do this. We'll start again at the 187. Oh, I can't take that. Okay, so I got to be careful not to look at the day's action. I almost got tricked into that. So this would be the high, I believe. Yeah, this would be the high, and that would be the low. Okay, so let's see. I'm trying not to overcomplicate it, guys, but I don't want to cheat either. I mean, I don't want the things to be wrong data is a better word than cheat. Okay, so, oops, 87 again. So we'll edit this. We'll make this. How close are we to the? No, I have to keep that. It's too far away from the whole dollar, so I'm going to keep it where it is. We'll make it pink. Now let's see what we get on the 1 minute chart. Okay, things are looking a little better, but we don't have anything up here, which is a problem. So we have some support here, but no place else. So now let's do something that maybe will make this a tradable stock to do more of that hair kind of. We've haired up here. We've zoomed up onto a breakout, but then it became an RV or a tortoise again, right? Then it became a consolidation. So you could mark an intraday level right there, but now it's only going to come into play way over here. You could have marked it here, and it would have come into play a whole bunch of times. But there's another way to find that, right? And we go to the 5 minute 10-day again. and we mark what we call historical data. Now, when we look back on this, we would have the stock would have been opening here. So we would have been looking and marking levels over here, and I'll show you what those are about in a minute. But because we know that it's way up here, I'm only going to mark levels that would have come into play up there, which we would have continued to mark throughout. So let's zoom in here a little bit to just unfortunately, there's not a lot of, this isn't a good stock to do the historical data on either, because it's just moved so drastically down and it's backed up that we don't have enough data over here to do this. But what you would do is, without me looking where these are going to end up, is you would mark where the stock abruptly turned around. They call this historical data, right? Which is everything really, but you call this historical data, and you look for like tweezer moves. You know, it went up here and then it abruptly turned around. So you'd mark that level, kind of smooth it out a little bit, and then the fib's already down here, right? So you'd probably mark this level where it made a flat top. This is historical data level. You can see it respected it here, and then it flat topped here. You get to see this because this is already closed from previous days, so you're okay to mark this. Now I happen to know that I'm just not going to mark these. I would mark more, that we're out of the price range, and I probably would have marked this up here too, somewhere in here, smooth level above the fib. You know. Now let's just see what that did for us over here. So now we marked historical data, particularly tougher one today, not giving us a lot of data. We have one more trick to help us zoom in on these. Why is this not working? There we go. One more trick. And that's the half and whole dollars. People trade, remember, you're trading with the crowd, like the 90-year-old woman asked, like, how do you know? Because people make your historical data, your Fibonacci levels, your ATRs, they make them come true. It's the same with even and half dollars. People love to remember to trade at those levels, so they go in at those levels, right? Or go out at those levels. So keeping that, understanding that is so important. So this is just a breakdown of, the basic stuff that you're going to want to watch for. I can already see that the 209 level is really, really close to where it turned around. There's 209.10, 209.7. There is close enough. Look at that, guys. Whole dollar. So as you saw this coming up, you would have said to yourself, it's starting to go down. It went down off the whole dollar. I'm going to write it down to our only remaining historical level. Unless, of course, now let me do something different just so it's quicker. And you don't have to do this. You can draw all these lines. But there is a way to do this quicker. There is a code in here that does every single stock, no matter what you open, whole and half dollar indicator right here. Again, they put it out. The $1 Million Margin Club has the best indicators. Okay, so the only problem is that we're out of its price range. It only goes $10 up. But so what we'd have to do on this particular one is, no, not that. We go into the indicator. What we're at 208 now. So we go into this indicator and we put the price up to 208, and that's a little trick, because it only marks $10 from the open, and this was a breakout. So now we're going to put 280, and we're going to apply, and it's going to move these lines. Oh, wait a minute. I'm sorry, I didn't want 280. I wanted 208. Oops. See, it moved way up here. All right, let's do that again. All right, guys, you get to see the messiness of it going on here. But maybe that'll help you learn. Okay, so there we go. Now we apply. Now we're right in the middle of the whole and half dollars. Now, what a mess, right? You'd say to yourself, what a mess. But that's not how you're trading. You're trading with this big, wide opening. In fact, you're trading, really into something like that, and maybe even tighter. So now you've got your historical data, you got your Fibonacci's, you got your ATR, and you got whole and half dollar levels. Look at how that half dollar was respected time and time again. Right? And then the whole dollar. And that right there is what they call a tombstone pattern. It's an absolute rejection sign. So when that happened, you knew you had a double reason to get into that. Again, back to that candlestick pattern playbook. This basically said, this is going to turn around. Some people, it's almost what they call an abandoned baby, upside down rickshaw man, whatever you want to call it. It's a reversal sign right there because it spiked up there to that high price, but most of it ended up down here. So it's kind of showing you, no, it didn't like it up there. Oxygen too thin. So you hit the whole dollar mark, right? And it bunched up there. So after that first spike, as it dropped below that, more reason to get into a short right there. So you learn these little tricks about the consolidating RV turtle type stock. You get into the micro of it all, and you're able to call the future literally by the more data you have. And I'm going to stop with the amount of data I'm going to give you right now because I don't want to overcomplicate this. It's probably for you that if you're a beginner, it's probably already overcomplicated it. But I just wanted to get into the strategy that changed everything, the strategy that if you just focus on this one strategy, my belief is you will make money, you will make a living if you just knuckle down and look at the way the hare and the tortoise, the RV and the hare move. Look at how it happens day after day, trade after trade. Let's go to, say, Palantir. I have to zero out this before I switch. Oops. We'll look at a couple more, guys. So let me get this zeroed out. Say, okay, apply. Okay, and it's going to take it back to the open where it should be. And let's just see. Okay, so this is good. So this actually consolidated much more, Palantir. Look at how it stayed so close from when it opened. This is the opening from the pre-market. And look at how it stayed there. Look at how it respected that ATR, guys. We almost need to go no further to tell you this would have been a fantastic stock to trade and make money on based on that RV tortoise type strategy where you're using okay, it went further away as we zoomed out, but still hit it right there. But now you've got look at that whole dollar right there. And by the way, the 5s and the 10s, even more respected. That was a 135. Hit it again, right? Up here, what did it hit? The 137, turned around. Whole and half dollars. They're the next thing after ATR, Fibonacci, historical data, then whole and half dollars. ATR, Fibonacci, historical data, whole and half dollars. 4 key things to calling your trades time after time after time after time. You can get into now more like EMA crossovers, the MACD, or the buy-sell oscillator that works on relative strength index. There's all these other indicators you can get that verify how to do this. But I'm going to show you one that you would have to purchase because remember, I haven't been zooming in down here to tell you what happens on volume a lot. Let's just take this. So it rejected right at that. Remember, it might not be exactly, so you want to watch close. You'd assume if it's within 5 or 10 cents, it stopped. So jump back on when you can. Now, look at the volume. And if you have the right indicator, this is the volume down here. We haven't stressed this a lot because it's mostly for momentum trading, but it also comes into play for this. Look how it was verified by other people. Look how many from what was happening jumped on that trade. More and more, you don't really know till it breaks this level. Somewhere in here, it's out of control. It's not stopping. I'm getting on. And then you ride it from that distance, 134, say 80, up to, 25 cents up. You probably don't get out perfectly if you wanted to bail out. You get out here, so you get like 20 cents. Or you hold it because you've got a cushion and you get the next move. You hold it and you get the next move because you've got a cushion. And you hold it and you get or you could take a little bit of profit and hang on. Different ways to trade. But it all started with it rejected off it stopped going down off the 134.50 with the ATR down there like a solid wall, a floor you can't break through, concrete, really told you 2 ways like this is going to turn around. Then the volume verified it. And when it beat the opening of the last candle, man, take the trade. You got verification that it blew through the whole dollar. So you really could hold that and then ride it all the way up like I just showed you, or take your money and look for the next breakout off the $5 amount somewhere in here, a little bit above it. Because it's above the 9 moving average and the 20, so other things you can look at. What was it like when this share? See, this was higher too. Not a lot, not as much as the first breakout, but so the volume is important too. And I have a lot of videos about custom indicators that might really help you with this strategy, but you don't need them. You don't need to spend any money. You don't need to buy a course from me. You just need to get in, do a little bit of practicing, mark your own ATRs, mark your own whole and half dollars. Do it yourself. Trade on a simulator first. Look at the back testing. Pick out the stocks. What's happening? Is this happening? Is he right? Can I do this? Yes, you can. You can do this. Obey yourself. Obey your rules. Get out when it's going against you, because that's the human condition that we really fight against. That's the biggest problem with day traders. They make a plan. They make a day trading plan. They practice in a sim. And then when real life comes along with real money, they don't listen to themselves because they feel like the trade's too big to lose or whatever. They say to themselves, it's going to turn around. I know it is. The data says, the professor said, if this shows this, it's going to turn around. No. Maybe turn around. Everything's a maybe, but obviously you're stacking up the percentages in your favor. And that's what this whole strategy was developed for, this whole thing. Now I'll go into more detail in another video about how Strike and Recoil has kind of updated this a bit and for much more short term, and basically teaches you how to scalp more than, a little bit, kind of an in-between the tortoise and the hare, some other animal in there that gets you doing quicker trades on a little bit different, tighter data. When you learn how to scalp, you can then apply it to any kind of trading. That's what's so good about this. So it's just obeying your own rules, guys. But this strategy is amazing, and I highly recommend it. Now, a couple other things. How to find the perfect entry, large and mega caps only. Now, this is going to be covered in the book. If you don't own the book, I'm just going to go over it with you. So if you want to get all the information in the book and not pay for it, I'll tell you that little trick too. I mean, it's good to have it on your desk. But I'm talking about this one book because it kind of has a lot of the bones of what I just discussed, but I went beyond it a bit. And that trading has changed a little bit since 2022. But as far as like the Bible to have, yeah, I would have Day Trading Volume 1. It was a bestseller and still is for a reason. Well, let's go over this. We'll start with defining a perfect entry of a trade taken inside a known range. So we just talked about range. This is the best in a price level that has already been proven, okay? Our focus should be on mega and large cap stocks. We are not looking for momentum or catalyst, like in other words, a breakout on a particular stock, but rather trading a rotation and retracement. That's a great word, right? I'm not even sure that's in the book, but the rotation is the retracement. It's like they're using the word rotate. It's going to rotate around. It's just going to keep coming back. I mean, again, it might break out and not come back, but the great thing about the large and mega cap stocks is they most always come back. So you get to ride that action, right? Unless they're making a big move. So news from the White House could change that. If it happens to be a medical stock, some huge breakout drug, you just don't trade this strategy with that type of stuff. But you go to a different kind of momentum type or scalping strategy. But catalysts are not our friend. Option Fridays are not our friends. You want nothing. You just want the basic stuff. People are just going in and almost they're asleep when they're pressing their keys, when their brokers are just like, yeah, I'm moving that 20,000 shares. I'm doing this 5,000 shares. Or somebody else says, oh, I put in 100 to buy a market. And it's just like every day the same stuff, not expecting a big move, but they're thinking over time it's going to go their way. They're not waiting for it to go their way that day, not in the microcosm like I'm showing you how to trade. The safety of that is what is the huge thing about this strategy. So the first step is to find the right stock selection using scanners to find stocks with at least $25 billion market cap. Remember, I talked about that. That means they're not going to move very quickly. Trading at least 100,000 shares or more in 1 minute. Okay. That's a scalp and recoil strategy more. That focused, the scalp and recoil focused on this one thing a lot more, because getting it, particularly when I trade for like just a half hour, an hour, I need the stocks to be moving. I can't wait for the tortoise. I want the tortoise for the overall move. You know, I don't want it to do something crazy, but I need to kind of move those short 1 minute moves. Pretty good range, pretty good opportunity to get 10 cents, 20 cents with 50 shares, 100 shares, 200 shares. And then you make 10 or 15 trades before you know it, you have $100, $200, $500 a day. Suddenly you have $2,000, $4,000, $10,000 a month. It changes your life. You make a living. But do you want to sit in front of it, the screen all day? I do, but I do it with different sessions. But you might be limited time, and I'm making a video, and I kind of need to show that entertainment value. So I combined what I needed, and it turned out that it's a really viable strategy, almost by mistake. It was something to explain how to scalp by the strike and recoil strategy. I think I always call it the scalp and recoil, strike and recoil, where a snake strikes and you go the opposite direction. You're looking for the recoil. So if it goes up, you trade short. It goes down. If it goes short, you trade up. Because for a short period of time, which could be seconds, you get 5 cents, 10 cents on the recoil. And you get out. You get out real quick. $5, $10, $20. You know, that's strike and recoil. And in order for that to work that way, it has to be moving a lot of shares in a 1 minute period. And how I determine that, we'll come back to this, is I look right here on either the ask or the bid, either will work, and I make note of a certain number, like 65 cents, right? And then I kind of count in my head, is that going to move 10 to 15 cents in 10 to 15 seconds? So if I see it move that fast, then I know it has affording me lots of opportunities to make 10 to 15 cents within 1 minute, and probably 2 or 3 times within 1 minute. So I can quick do that recoil, 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 or recoil, 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 whichever way it's going after it strikes. So a situation like this, when it, even as it was going up, it didn't just go up. It went up and went down, went up and went down, it went up and went down. Strike and recoil, strike and recoil. So all the way up, I could have gotten, taken a profit and gotten right back in, all the way up here. So even in a 1 minute candle, that's what happens, guys. So anyway, I developed a scanner that finds those stocks. You can get it at the $1 Million Market Cap. I think it's like $4. You might be able to find it free on my channel. I think I have it on some of the videos, but it might be worth you just to spend $4. And I have those. I think that they're here. Yeah, let me open this up here. So, professors. Yeah, I think this is one right here. Well, let's just go to one here. So this is 50K. This actually would be a good one here. So let's see what it shows. So all these stocks would have come up on the scanner. To trade. So they're big enough cap, and you can see here on the 1 minute. Yeah, this is the 1 day, 1 minute, what its volume. This is over 50,000. So it shows what they were. But of course, once again, and I hate to keep pushing it like that, but when you're shopping for your stocks to trade, you often will look over here on your day chart, right? And this would not have spoken to a good stock to trade, because you're seeing it's making a big move down and you're thinking, God, it's just going to repeat itself. I don't think I'm going to be able to trade this. But one of the things you do to see about if you're getting that volatility, you can sit and figure it out. But if you're going through stocks really quickly, I'm pretty sure this is free if you go over to the $1 Million Margin Club. Still, I think they still have it for free. I gotta find it here, guys. Hang on a second. Okay, I found it and I added it over here. This is telling you what the average can. So quickly on the day chart, you can make sure. Look at the volume in 1 minute there. This average over a 10 days, 160,000 per 1 minute candle, 240,000 just in the last day. So it's actually gone up. And where I found that was, well, I'm sorry. You look for it at the well, yeah, I guess I'm not sure of the name, so let me go back. Yeah, here it is. 1 minute average, 1 to 10 day. There's multiple ones here, but they'll have it over there. I think it's for free over there still, but if not, you might want to get it because you can go through stocks quickly and just see, like I'll start clicking on them. So NVIDIA, let's look down there for NVIDIA. Look at the volume for NVIDIA down here. That's crazy. Then we go to Tesla. That's going to be crazy. Yep. That's not as much actually as NVIDIA. Look at that. Google, barely over the 100,000 on a 10-day average. Apple. So you can quickly just see like, hey, are these giving me the volatility? AMD is. There's Palantir back again. Hood didn't quite make it over the 10-day, but it's stronger right now. Yeah, there's a lot of news on crypto right now. Amazon, MU is just making it. That's a volatile stock, but fun to trade. So all of these that came up on the scanner is a reason why, because they're all tradable stocks. So that's specifically for Scalp and Recoil or for what we were just talking about. This is a good thing to have, you can figure it out on your own or just get one. So 100,000 shares per minute will be trading on a 1 minute. So liquidity has to be present at that speed after the scanner finds the stock. We need to confirm it manually. This means checking the stock moves at least 10 cents up or down within 15 seconds, which I just showed you a minute ago. The second step, context, we need a stock trading inside the ATR or half ATR where rotation is likely. Again, back and forth is likely. Large and mega caps tend to retrace and oscillate within a range rather than trend. This can create forgiveness in our interest. By the way, this is from a book. I'm reciting what I've already learned, okay? The third step is historical price memory. First, we need to use professional strategy and map Fibonacci levels using a 5-minute 10-day chart and a 5-minute 2-day charts. We went over that. These levels must be relevant intraday, meaning price activity intraday within them during the current session. So if your fibs are like way out beyond, probably look for another stock. I mean, there might be enough data to do it, but usually that means a big move has happened straight down or straight up, and you can't connect the fibs anymore. They're not helping you. You're not getting good historical data because history was broken. History has changed, basically. We need to also mark prior stop and reverse areas where price previously reversed direction and repeatedly reacted with sudden consolidation. These levels, or repeatedly react, these levels are often smooth into whole and half dollar prices. So you kind of saw me do that, right? So I think I covered everything here. The quest for perfection, for the perfect entry itself, comes from confluence, not a single indicator. Looking for historical levels aligning with Fibonacci's, whole and half dollars, your VWAP, which you never put up, but moving averages, ATR boundaries, volume behavior, level 2 activity, and recognizable patterns. We kind of covered most of that. The more elements that point to the same price, the higher the probability of rotation. The perfect entry is not about perfect timing. It's about entering with price memory, liquidity, and structure overlap. I haven't read this in a while. This is really good. I got to remember to say it this way. Allowing small, repeatable profits with controlled risk. So it's not about you being so fast, right? It's about the price memory and the structure overlap. Seeing those line up, you have a while to take the trade usually. So especially if you antiquate this to a 5-minute, which you can do it. I feel like a lot of opportunity is missed when you do a 5-minute. That's just the way I trade. But people disagree with me in a very argumentative way on many occasions. So what do I know? Right? What do I know, guys? So anyway, yeah, that's in a nutshell, that's really should give you a leg up on how to just be way ahead of other traders that are still, if they haven't seen this video or haven't read those books, or you're way ahead and you get to see for yourself, not just listen to what I'm saying. I tried to explain it so you could literally go into your own charts and see, hey, is what the professor's saying makes sense? Yeah, there's a reason I teach it. There's a reason I trade it. It makes sense day after day. And you didn't have to pay a dime for the information, right? You don't have to pay a dime to come trade with me, So, I do okay trading. I don't need to get your few cents, to sell a course or whatever it might be. But yeah, check out the data yourself and trust yourself. Learn so you can trust yourself, because like Mark Douglas says, trading in the zone, man, it's all about your confidence level. I have a link to that book too. I would read that book. Tom Hogarth's Best Loser Wins. I would read that book. I have a link to it. These links help me out a little bit, so that's where I get help if you want to help me. But yeah, these in the $1 Million Margin Club books, I'd buy every one. Well, not all their log books, unless they specifically relate to you, but they're 4 main books, So there's 6 books that are linked that, besides helping me out, which would be a nice thing to do, you need those books. Those books will help you. So, and then watch the archives, guys. There's so many videos that are helpful on this channel. There's over 500 and something. I get, marketed to do stuff all the time that I'm not taking advantage of all these people that want me to sell products and do all these other things, and I don't. And you guys get the benefit of less noise. If you can just figure out this stuff, by watching these and just try it yourself, that's the key. Hey guys, you made it all the way to the end of this teaching session. I hope it was enjoyable. Don't forget to watch any of the videos that are linked to this that might help you out with indicators or other information you need. And don't forget to get your free script over at the $1 Million Margin Club. I just heard that it is still available for free. And check out their channel because they have a lot of cool stuff too. Okay, guys, thanks for watching, and go green out there and look for the next video coming up.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey, hello everyone. This is the professor with Day Trading for Success. So I wanted to put out the new 2026 Thinkorswim layout that's being used by most of the prop firms that trade with Thinkorswim, with all the custom coded indicators on them to help them trade, to help people that are being funded to help them trade and learn faster. So we're going to go over every one of these indicators pretty quick. Now I will be using pretty much everything here except the level 2 absorbing new indicator here when I trade live in 2026. So if you want to catch those trades, make sure you subscribe and then put your alert on, and then you can come in there's no charge to come in and trade live with me. This video is going to go on a bunch of the videos that are sort of the live stream, the ones that run all the time live stream to kind of promote when I'm not actually trading, so it'll just be going on live from time to time. So watch what we have on here. There's different things that should help you prepare to hopefully become a successful day trader. That is the goal of this channel, to help you make $100 a day, $200 a day, $500 a day, of course, or much more by usually scalping is what we do. So let me go over what this has on it real quick. And then what I'm going to do is I'm actually going to build this for you from scratch. For those of you who are interested on what it takes to build a layout from scratch, we're going to go ahead and do that today too. So stick around for that. But let's go over what we have here. So if you open up this chart, this 1 minute chart, on here we have the VWAP. Let me just, these are out of order. Let me just get these on here. Yeah, so you've got the, I usually like to put these above I move the VWAP down here. So you've got the 9 moving average, the 20 moving average, exponential, the VWAP. We have the market magnet. We have the ATR multiple range set up. The MACD surge, these have alerts as well. The multiple time alignment, this says no labels because I put the labels over here on this 5 minute. The whole and half dollar indicator, the MMC candle tracker, that's this one up here, and then the level 2 breakout detector, and then the Scalp Pro meter. So I think I got them all there. These now there's a lot of other really good indicators, but this is more along the starting ones for people in the prop firms so that they don't have to figure out which way the stock's going to go. It's going to literally tell them which way the stock's going to go. And we'll talk about that a little bit here so you understand how these work. So that's what's on this chart. The news will be up always to make sure if there's a catalyst of any kind that it's the Thinkorswim news, although I recommend you get Benzinga or some other, news, agency. So you're not just having one. So let me open up the day chart down here. So this has the, this is a custom scripted one to help you find the right stocks for scalping. This is pretty important. You can actually get this for free over at the $1 Million Margin Club. So you should go over there and get it for free while it's still for free. But it's basically you're looking for a stock when we trade the scalp and recoil, the strike and recoil strategy, which I am trading for live for everybody. We really want in 1 minute the volume to move over 100,000. And that's a 10-day average of it. And that's 1 day, the day that it moved. Now, right now, the market's closed, but I'm just showing you. Then you want to have the ATR in here. This is not a custom indicator. And then, of course, this is your previous day ATR. This is the half ATR, and then that's the whole ATR. Now, this is, why would a half be there? This is for the RV strategy, that Day Trading Volume 1 strategy book that everybody trades large and mega caps with that makes so much money. This is no joke. The half level, you're going to want to mark that because why would you have these levels? Well, you want to see your range, but you also, and it's, if you zoom in right here, you can just see here, it's showing you them right here. Okay, the red's kind of blocked there, but on the RV, this is the RV strategy, which is the half from Day Trading Volume 1. And that's the actual true, the entire ATR. So a lot of people only go by that. And that's the entire amount from the close. Okay, so it might be a reason why the RV strategy is based on it only moving half in one direction to traverse the entire thing, not all in one direction. So really they're both on here and they're on the 1 minute chart as well. So if you go down here, you can see them down here. And then there should be so that's the full ATR. That's the half ATR low or the RV strategy low. I recommend getting Day Trading Volume 1 if you don't have any idea what I'm talking about. I'll have a link to that book. I have a link to a whole bunch of books and that I believe in from Mark Douglas and Tom Hogarth and the $1 Million Margin Club. You might want to check them out. We're not going to go. This isn't a book video though. So, so that's basically, no, that's the day chart. I was making sure you saw what was on the day chart. And then over here is your active trader. Now, often when I'm doing like the RV strategy, I'm just doing market and then reverse. But for the strike and recoil, I mostly do buy the bid, sell the ask when I'm going long, and then the opposite when I'm going short. I have added the reverse button into this still. Because I found that we were trading it, that I was doing that sometime, even with ask and bid, so even trading this way. So you won't see me trade market too much on the strike and recoil strategy. All right, you will see me look at the level 2 a lot on the mega mega cap and large cap, mostly to check how much this price moves is it moving? I'll count 15 in my head. Has it moved 10 to 15 cents in 15 seconds? Because if it isn't, it's really going too slow for that scalp and recoil. This is a really good, obviously people use it to see the amount of orders coming up the pike, but the problem is that we're only seeing about 40% of the actual orders. And to move a large cap or a mega cap stock, this would have to be like, 5 digits here, to make it really spoof it or try to control it. So unfortunately, you don't see the mega drops, the big algorithm drops. They're all hidden, and then all of a sudden the price action will boom, but you won't see it. And they don't. I'm not even going to go into the whole thing about how they're supposed to report and all that stuff, because it's just not really true. Supposed to and doing are two different things. Down here is a 15-minute chart. Now this has the market pulse on it. What is that? This basically tells you what direction on a 15-minute chart the QQQ, the SPY, the TLT, the UVXY are going, which kind of gives you the breadth of the market all in one. So I have that on a 15-minute chart, and I also have it on a 5-minute chart so you can see it faster range. This is just darked out because the market's closed, but normally all 4 would be there. And then over here, I didn't go into, this is the multi-chart alignment. All these, you see 5-minute, the M stands for minute, 15-minute, 30-minute, and then somewhere on here you'll see like an hour, or there's 15-minute again. Did I pass the hour? Yeah, there's the 1 hour. And then there's a 4 hour somewhere, but it'll be hard to find it because this is a 1-minute chart. But anyway, why would these be up here? I'm sorry, I'm a math teacher, so I always talk like there's a classroom in front of me. Hey, why would these be up here? Can you please answer? It's very quiet in the audience today. Basically, you want to know when this price action is getting to that 1 hour candle, right? You want to know how many people are deciding on the 1 hour candle, 4 hour, 30-minute, 15-minute, and 5-minute. More people take their trades on the larger time increments. So you're going to want to know when that is. So you can sit here when you can lose perspective on a 1-minute chart. You can get really caught up in the micro. And this kind of makes you step back and look like, particularly on a 5-minute, like what's happening on a 5-minute chart, because that's all they're seeing. They're not seeing this little action in between. They're just seeing what's happening on their 5-minute chart over here. So, that's why it's so important to really know when it's about to come, because you want to trade with the crowd. You want to trade when the multi-chart alignment, as the candlesticks are coming over. You want to know when they're all about to see something, because a lot of trades might happen right at that moment and more happen at the larger time increments. So again, this is why this information is what a lot of traders don't know anything about, and why they're just really rolling the dice. The more information you have like this, the more you can absolutely predict future price action, because that's all you don't get anything that shows you what's going to happen in the future. You have to predict it. So you need the tools to predict it, right? Like this risk range oscillator up here. It's taking the last 9 candles. It's showing you how much they moved in that direction, smoothed out, whether they close green or red, and then it gives you an average target to go for. So in this case, in 1 minute, you don't have a very big. Well, right now we're on closed market. That's why it's so low like that. But normally Tesla would be way higher. But yeah, it'll show you the range to go for, so that once you get into it, you're just get out, hop out when you get near that range. Just don't get greedy, and then go for the next trade. That's scalping. That's not day trading. Day trading, you stick in for a bigger move. Scalping, you're in for like in 1 minute, 2 minute, 30 seconds, 15 seconds. So this is really helpful for scalpers, and that's what the prop firm people are. So that's what this is designed for. Then down here is the Scalp Pro meter. This is giving you overall volume for the day. This is the last candle. This is the current. If the current candle, again, we're in a closed market. That's why it's so low for Tesla. If the current candle turns blue, you hear a little ding. That means it's gone past the last candle, which means there is a move in that direction, whatever direction the candle's moving. If it was like, if you saw that thing ding and it was going up, then you'd know, like, hey, a lot of people are starting to go long. So you jump on, I antiquate it to like you're on a swell waiting for the wave to crest on your surfboard. and then you see that, you hear that ding, you see that more people are there, you see the wave coming, and then you jump on it and you ride it for a short period of time, perhaps the length of the risk oscillator, or you look at other indicators. You get better and better at seeing what's about to happen, and then you get off and you take your trade. And then this is telling you inside, like, what is the percentage? Like right now at the pre-market, everything was 100% selling, and this is a little meter showing you the strength of that selling. And if that weren't enough, inside the candlestick, the red represents the sellers, the green represents the buyers. You see this moving in real time on the 1 minute when it's an open market. So watch some of the other videos, you can see. And you can literally predict. And you see when, like, the buyers are losing strength over here. And it's like, hey, sellers are going to win. And that means that stock's going straight down at this, well, like right in this area here. These are aligning up with it, So this is giving you a direction, showing you a direction to go. This is showing you the strength of that direction with this meter. This is showing you if it's stronger or weaker than the candle before. All this stuff is designed to help traders not just roll the dice, but literally know what direction the price is going to go. After you get used to reading it, it gets easier and easier to say, I know I can go this way 10 cents. I know I can go that way 20 cents. Drop in 100 shares, drop in 1,000 shares, whatever it might be. And you make that quick money and you get out, and then you do 30, 40, 100 trades, and you're making, a lot of money, small amounts from $50 to $100 to $500 to $5,000 a day or in a half hour. You'll see me do it in a half hour, but not with the strike and recoil strategy. You're usually going to see me trade 50 to 100 shares and try to get $100, $200, $300 a day, make a living day trading simply and easily, and get in and out and be done in a half hour to 45 minutes, and then go on about your life or your job or whatever else you might have. Get your car payment paid for, your mortgage payment paid for, and quit that second job or whatever you need to do until you get confident enough to trade in a larger share size anyway. So then down here you have the trend, which is really an important indicator as well, ADX trend. So that one would be one that you'd want to see if you're actually in a trend. Now, if you want to know all about these, we'll talk about this too. If you want to know all about these indicators more, there's a series about these that's put out by the $1 Million Margin Club called the Toolbox series. God, I couldn't remember for a minute. So over there, the $1 Million Margin Club YouTube channel, there's a Toolbox series that gives you details. It gives you even the mathematical formula about how they're all designed in codes and everything. So it's worth watching those if you want to get better at trading and get these indicators on your in your trading toolbox yourself. So this is interesting. This is a level 2, really the only level 2 indicator I've ever seen. And it's important to note when you start to use this that you're not actually seeing anything but level 1 up here. But because it can't Thinkorswim, there's not a way for it to transfer this to a chart to give you the readings. So the best way is to read what's coming up. But what it does do is, when the shares get large here and they're trying to sell off real quick, because it's not just one trade, then they adequate it to it's winding up. It's like, say there's 5,000 shares, then there's 4,000, then there's 3,000, then there's 2,000, and you see the volume going up, and then suddenly you know that they're about to all sell or buy, be bought up, and then suddenly the stock's price is going to pop, right? And that's really the secret of reading level 2. Usually you do it just by watching them, what's about to happen, making note of price, where you might slow down a little bit. 483.31. This is a little small for a large cap. It'll still just flip instantly, right? But I mean, you'll see many that are much larger than that. So this will tell you when that 5,000, 4,000, 3,000, this little light will light up and say it's absorbing, because your price action isn't moving. You're seeing all this volume, but this price isn't moving. When you're looking at the price on the chart or anywhere else, on your market maker, it's just not moving. It's just stalling, but volume's way up. Why is that? Because they're all being bought up or sold off, so you're waiting for it to pop. So this is going to signal you something big's about to happen because volume's high, but the price isn't moving. And it's going to actually show you which way it's likely to go by coloring it green or red. So again, when you get used to, particularly for new traders, this can be really, really handy. Knowing that. Now with large cap and mega cap, it's not as useful as say a small cap, a mid cap, small cap. That's going to come into play more often because those are really thickly traded, and this will happen a lot. On a large cap, it'll help you from time to time, but you're not going to see me have this up. I just wanted to show it to you on the Strike and Recoil. You're not going to have me. You won't see this up. You see me up do this when I do more momentum trading on Thinkorswim. Sort of an oxymoron because if I were to do momentum trading, it probably wouldn't be on this platform, meaning buy high, sell higher, keep buying high, buy when you have a catalyst and the stock's taken off. A lot of platforms aren't as fast as others for that type of price action. I mean, you can do it. A lot of people will use the ladder here to do it, real quick, and they get really good at it and they keep it up on their whole screen. I don't trade that way, but I will show you this when I build it, how you can do this in a few minutes. If you want to stick around for the next clip here, I'll build a whole layout for you. And then down here, what you can expect to get and what I built, you've got a 5-minute, this is a 5-minute 2-day right here, okay? And that's to help set my Fibonacci levels. Now I have the levels locked up here on every chart. You can see when I opened this, it wasn't locked. Yeah, so these aren't locked, but you can see that there's our Fibonacci retracement. So if you wanted to, market Fibonacci level, it's always left to right. You left click and then drag, and you're usually looking for the high to low, then you left click again. And then these are creating channels or support and resistance levels. Why is it giving me that weird message? Hang on a second. Clear drawing set. Okay, yeah, I guess that's what I want to do. I didn't think I had any other drawings on there, so it was scaring me. And then this is that was a 30-minute. That's a 5-minute 2-day. Was that the 30-minute? Sorry, guys. That was a 30-minute. And I do a lot of the pre-market layout. I have that chart there because on the Day Trading Volume 4, which is a book that shows beginners how to trade the open, it lists the 4 breakouts that are most commonly used. And one of them is a 30-minute breakout on the pre-market. And I find that to be my favorite, most respected level. So if I'm going to trade the open, often I will mark that level. And if you go on and get the companion book to that, it has the Holy Grail where it takes all of the open strategies, and then throughout the day it creates the channels or the levels to really trade those breakout levels throughout the day. A lot of thought went in these. I mean, the writers of these books and all